controlling the whole thing. They are crazy, and we're not going to put it up. Yeah, I want to be reimbursed because we're protecting a very rich portion of the world. We're spending money, and so what we've done is we are going to be reimbursed for protection.
Well, you also have to know that President Donald Trump will be speaking to the nation on Thursday evening at 9 p.m. Eastern Time. So watch out for more highlights coming through on this particular topic. Back in India also, you had, we'll get to the CPI data in just a bit, but the US market continues to be one that we're tracking as well. Now, if you look at the data, yesterday was a session which was under pressure. So the Dow Jones was down 2.2%, S&P 500 down 0.7%. But the Nasdaq is where you saw much of the beating, down 1.5% as well. The futures currently also are an interesting factor that we continue to monitor. All of those indices largely continuing to be a minuscule move, both on the upside and the downside across indices at this point of time. But crude continues to be an important parameter. Yesterday night, you had that 4% up move on both those indexes. Brent crude now up another 1%, so at $84 a barrel. The WTI hovering around that $79 a barrel at this point of time. And that's visible on the Asian markets as well. So Kospi, which had a horrific session yesterday as well, one of downtake, has continued to be under pressure. Nikkei, on the other hand, as well as the other indexes also, if you look at it, largely continuing to be flat at this point of time, very minuscule moves as well. But the CPI inflation in India rose to 4.38 versus 3.93 in the month of May. And that was an important data point that came through for the Indian markets as well in the evening. You also had the CPI inflation rise 4.38 versus estimates of 4.2%. So all of those important factors will be continuing to be in focus as well. But let's go across to Sharad now, who's taking a stock of the derivatives space. Sharad, of course, a important day, the expiry today. What are you picking up?
Well, that's right, but it's a kind of a sad opening we can expect. But yesterday there was a good recovery, Puneet. But today it might not look like we'll have a good recovery because the Asian markets are in the red. And you see the GIFT Nifty numbers, which is looking, we're seeing a good significant gap down opening. And it's very important to see whether the recovery happens from the IT or the private banking names. Nifty Bank also is expected to follow the same suit. And FIs, which I was talking about in the cash market, again, they have started selling. And this is a big amount, 3,062 odd crore rupees. So that's a little bit of concern definitely coming in. FI shorts still near that highest level in the series, and we are almost in the middle of it. Almost you could say 90%. Yesterday it was 89%. So right now also the shorts in the system are pretty high. Yesterday there was a good recovery at play. We ended the day almost at the flattish levels after the gap down opening. But let's just look at the open interest, stocks, which would be in focus, especially the gyrations coming in this 24,000 and this 24,200 mark. This is where majority of the congestion is happening. But today it will be pretty much on the negative side, at least in the opening. Let's look at the stock specific moves. One side, of course, is the IT space that's doing well. Oracle, that's where the long build-up is happening. You can have a look at that. Consumption names, there are a churn happening across the counters. Let's look at the open interest losers also to give you a perspective. Largely jewelry stocks have been on a tear. AMC stocks, keep an idea. All these stocks might be buzzing, including SBI, as SBI Fund Management's IPO opens today. So stock-specific moves will be there. And of course, Puneet, the IT and the realty pack, the technical strength is good. But apart from that, we're going to see a big sell-off.
Well, Gautam, we'll come back to you, Sharad, for the important earnings as well. But one of the ones that were important to track was HCL Tech as well. Q1 FY27. And results largely in line with the beaten down estimates that we were working with. So margins, at 16.9%. The constant currency revenue was expected to be down. It came in at minus 0.5%. And the advanced AI revenues, and that's something that we're tracking for all IT companies this quarter, at $171 million, up 10.6% on a quarter-on-quarter basis. Now, the company has actually surprisingly decided to invest 3,500 crores in the data center business that has the potential to scale to 50 megawatts. Now, it's something that we saw in the announcements by TCS. HCL Tech has followed through in that steps. But the important factor also was the total contract value, which we call as deal wins, was also at a very strong $2.4 billion for the quarter versus 1.93 in Q4. Now, you had a record-breaking Q1. Comparison is slightly more pale because Q4 was a weaker number, but at $2.4 billion does bake in some good numbers as well. Overall, the revenue also in terms of rupee terms just up 1.75%. EBIT was also up 3.75%, and the net profit also similarly up 3% as well. When you look at the IT as well as the business services, largely remaining flat. ER&D fell the most, down 3.7%. And the company has mentioned that they are continuing to see some impact of the West Asia conflict. Telecom is starting to seeing reduction in discretionary spending, and that's why Q4 was impacted for HCL Tech as well, while there are some challenges that are visible in the manufacturing space as we look at the other key segments that the company looking at. Also, while there was a divided street opinion on the guidance for the company, they have gone ahead and retained the same at 1 to 4% for the consolidated guidance. Service revenue also hasn't seen any cuts, 1.5 to 4.5% for FY27, with margins expected at 17.5 to 18.5% as well. But my colleague Risha Bhatnagar actually asked C. Vijay Kumar, who's the MD and CEO of HCL Tech, about the discretionary telecom spending reduction, as well as what are some of the key trends and whether the budget cuts in manufacturing and retail continued in Q1. Let's listen in to what the management had to say.
Telecom discretionary spending was the weakness was expected throughout the calendar year. Have spending trends improved in the first quarter? What have you seen on that front? Secondly, did the manufacturing and retail clients, those budget cuts, did they continue in Q1? Do you have any visibility on that? Also, are procurement delays and slower decision making, are they still impacting deal closures?
Yeah, telecom, as we had called out last time, there is certainly a reduction in the discretionary spending, and that continues. We don't see the situation improved in the last 3 months. And retail and consumer business, I think our retail and consumer business is doing very well. It's grown 10% year on year. This quarter, we've grown 5%. On the back of, we had announced a very large win two quarters ago with a large global retail apparel company, and that client is ramped up fully. We've executed that well, and that's causing the good growth in revenue. Manufacturing has some challenges due to different reasons, and some like automotive and all are under stress. So that situation I don't think has changed, even though we won some good engineering services opportunities in the automotive sector as well.
The other big numbers that we're tracking this morning is, of course, ICICI Pro AMC. Now, Sharad, what were some of the key highlights from the results? What are you picking up?
Well, largely it's a mixed set to negative set of numbers coming in, but I'd like to point out the treasury gains which happened, Puneeta. That was something which actually aided the numbers, and optically, if you're looking at the PAT numbers, of course, we have taken the consolidated ones, you will be seeing a 26% growth coming in. But remember, there's a treasury gains impact also. The total income is up 20%, and the AUM growth, however, the total AUM, if you talk about it, this is the quarterly average AUM, that's just sequentially up 1.1% at around 11.2 lakh crore rupees. But what are the brokerages suggesting? Of course, there is a mixed trends coming in. Bernstein has stated that the operating growth was coming in because of treasury gains, and other key pointers also from this report include that the markets overall showed a good MF AUM growth, especially in the equity segment, and overall the gains came in. But if you look at the other brokings houses, what's their view coming in? They have cut the target price, Morgan Stanley, and this is of course on the PAT impact which is happening in, and that was the expectations what was there, that was slightly below, and the employee cost, that element was on the higher side. That's why a little bit of pressure was coming in on the yields as well. But nevertheless, the industry as well as the company, the MF inflows have been resilient, and they have given the market recovery. Another broking report has come in, and Jefferies, and they have stated that the higher expenses and lower alternate yield, that's where the earnings miss has happened, and a concern little bit coming in on this aspect. So overall, for the brokerages, the entire picture is slightly negative to mixed as of now. So we can you can see a little bit of pressure, at least in the early trade.
Well, thanks so much for that, Sharad. But SBI, of course, continues to be another one that we'll just track in just a bit.
Right.
But Biocon is yet again in focus on the back of a big block deal update. Varsha is joining us to tell us more. Varsha, over to you.
Well, it's a clean out trade by Mylan, as Mylan is set to fully exit Biocon via block deal. Now will sell 9.2 crore shares in the transaction. Stake as of June 2026 for Mylan stand at around 5.64%, which now they are going to completely exit from. Offer price is set at almost 378.5 per share, which is at 8% discount to the current market price. And the total block deal, if you see, stand at around 3,500 crore. Now, why is Mylan selling this? Because if you see, Mylan received this shares from Biocon as a part of Biocon Biologics stake buyback deal, and Mylan was never a long-term strategic shareholder in Biocon, and the stake only represented the deal consideration rather than the fresh investment, and hence Mylan is now monetizing that holding and exiting completely.
Well, thanks so much for that, Varsha. So, largely clean out trade. Some pressure might be on the stock today, but overall, key negative overhang will largely be done as well in terms of the shareholding. But we spoke about, ICICI Pro AMC, one of its biggest peer, SBI Funds Management's IPO is set to open today as well. And Sharad, it's a big one. What are you picking up?
Yes, it's the biggest IPO, dollar IPO, $1 billion IPO I would like to talk about in 2026. It's the largest, you could say, a fund house in terms of AUM. But let's look at the key details, what we are actually talking about. And let's get in the important price band, which is very much important. That's around 545 to 574. The face value comes in at 1 rupees per share. The IPO size is 11,690 crore rupees. And of course, IPO is entirely OFS with that 10% stake coming in. But remember, there is a caveat. There was a pre-IPO round also. It was just done. The market capitalization stands at 1.17 lakh crore rupees. The retail quota, that is at around 35% of the total IPO size. Also looking at the institutional raise, very strong, update coming in from there. 129 anchor investors, they raised 2,663, and the pre-IPO, which was done, 1,880 crore was raised. If you look at it, these are the dates, which is very much important. Do write it or take a screenshot of this. July 14th it opens, which is today, closes on July 16th. Allotment date likely on July 18th. Around July 2021, you can see the listing as well. These are the important dates. And who are the sellers? Of course, SBI Funds and Amundi, both of them are promoters. This is the numbers which they'll be selling. And post that, this will be the IPO stake. Almost 1.4% stake they have sold in the pre-IPO round. That's SBI. Shareholder quota for the SBI investors as an RHP date. That's what, if you have that shares, then you qualify for certain privileges as well. Also, the shares reserved are roughly 1.31 crore shares. That's around 6.4 of the total IPO issue size. This, of course, includes the pre-IPO number I'm talking about. The maximum allowed bid is rupees 2 lakh. And remember, if you're an SBI shareholder, this bidding can go in shareholder quota as well as bid of any retail. So that's the flexibility you get. And one can also bid in the employee quota. And if you're bidding in that quota, you get an additional discount of 54 rupees per share. So the street is quite excited about SBI Fund Management's IPO, which is opening today.
Got that, Vyushad, and thanks so much for that. So important, very important and big IPO as well, which will be opening today of SBI Funds. Watch out for the investor interest as well at this point of time. But, we spoke about the key earnings, key IPOs that is opening today as well. Mahima joining in to give us some perspective of which are some of the key stocks to watch out for in trade today. Mahima, what are the ones that are on your list today?
So I'll start with, all your AMC stocks as well as SBI, because we just talked about the SBI IPO. They'll be in focus on the back of the IPO opening. You also have ONGC, Oil India, etc. That could see some positive reaction on the back of rising crude prices. And this is on account of, Trump imposing a blockade. And this is a reimposement with a 20% fee. PDS is the other one that could see an upside today on the back of a multi-year sourcing partnership with French retailer. BR is the other one which is, expected to be in green on the back of an order win, which is for around 572 odd crore. You also have Welspun Enterprises, where they've signed an agreement for around 7,300 odd crore for Pune Shirur highway project. So most certainly a positive one. And Carraro India, where there has been a rating upgrade by India Ratings. earnings. Now, Grasim is the other one where they've gone ahead and announced acquiring of Solenergy Power for around $1.8 billion. I think brokerages are penciling in the fact that the funding of this has not been declared, and that's why it could near-term weigh on the stock if there is debt being raised for this one. Paint, aviation, tire, etc. All of these counters will be under pressure because of rising Brent crude prices. And this is, of course, because it's across that $85 per barrel mark. Zydus Life Sciences will be in focus because Delhi High Court has temporarily restrained supply of a particular cancer drug. And lastly, Alembic Pharmaceuticals will also be in focus because US FDA has issued a warning letter to them. So these are some of the names that could see some action on the back of news flow post-market hours yesterday.
Well, thanks so much for that, Mahima. And we spoke about Grasim as a very important stock to watch out for in today because the Aditya Birla Group, of course, and it's one of its subsidiaries, has announced one of the biggest deals in India's renewable energy sector, agreeing to acquire Shell's India renewable business, that's Spring Energy, in a transaction valued at nearly $1.8 billion. Let's go across to my colleague Nisha Podar for more details on this transaction.
It's a large acquisition which has been done by Aditya Birla Group, and the focus is very clear. The strategy is very clear. Like many other large business houses, Aditya Birla Group is also focusing on the new energy in the renewable energy space, and therefore a $1.8 billion acquisition of Shell's India's renewable energy portfolio, Spring Energy, which, remember, brings with itself 5 gigawatts of capacity across different sectors of renewable, that is solar, wind, as well as the hybrid assets in the renewable energy space. Now, remember that with the already existing portfolio, now 9.3 gigawatts is the total capacity, which puts Aditya Birla Group amongst the top renewable energy producers in the country. Also giving you a breakup out of the 5 gigawatts that has been really bought, it's 1.7 gigawatts, which is still under construction. When we take a look at such a large funding to be done, well, Aditya Birla Group's renewable energy arm is a subsidiary of Grasim, the listed entity. So it will be a combination of debt and equity between Grasim, which will be funding it for the group, and on the other hand, GIP, an entity of BlackRock. But with this large acquisition, two important aspects to note here for Aditya Birla Group. The strategy is very clear that renewable energy is a space where they want to grow their business. And second, this particular large acquisition puts them higher up in the pecking order and also closer to their earlier target that was given of 20 gigawatts of renewable energy capacity in the country in the next few years.
Well, thanks so much for that, Nisha. So definitely one stock on Grasim will continue to be in focus. Morgan Stanley feels this is an acquisition that will put the company on India's, and as a timely bet essentially, but Citi is looking at more or clarity on the funding. So watch out for Grasim as well. But overall, that is a wrap on this edition of Markets Today. Thanks so much for watching. India Market Open comes up next.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26th July, only on NDTV. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning. You're watching India Market Open from the NDTV Profit Suzlon studio, and it just seems to be getting worse and worse as far as the US-Iran situation is concerned. New one
that we'll take a 20% tax. Or it's a service charge, or whatever the term is that Donald Trump has used.
Conveyance charge, I think it is.
To allow ships to pass through the Strait of Hormuz. Iran comes back and says, that's a great idea. Whoever controls the strait should take a charge, but we won't be as high as 20%. I mean, of course, crude prices are going to shoot up. Night skies across a lot of countries in the Gulf region lighting up as it's getting worse and worse.
Yeah, I mean, it seems it's become a deja vu in terms of when the war started.
Yeah.
And the conversations that were happening at that point in time.
We've slid back in time. Yeah.
But at the same time, I saw that flash, and obviously we'll talk about it, the fact that Dubai is looking to set up a port that circumvents the Hormuz completely. Of course, it's not a solution that will come up in the next few months, but then eventually, as you were saying at the start of this conflict, there's only a small window within which they have to resolve this.
The only thing that I find concerning, Alex, is that a few weeks ago, the sense was that the US did not have the appetite to stick around in this region. They wanted to come in and sort everything out and get out. But the fact that that blockade is back from the US side, and they're talking about levying a fee, they're talking about all the, and if you listen to all the stuff that Trump has been saying, they're talking about countries that need their protection getting charged by them. I'm getting a sense that the US is quite happy to hang around in this area, and then you're seeing conflict continuing for a while.
Yeah, I mean, for them, Tamanna, Alex, I think the scenario is where more of US crude is getting sold then, right? If not Iran.
Yeah, but why do they have to be there physically?
That's the only way that they can think. Probably they're blocking it.
Yeah, I suppose so. So a lot going on in the last 24 hours or so. So U.S. markets have slid as Trump has announced a U.S. blockade of the Strait of Hormuz has resumed. Just look at how U.S. markets reacted overnight, and you had a slide down across the board, 1.5% down on the Nasdaq. U.S. futures were also mirroring that weakness in large part. So 0.27% down on the Dow futures at this point. U.S. Treasury yields spiked as tensions rise between U.S. and Iran. The 10-year was at 4.61%. Oil prices, huge jump up. First 9% overnight, then another 2 or 3% this morning. And why is that? Trump is saying he intends to charge a 20% levy on all cargo shipped. Let's pull up the Brent. The Brent has gone from sub 80 to 84 just in a matter of less than 12 hours. So the tick you're seeing up right now is after the markets have started again. But it's looking like a tough one right now as far as markets are concerned. Donald Trump posted on Truth Social saying that the Strait of Hormuz is open and will remain open with or without Iran. I'm quoting from his post on Truth Social. He says, "We are reinstating the Iranian blockade, so named because it's only stopping Iran's ships or customers from entering or leaving. All other countries will have fair and open use of the strait. US will be from this point forward known as the guardian of the Hormuz Strait. But as such, and as a matter of fairness, will be reimbursed at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. The process and formation will begin immediately." Now, here's what the Iranian side has said. The Foreign Minister Syed Abbas Araghchi said that POTUS is absolutely right. Whoever provides secure and safe passage of commercial vehicles through the Strait of Hormuz should be compensated. Iran has always been guardian of the strait and will remain so forever. 20%, of course, is too much. We will be fair. Now, this is obviously spooked crude markets. It's crude Asian markets. Let's pull up Asian markets this morning and show you what's happening there. And you're obviously going to have a tough time this morning. Let's pull up the India implied, and expectedly another close to 200-point down tick when we open as expected, 165 points down as we speak. Matt Orton, Head of Advisory Solutions and Market Strategy, Chief Market Strategist at Raymond James, joining this morning. Matt, welcome. We always enjoy our conversations. Isn't this sounding like a bad Avengers movie? Everyone wants to be the guardian of the Strait of Hormuz, but they're self-appointed and they're going to levy a charge that no one wants to pay.
Yeah, good morning, Tamanna. I feel like we're stuck in Groundhog Day. Every time we think we're through this, it just starts again. and somehow the confusion escalates from what we had before, which is perhaps why you haven't seen the markets react as severely as maybe you would have expected given this escalation. But I think there's too many unanswered questions with respect to what this toll or levy could actually be, the legality of it. It's also just absurdly high when you think of the fact that most shippers are paying between 2 to 3% of the value of their cargo for fees, including insurance, et cetera. So I think this is one of those proposals that's thrown out there, and we'll actually get some clarity at some point in the near future. But from a market perspective, what does all of this actually mean? I think, number one, it means that geopolitical conflict isn't just going to fade into the background as easily as I think some investors were hoping. And perhaps it will also increase the emphasis that we have on inflationary data that we're going to start getting from the US this week. Earnings season is starting to kick off in earnest, starting tomorrow in the US with banks, and it will start to move around the rest of the world. So I think investors are really going to be focusing in on where are there idiosyncratic stories that perhaps are not dependent on what happens with respect to geopolitics to guide those earnings going forward. And I think that's really where you want to be focused as an investor now and wait for the dust to settle before trying to pick bottoms in certain sectors or industries.
Yeah, that makes sense. So, Matt, the other question, and good morning, Alex here, is what happens to the macro setup, right? Because ultimately, you were anticipating just a couple of weeks back with the war dissipating and crude oil coming off that the inflation concerns, particularly on the supply side, would ease out towards the end of this year. But now that's all gone out of the window. Would you agree?
I think it's too early to say, Alex, whether it's gone out the window. I'm really keenly anticipating both the CPI data we're going to get on Wednesday here in the US as well as PPI, because those are going to give us two assessments with respect to where inflation's going. But most notably, the energy shock component that comes from the non-core elements of inflation, that I'm not as concerned about. What's really important for investors to focus on is there a read-through from the increase in energy prices that we saw over the past couple of months into services inflation? And if you're starting to see things creep into services, meaning wage growth, housing prices, things that are very, very sticky, that becomes more concerning. So it's too early to know whether or not we've seen that read through. The good news is that I don't expect whatever energy shock comes right now, that we're going to see any sort of the reaction that we did with oil prices going back to $100+ a barrel. I think that's unlikely given some of the demand destruction that we've seen, questions with respect to supply surpluses that might near term help alleviate some challenges. So I think there's too many questions to say the perhaps disinflationary stories out the window, but it does raise risks. It does raise risks that things can escalate. And so I really do think going forward, all meetings are live.
But Matt, good morning, Hiral here. I understand risks are there. You're not seeing oil actually go back to those $100 per barrel as well. However, from a central bank perspective, if you have to look at the overall picture right now, what direction do you think the Fed will be headed? What direction do you think the RBI would be headed as well if you have to look at both of these markets? Because inflation does become a concern.
No, you're exactly right. And I think the Fed's going to have to continue to talk tough and hope that you don't see some of those inflationary read-throughs. It's clear that former doves that are now becoming more hawkish, like Waller had some statements earlier today in the US that says he is ready to hike if the data is there. I think you're going to see more of that. You're going to see more posturing to justify a hike if necessary, if the data supports that. But I don't think it means a hike is a foregone conclusion. When you look at other central banks, India in particular, there's challenges. I think India, the RBI's biggest challenge, I think, is really going to be managing the rupee, because that's been the biggest headwind for investors, quite frankly, and that also can have inflationary consequences. So currency management is going to be important. And you're seeing the same challenges with other central banks like Japan, where you've seen rapid yen depreciation. You're talking about dealing with rapidly rising bond yields, how you do that. There's conflicting messages coming from the government. So I think it's very, very important in the case of India, especially other emerging markets, to really have one singular message that's delivered to investors that will give confidence that you're not going to see inflation escalate out of control. And they've done a very good job of that so far, at least India, for example, I think has. And so it's really going to be continuing to command the respect of investors, not to test them on policy.
Matt, just on that point, command the respect of investors how? You've had a bit of a trickle of foreign investor inflow into India this month. Do you see that increasing even if West Asia continues to be on a boil? And what in the Indian landscape are you finding interesting right now as we have those Q1 business updates and results rolling in?
Yeah, so I mean, talking tough, I think, is going to be the key element in making sure that if the currency does start to move, that you do try to push policies forward that are going to help protect the currency. I think foreign investor flows are going to be challenged in the near term. It's been very encouraging to see investor activity come back to India, and it's played out just as we've talked about over the past weeks, where I think a number of investors have viewed India as a very good complement and really diversifier relative to their growth overweights that have been a little bit more challenged, particularly in the emerging market complex when you look at South Korea and Taiwan. Until we have clarity with respect to where the currency is going to go, I think FII flows will be challenged. But if earnings season starts to show that you haven't seen degradation of consumption in India, if you continue to see strong earnings reports, especially from some of the banks that are going to be really, really closely followed, I think that's going to give investors confidence to continue to come back, because valuations, I would argue, are very, very attractive given the level of growth. And so I would continue to look to use downside opportunistically in financials. I continue to like looking at real asset plays, whether, we've talked about some of my favorites like Adani ports and special economic zones, DLF. Real estate has been an area that I've been looking at much more closely. NTPC is a name that I think buying on dips looks attractive. So I think there's definitely opportunities for investors. We just have to make sure that earnings are on track, and I think that will keep foreign interest alive.
Matt, as always, a pleasure speaking with you, and thanks so much for taking the time.
Thank you.
All right, let's talk about what happened in trade yesterday. And at the start, it wasn't looking very pretty, but through the day, you had a bit of a comeback that was experienced in the Indian equity markets. You had foreign institutions that net sold equity worth over 3,000 crore rupees, and that is the highest net selling figure since the 9th of June. Domestic institutions net buying to the extent of 2,172 crore rupees. Take a look at this though. The Nifty 50 recouping 211 points from the day's low, which was at the start of the session, to end unchanged. And the benchmark managed to hold above the 24,200 mark. The Nifty IT was the biggest sectoral gainer, ending with gains of 3.6% and ending actually considerably off the high point of the day. At one point, it was well over 4% higher. Infi, TCS, HCL Tech were among the top 5 contributors on the Nifty 50, and IT as a cohort outweighed the impact somewhat of HDFC Bank, Reliance Industries and Bharti Airtel on the downside. All of them were laggards in trade. FMCG, defense and metal all lost ground. The hike in crude oil prices that took place even yesterday resulted in declines for oil sensitives. The broader markets ended flat to marginally positive. In fact, you can pull those gauges up. The mid-cap index ending flat, but the small-cap index ending with gains, and the market breadth ending just about even Stevens, in fact shaded in favor of the advances, and quite the dramatic change from where you started out.
Yeah, and that's the interesting bit, right? Though we've opened gap down, there is some bit of comfort that the markets do have. So I think that buying at lower levels is what is coming in as well. But categorically, if you see in terms of today's setup, what I'm picking up is wherein the CPI that has breached the RBI's target after 17 months. The reason I want to talk about this is because your food, fuel, that is what has led your inflation higher. Your core has been sticky, and the rise that we've seen in terms of the CPI, that would potentially raise the rate hike expectations as well. So that is going to be one factor that we need to watch out for. Now, I'm looking at Bank Nifty today because that has been consolidating in that range of 56,500 to 58,500, and this is over the last 4 weeks. What is interesting is it's seeming like a healthy pause just after the previous up move. So probably there could be a buy on dips kind of an opportunity that could continue as well in terms of the markets in today's session, in spite of the gap downs that we have been seeing. A lot of sectoral rotation that is on the cards right now, and that's something that we should be focusing on, Tamanna.
I agree. This is definitely one of the factors, the CPI coming in. But if I look at it overall, I think global cues will overshadow the stellar recovery seen in markets yesterday. And that recovery in markets yesterday is telling you that that will to buy is definitely there. But negative comments on the Strait of Hormuz have lifted crude sharply. We saw an $84 per barrel mark. Now, what could what could hamper the recovery today? The US comments on blockade and the fact that they are talking about a 20% reimbursement fee, as they call it. That's really a downer. The Nifty, as a result, remains stuck inside a broader range between 23,800 to 24,300. This is the consolidation range. Support levels 24,060, 24,000, 23,900. Resistance at 24,225, 23,320. 24,420. Now, a clean breakout above 24,300 opens the path towards 24,500. Conversely, a decisive drop below 23,800 shifts the medium-term bias to bearish. For the Bank Nifty, banking index rebounded from its 57,500 support zone. Supports at 57,670, 57,500, 57,220. The pivot resistance is at 58,225. 58,400, 58,675. The primary hurdle lies at 58,600 to 58,700. Sustaining above this level targets 59,400 and the psychological 60,000 mark. Now, we were talking about CPI a short while ago. That's the inflation rate that has come in. It's come in at 4.38% and has breached the RBI's target, the upper end of 4%, after 17 months. Food, fuel has led inflation higher, and the core is sticky. There doesn't seem to be, as per Bank of America, any immediate reversal in fuel price hikes, as OMCs are still recouping losses. They also see headline inflation remaining above 4% going forward as inflation risks turn more domestic owing to a weak start of the southwest monsoon. They expect CPI inflation at 4.8% year-on-year for FY27 with risks evenly balanced. We'll have to wait and see how the RBI now responds to this. But let's take a look at the F&O setup this morning, and the underlying weakness persists, Puneet.
Look at the expiry today as well. The one important factor, yesterday was the recovery that we saw from the lows. So we ended just about 4 to 5 very single-digit points down as well, 24,200 odd. But yet again, seeing an impact of that 160-point downtick because of global factors. So what will be important to watch if we see buying at the lower end of post the dip in the opening as well. So that will be something to watch. On the Bank Nifty as well, now we've highlighted that 57,200, 58,200, both those levels and that 1,000-point gap between them is an important metric as we track. Yet again, we opened almost 600 points down and then saw some buying in the second half of the day as well. So here, importantly as well, as we go into Saturday and the big earnings, Bank Nifty has held on to its moves as well. So that's another positive factor as well. But overall, the start continues to be hampering, and we are at this point of time seeing buying in the second half. Hopefully that continues. Yesterday was a sell figure for foreign investors at almost 3,000 odd crores. But the index long 2 continues to be depressed at this point of time. So this was yesterday at about 10 odd %, continues to be there, and hence 89 to 90% short positions yet being held by foreign investors at this point of time. For OI distribution, for open interest distribution across key levels, we spoke about yesterday that as we are moving again at that 24,000 mark, there could be a spike in the put open interest, and that's exactly what showed up today as well. So the big red spike at 24,000 continues to show interest yet again. Even as we're just one day before the expiry, we saw a massive open interest change in there, while 24,400, 500 as well as 24,800 are seeing continuous call action even despite the pressure that we're seeing. So all of those lower levels also continue to be activated as and when the volatility persists around those levels, and seeing that today as well. In terms of stock-specific action, you've seen DMart, which had a weak set of numbers yesterday, saw build-up of shorts yesterday. Biocon will again be in focus today on the back of that big clean-out trade. So yesterday was a day which saw short build-ups. Could be another pressure on the stock today as well. Grasim is the other one that you have to watch out for, that big acquisition, but funding costs could have some pressure on the stock today in the near term. And for OI losers, you've seen Kalyan Jewellers, that covering of shorts and longs being built up has been one way over the last 7 to 8 days, and something to watch in today's trading session as well. So the broader market was very active yesterday. Important to watch out for the benchmarks today as well.
Say the benchmarks were very active yesterday as well, but that is courtesy one TCS. And we'll have to see if that continues. So HCL Tech also one of the stocks in focus on my watch list, but I'm starting off with Grasim. So big news there, right? Because they've had this acquisition, and we'll come to our assessment on it secondary, please. First, let's tell you what's happened. Grasim is going to be raising debt to fund an equity infusion in AB Renewable, and plans to structure it in a way that the credit rating remains intact. But I actually want to come to the news, please. Grasim is, and one of its subsidiaries is putting this big renewal bet in. Here's how Morgan Stanley sees it. They're maintaining overweight with a target price of 3,900. They see this as a positive development for ABREN and Grasim, as this deal provides immediate scale. It takes it closer to 10 gigawatt target well ahead of time. Management is now targeting to double capacity over the next few years. And it's an acquisition of a company called Spring. That's at the core of it. This is a timely bet on India's energy security agenda. It gives the Aditya Birla Group scaled exposure to the accelerating shift towards domestically sourced renewable power. Now, that in itself is definitely positive news. But if we were to understand what that impact is and how we should even look at it, one of the ways to look at it is the question of, will this renewable acquisition weigh on valuations of Grasim? Because Grasim is one of the companies for the Aditya Birla Group that will be funding it. Its 71% subsidiary, Aditya Birla Renewables, will be acquiring 100% in Soline Power Private Limited at an enterprise value of 17,200 crore rupees. It's unclear on how much equity infusion would be contributed by Grasim. Grasim's standalone net debt will be 8,101 crores. That's where it is as per Bloomberg. And its standalone net debt to EBITDA is 4.5 times in FY26. This is again as per Bloomberg. The dividend inflow from Ultratech was used for fund infusion in AB Capital and dividend payout. Now, Citi is saying Grasim will raise debt to fund the equity infusion in AB Renewable. It plans to structure it in a way that the credit rating remains intact. The FY27 net debt to EBITDA should be higher as Grasim infuses equity into AB Renewable. So we'll just have to wait to see how the street looks at it specifically for Grasim, for the group. It's a very big deal. HCL Tech, I'm giving it a thumbs up. Numbers are in line with estimates. Margins are up 39 basis points at 16.9%. Constant currency revenue is down 0.5% versus minus 3.3% in Q4, in line with estimates. Its advanced AI revenue is at $171 million, up 10.5% for the quarter. Again, in constant currency terms, the company is set to invest up to 3,500 crores in the data center business with the potential to scale to 50 megawatts. This, I thought, was an important announcement. The total contract value is at $2.4 billion and marks a record booking in Q1. Here are the core numbers. The core numbers, though, are in line, I would say, not spectacular. Revenues are up 1.75% at 34,579 crores. Your EBIT is up 3.75% at 5,831 crores. Your EBIT margins have stayed steady at 16.86% versus 16.53%, and net profit is up 3% at 4,624 crores. Morgan Stanley's maintained equal weight, hiked the target price to 1152. and say the consensus estimates to stay put. Strong execution was reflected in advanced AI revenues. Pipeline is robust, but macro uncertainty still keeps us cautious about inflection in growth. Lack of consensus upgrades and strong recent outperformance may lead to near-term underperformance. I think the data center strategy is bold. So the news is good on HCL Tech. The only thing to watch out for, I suppose, is whether after the recent run-up, are you going to see some softness today in the stock? It's up 5% yesterday. Plus, the macro is uncertain. But let me go across to this question that my colleague Rishabh Bhatnagar asked C. Vijay Kumar, MD and CEO HCL Tech, on the results.
Telecom discretionary spending was, the weakness was expected throughout the calendar year. Have spending trends improved in the first quarter? What have you seen on that front? Secondly, did the manufacturing and retail clients, those budget cuts, did they continue in Q1? Do you have any visibility on that? Also, are procurement delays and slower decision making, are they still impacting deal closures?
Yeah, telecom, as we had called out last time, there is certainly a reduction in the discretionary spending, and that continues. We don't see the situation improved in the last 3 months. And retail and consumer business, I think our retail and consumer business is doing very well. It's grown 10% year on year. This quarter, we've grown 5%. On the back of, we had announced a very large win two quarters ago with a large global retail apparel company, and that client is ramped up fully. We've executed that well, and that's causing the good growth in revenue. Manufacturing has some challenges due to different reasons, and some like automotive and all are under stress. So that situation I don't think has changed, even though we won some good engineering services opportunities in the automotive sector as well.
Okay, we're going to do a deeper look at what's happening with IT so far after 3 results out ahead on the show, so stay tuned for that. Nuvoco Vista is the other one on my radar. It's a thumbs up. Q1 revenues are up 9%, EBITDA is up 9.6%, and margins at 18.2% versus 18.1%. Net profit is up 20%. They saw a one-time loss of 48 crores in Q4 FY26. The EBITDA per ton figure is at 1,079. Freight and forwarding charges were down for the quarter at 838 crores. Capacity addition and volumes they were good. They inaugurated 2 MMTPA of grinding capacity at Limla cement plant in Surat as well. So it's a good set of numbers. So overall.
Yeah, I was writing down some of the things that you were saying because it'll be easier to remember. But having said that, let me get straight to my stocks. I've got pretty simple updates. BEL is in focus on account of orders that have been won, 572 crore rupees since the last disclosure on the 22nd of June. They never really break down what exactly they won the orders for, but it's in a whole range of communication equipment, etc. in the defense space. So watch out for this one in trade. The defense pack was lower in trade yesterday. EMS, it's emerged as the lowest bidder in a sewerage infrastructure project. This company has actually been winning a few orders in the recent past, and so it should be kept on your radar, particularly to see how that will affect their Q1 results and in fact Q2 results going forward as well, based on the execution. What is this project? It has been awarded by the UP Jal Nigam in Varanasi, and the estimated order value of the project is 105.8 crore rupees. And finally, Privi Specialty. It's an interesting company in the specialty chemical space, and in case you were wondering, they manufacture aromas that go into soaps and shampoos and various other things. Incred has actually initiated coverage on Privi Specialty. They've said that they've got an ad rating on the stock with a target price of 4,796, quite the upside even from this current value of 3,621.
What they're saying is that there's steady growth going ahead. There's sticky customer base and a resilient specialty chemicals franchise. The capacity expansion should sustain double-digit growth. The pine chemistry integration is a key advantage for them, and backward integration and stable margins should lift the FY29 EPS estimates. Healthy earnings growth supports an ad rating on the stock, and so you should definitely watch out for this one in trade.
Okay, so these are interesting names that you've booked, Alex. On my watch list, I've picked up a paint company which is Asian Paints. They had their 80th AGM yesterday. What they've mentioned is that the external environment is going to remain dynamic, and this is on the back of the recent escalations that we're seeing in West Asia that has created significant inflationary pressures in terms of raw material prices. Now, what is interesting over here is that they've already implemented a 12% price hike, and this is to mitigate West Asia headwinds. And this is the biggest ever price hike that Asian Paints has actually ever taken in a short span of time. Now, to add to this, what has happened is, if you look at peers, the maximum price hike that the peers have taken is 10%. With crude prices again escalating, you are going to see a negative sentimental impact that could come in terms of paint companies as well. However, will Asian Paints actually have the bandwidth to again take any price hikes because of the 12% that they've already taken? That's going to be the key question. But again, you could see pressure not only in terms of Asian Paints, but other paint companies as well in terms of today's session. The second one on my list is the Welspun Enterprises. Now, they've backed a 7,300 crore Pune highway project, and on the back of this, their order book has actually surged to 18,755. This agreement is for a 53.4 kilometer highway in Pune, and this is a 29-year toll-based revenue stream that they've actually secured. This will be massive revenue visibility as well over the next 29 years through the toll collection, so that is one of the positives. Secondly, it strengthens their balance sheet as well and the capability to handle projects exceeding 7,000 odd crores. So a thumbs up coming in on a Welspun Enterprises. And on the back of earnings, I have a ICICI Prudential AMC. It's a very interesting set of numbers because at the face of it, you're looking at numbers which are in line. There is a jump in terms of profitability on the back of the treasury gain, so it would look like a thumbs up. However, if you look at what brokerages are indicating, they're saying that the higher expenses and lower alternates yields is what has driven the miss this time around. The operating profit has missed estimates, and this is only back of lower revenues as well as the higher employee cost that the company has seen. And the PAT is a miss due to a lower other income. Morgan Stanley has maintained an equal weight. They've actually cut the target price to 3,320 from a 3,410. However, raised their FY27 estimates given the market recovery, but they've trimmed their FY28 forecasts. And they like the franchise, but find the valuations pretty much on the expensive side. Citi has maintained an outperform, and they have a target price of 3,510. They've said that the healthy operating growth is because of the support that they've got from the treasury gains, and the market in Q1 has been healthy, led by mutual fund AUM, and they're expecting that to grow, and the strong treasury gains are expected to be stronger as well. Jefferies has maintained a buy for a target price of 3,770. However, they've cut their FY28 and 29 EPS estimates by around 3 to 4% on the back of higher employee costs, and they continue to like ICICI AMC only on the back of the diversification and the faster growing alternate businesses that they have. So it's a very interesting take that's coming in from brokerages when you talk about ICICI Prudential. It's got AMC, and it's going to be interesting to see how the stock reacts. So interesting names on all our lists, but let's first quickly slip onto a short break, and then we'll get you all the expert advice in terms of individual stocks, what you should be looking at in today's session. Please stay tuned.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds, and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV.
Welcome back. You're watching India Market Open. Quick look at the implied open, and that downtick shouldn't surprise you at all. Nearly 200 points down, and why not? Everything seems to be going back to where we were on 18th of June when that MOU was first signed between US and Iran. We didn't expect it to last too long, but at least a month was expected, perhaps. 191 points down. But let's focus on what's happening in the Indian corporate landscape, and Q1 earnings season is on. Talk a bit about IT, because IT has turned out to be, either you can look at it as a positive surprise or not as bad as expected. TCS, HCL Tech and LTI Mindtree have reported so far. Puneet joining in to tell us what the overall signal is after these three results are out.
Well, thank you for that. Just taking note of 5 key notable points coming out of all these three results, that the numbers, as you rightly mentioned, are in line with the beaten down estimates that we are working with for LTM as well as for HCL Tech and TCS as well. And while the street had some doubts, HCL Tech has actually gone ahead and retained its guidance for 1 to 4%. That was the other key notable factor coming out of the results yesterday. And they have followed TCS with investments in data centers as well as going after the AI infrastructure. That's point number 3. Something to watch if the other large cap IT companies as well continue to do, with Infosys and Wipro results very soon as well. Point number 4, and this was important yesterday because there have been deal wins in the airspace as well, and TCS announced a big one yesterday with ABB. Stock was up 6%, also led by Kotak, adding TCS in the model portfolio. That's the 4th key point. And the 5th one, that the AI revenue is starting to shape up for all companies. Almost 12% of revenues for LTMs coming in from the AI space, while for TCS it's 8.5%. HCL Tech is 4.2%. So while we've looked at the numbers and the commentaries, these were the 5 key notable trends propping up at this point of time in trade, and hence something to watch in terms of data centers investment being followed, as well as in terms of guidance if that continues to be maintained, at least for HCL Tech, that has been in this quarter.
Okay. Moshe Khatri joining in, Managing Director, Investment Banking at Wedbush. Moshe, very good morning to you from where we are. I know it's a little premature, and this is not, let me again clarify, this is not a review of the entire IT sector. But the way we have seen a response to IT companies, some of it is perhaps that they've been oversold, valuations are looking good. But what are you reading from the tea leaves that is clear after 3 players at least have reported results?
Yeah, good to be here. So I would say that in the context of this earnings season, we started as background and with a very, very negative sentiment for the space. You've seen multiples compress significantly. So anything that's going to be in line will be, in my view, considered as better than feared. And I think this is really what we've seen. But there are some other things to get, positive about. The AI bookings look pretty healthy. Bookings in general look pretty healthy. And then, some of the companies are actually making some pretty interesting moves in terms of pivoting towards AI, whether it's investing on the infrastructure side, making some acquisitions, kind of deciding how they want to how the model's going to look like down the road. People talk about outcome-based. Some are talking about a hybrid kind of agent/human in terms of delivery models, right? So we've always thought that this industry will have a place in this AI pivot. The market obviously remains pretty skeptical given the fact that you've had a pretty significant PE multiple compression, at least in the US, with some companies actually losing 70-80% of their market cap, which is pretty incredible. So one quarter obviously doesn't make a trend, but we are seeing encouraging signs. Now, we need to see more of that next quarter, and we also need to see growth picking up from where it is right now, which is somewhere in that low mid-single digits, in order for us to kind of get to that next inflection point in PE multiples. So I would say so far so good in terms of what we've seen so far this quarter. One last thing that I think is also significant. When TCS reported, another company called ISG came out and indicated that they are seeing a lot of the AI projects moving from, initial kind of tryouts into production. And if that's the case, you should start seeing revenue growth scaling and revenue growth looking better and healthier for the space. I don't think it happens now, but I think this is going to be a journey. They'll probably take a few quarters from now.
Interesting. Moshe, morning, Alex here. So maybe about a year and a half back, the narrative was that the relatively smaller IT companies in India would be preferred because of the fact that they're more nimble and they're growing much faster. Based on what you've said right now, the pivots that companies are undertaking, and we've seen that HCL Tech is making certain acquisitions, there is a spend towards a data center business. I'm just wondering whether going forward, companies will have to spend a considerable amount of money, and they have the cash flows to do it, to make that pivot. And so from that perspective, those that have that war chest available to them are better placed?
I think it's about capital. I think a lot of this is about strategy, and it's also about where you want to be on the journey side of the business. So, and it doesn't really matter whether you're smaller or larger. I think that your commentary about smaller companies was probably more focused on companies that maybe were more focused on ER&D or product development, which is kind of a subsector within tech-enabled services that is still doing well even in this environment. So I think it's about your ability to strategize in terms of how you want to tackle this pivot. Are you going to focus on this from the data side, the infrastructure side of the business, the development side of the business, even the integration part of the business? So I think there are all kind of different ways to get there and to go through that pivot kind of journey. And as I said, this is going to take a few quarters until we get there. One of the things that I like to kind of use as an example is where the industry was 10 years ago when everybody was focusing on digital or SMAC, social, mobile, analytics, and cloud, versus the legacy business. And typically on a quarterly basis, the question was, well, what's your percentage from digital? And a lot of companies started from 5-10%, and obviously that accelerated to 20-30% of revenues. And this is kind of the path that we're headed to in this cycle as well. Obviously, when AI becomes 10-20-30% of revenues, that will definitely start contributing to the top line in terms of top line growth, just because obviously this will be a faster growth business for companies in the space.
Okay. Moshe, good morning. Hiral, my question to you then is, if you have to look at valuations in terms of Indian IT, versus historical averages, yes, we are very much cheaper right now. However, if you have to compare them to global peers, where do you place Indian IT right now? And do you think, in spite of everything that's happening in terms of the strategy perspective, this could start emerging as an opportunity?
So this will be looked upon as an opportunity if we have another quarter that looks like that. Remember, we need more than one quarter to establish a trend. That's number one. Number two, in terms of multiples, Indian IT is still trading easily at a 5 to 1,000 basis points PE multiple premium versus their US peers. Some US peers are trading at 9 times earnings. And these are companies that during the peak of the pandemic, when growth was pretty stellar, were trading at 40 times earnings. So I think the premium has been maintained in India, despite the fact that you've had some compression in India as well. But the valuations in the US have really hit rock bottom a couple of weeks ago. And obviously since then, we've seen some sort of an uptick. But again, for that to continue, we have to see another strong quarter, especially looking at those metrics beyond June, the June quarter of this year.
Yeah. Moshe, thanks so much for taking the time. And once the entire space is done, we'd love to have you back to speak to you about what you think.
Sounds good. Thanks, guys.
All right, let's welcome in Parag Thakkar as well as Kush Bora in studio. Gentlemen, thanks so much as always for joining us and pleasure having you. Big smiles on your face, both of you, for different reasons.
For the same reason.
For the same reason?
For the same reason.
Really? Which is what?
Really? Yeah. Nifty, TCS. I've taught Parag by something, by the way.
I thought you were watching football or something.
Oh my God!
I'm sorry, that was yesterday's story.
200 point का recovery call दिया था Nifty पे. Oh, that is mean.
Okay,
आप ऐसे बोल रहे हैं जैसे कि Argentina's already won the World Cup.
I think more people care about the Nifty call coming through. Let's be honest. No. So, okay, 10 seconds to definitely acknowledge the fact is on this show 24 hours ago, you had a call that there will be recovery in the Nifty. It was taken. There was a call that TCS is the buy of a lifetime. Pull up the TCS chart. This gentleman on the extreme end of the table took that call. The one next to him had the Nifty call. That's a fact. The Parag and Kush combo has struck again. And you had 5.5% up. So that's the 10 seconds of yesterday was absolutely
I'll take another
bang
5.
on.
I'll take another 5. Get me and Parag Bhai both in the same frame. Yeah, do
what
that.
are you
Go ahead.
going to do?
No,
Parag Bhai is looking nervous.
Get me and Parag Bhai in the same frame. नहीं, lao. Parag Bhai, are you ready? I've taught him something. We're going to do it together. Okay? Parag Bhai, करना पड़ेगा.
Very good. Very good.
I am learning fundamentals from him and I'm teaching him some shenanigans.
I am learning technicals from him.
Parag Bhai is looking mortified.
क्या करवा रहे हो मेरे से?
What you have made, I'm making him do. But like I said, that is still yesterday's story. What's the call today?
First off, thank you so much. Actually, feels good. See, let me be honest. I'm sure Parag Bhai will also say there is an element of randomness to this also. हम लोग सारा analysis सब कुछ कर सकते हैं, but control is an illusion. जो view लग रहा था उस हिसाब से Nifty played out. God's grace, TCS also, God's grace for sure, right? हर बार नहीं होगा, ठीक है, हर बार हम सही भी नहीं होंगे. आज व्यू भी थोड़ा अलग है. Today is the Nifty weekly expiry, and that might play its part, and we might not see the entire rebound. We might, we may not, but right now the data suggesting that we might perhaps see some consolidation around the 24,100 mark, right? If yesterday at 1.2 PCR, 1.25 PCR, I said, you can't go long at that level at opening, not at the low point of the day. PCR yesterday at close is 1.43, right? So, of course, there is overheating in the markets. The cooling, or rather, the downtick that GIFT Nifty is suggesting today will take care of it, and the weekly expiry will for sure take care of it. But right now, as it stands, massive put writing at 24,000, 24,100. I have a feeling that there is a possibility that once we open lower, you will see call option writing also at 24,200 and 24,100. Again, that is more of, like I said, a gut feel rather than actual data, right? So Nifty might consolidate around this level. Positionally, it is still respecting the range, and I will play the range. 23,800 on the downside, 24,300 on the upside. So closer to 24,000 or maybe just under that, it's a good buying opportunity. Bank Nifty, very impressive rally. 200-day, 20-day moving average on this one is being held. PSU Bank resurgence is something that I'll take heart from. And again, even if it sounds like a broken record, the range on this one's also very similar, 57,300. Closer to that level, you take a positional bet. The stop loss on this one then will be 56,500.
Let me also, before you get into individual stocks, ask you about Nifty IT, because it came, it gained the most intraday from the low point, right? Over 4%, but it came off from those high points. So 4.5% gain or so, it ended with gains of 3.5%.
So here's the thing: if you look at the peaks for Nifty IT, if the team can bring up, let's say the last 5-6 months kind of data, this is the first time in this calendar year that Nifty IT is breaking out of that falling wedge. Remember, I had said 28,500 ये level है on Nifty IT index. इसके ऊपर यहाँ पे आपको reversal दिख सकता है. Up until then, it was only a rebound. Right now, we are at 29,000. We're already seeing the big boys perform, and girls. TCS, Infosys, HCL Tech, all of them, starting to come to fore, which is a good sign. I still maintain I prefer the mid space, which is the Persistent, Coforge, and Emphasis of the world. So yes, this is now starting to look like a reversal, but honestly, be very nimble-footed. The narrative could change instantly on this one. So yes, I would go long IT in some of these names. I would hold my long positions, but with tight stop losses.
Okay. Parag bhai, I'm going to come to you on HCL Tech and the whole plethora of stocks that we want to talk about. But let me quickly go across to Soumit Sarkar joining us with all the chatter from the dealing rooms this morning. Is it quiet, Soumit, because they're wondering now what next in the Strait of Hormuz?
Well, yes, that will remain an overhang, and the kind of recovery that we saw yesterday in trade might not be the case today because things have changed dramatically, and also crude oil prices have surged to around $84-85 per barrel. But stock-specific action continues. Firstly, it's Bellrise and Ather Energy. Now, there's a buzz of a QIP opening in both the counters very soon. For Bellrise specifically, dealers have indicated that the fundraise could be close to around 2,000 crore rupees, which is also inclusive of the green shoe option. So keep an eye out for both the counters. For ICRA, there are buy flows on the large HNI desk. Dealers indicate a potential buyback announcement that could come in from the company's side. For Tata Chemical, there are buy flows on the PMS desk. Dealing rooms flag possible caustic soda price hike that could come in. When it comes to CDSL, there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter, and delivery volumes are also on the higher side. And couple of news that we did indicate earlier, Biocon, we did indicate on July 6th that there could be a potential block deal very soon, and today Mylan will be looking to completely exit from Biocon. And the second one was on NetWeb Tech. We said yesterday that there are buy flows on the large HNI and PMS desk. Dealers are expecting a positive note from a broking firm, and today BofA has come out with an initiating note on NetWeb Tech with a buy rating and a target price of 5,000 rupees.
Okay, thank you for that, Soumit. What's so exciting about NetWeb is that in a market where there's such few allied AI players, NetWeb kind of stands out. Are you looking at NetWeb on the charts, Kush? Positively.
Yeah. There is, there's been a breakout, a rounding bottom formation breakout from a long-term perspective above the 4,000, 4,200 mark. Immediate support is then 4,200. But yeah, I'm looking at NetWeb positively.
Parag, let's talk a bit about HCL Tech to start off with. We did a detailed conversation with Moshe Khatri also. And not that we're calling the last word on what IT has done this quarter, far from it. But just looking at the signals so far after TCS, HCL Tech, and of course LTM has reported.
So one thing is very clear, common thread amongst all three names is BFSI spend is picking up. So TCS also showed that, LTM also showed that, and HCL Tech also. BFSI, which is a large vertical, about 20% for all of them, is showing a good sign of picking up. Then there are mixed signals across their user segments. But I would say that valuation-wise also and thesis-wise also, I think IT companies are making a lot of sense. But I would say that HCL Tech rallied in line with TCS after TCS results. Of course, they have not revised their guidance downwards, which was also expectation of some of the sell-side broking houses. So it's okay, but I would not now rush in to buy HCL Tech at this price. I will wait. because after the TCS results and commentary, IT has moved nicely. So I would just wait it out, let it consolidate. Plus, as we speak, there is a problem, right? Oil is again at 84. US 10-year is at 4.61. Dollar index is again above 101. So I would take note of all that, and I would not rush into buy. So it is not any thumping table buy today. It was there on Friday on TCS, which by God's grace played out. But right now, I'll just wait, and I'll wait for 2-3% correction. But one thing is for sure, I'm more constructive on IT than before this result season started.
Okay, so there is that positive green shoot that you're seeing as well, which is emerging. Kush, your top picks for today?
Sure. Going with a mix of long and short yet again, KFin Tech. There's a rounding bottom formation breakout on this one. The 905 mark was a resistance, healthy volume, good price action as well. So KFin Tech for targets of 950 and 985 with a stop loss at 899. NMDC is a sell. We've been seeing consistent selling pressure on this one for the last many sessions. So NMDC is a sell for targets of 82.5 and 80. Stop loss on this one 86.5. And Abbott India, this is more of a continuation of yesterday's call, where the stock's consolidating with a positive bias. I know it's a big ticket item, so I may not have too many takers, but nonetheless the structure's positive. To reiterate the targets, 27,930 and 28,745. You can now bump up the stop loss to 26,800. Just a quick word, the short call on VBL yesterday did well, went on and hit target 2. If you did actually go out in short, you could hold on to this one. The structure's still a little weak. Now you can lower your stop loss or trailing stop loss to the first target of 474.
Okay, a lot of other stocks that we want to discuss before we hit the pre-open session. Mahima joining in with buzzing stocks that should be on your radar.
Right, Tamanna. So I'll start with PDS Limited. Now, this company has gone ahead and announced a strategic sourcing partnership, and this is with a leading French headquartered global supermarket. This will basically help them manage and operate the retailer's textile sourcing operations across Bangladesh, Pakistan, India, Sri Lanka, as well as Turkey. And PDS expects to manage apparel sourcing valued at over $250 million of free on board volume annually is what they're expecting. The next one is Alembic Pharma, where US FDA has issued a warning letter linked to a study conducted at Alembic's Vadodara facility. The letter has been issued to the clinical investigator involved in the study, and the observation relates to the informed consent form. This form is basically a document that studies volunteers sign before participating in a clinical trial. US FDA has raised concern about the consent related process and not raised any data integrated related process, to which Alembic has said that there currently no restrictions on the facility and the company does not expect any material findings from this one. Lastly, Zydus Life Sciences should also be in your list, because Delhi High Court has temporarily restrained supply of Zydus Life Science cancer drug named ICRA, where overall what's happened is that AbbVie has moved to Delhi High Court alleging patent infringement, and court has allowed continued manufacturing of this, but from 14th of July is when the supply of ICRA to manufacture by Zydus is not going to take place. Plus, going forward, Delhi High Court has also fixed next hearing, which is on 24th of July. So we'll wait and watch as to how this progresses. So these are some of the stocks that you should watch out for in trade today.
Okay. Got it. All right. Thanks so much, Mahima, for that. I do want to very quickly check in with Parag Bhai about, and just 2 minutes away from the start of trade, about Grasim and this large acquisition that was done, right? And the question that is being asked at this juncture is, what is the implication of the debt that Grasim will likely have to raise in order to fund this acquisition, and the implications for the financials?
So in my view, it is 17,800 crore or something like that acquisition. Grasim will infuse equity to the tune of around 3,000 crores. Remaining will be debt. So Grasim, from that perspective, will have to infuse only 3,000 crores. Okay. And debt part of that will be serviced because it is a utility business, right? So you have a long-term agreement with your state electricity boards, which takes care of your interest cost servicing on the acquired portfolio. So I don't think it is too much of a stress. And see, we have to keep all the kind of companies in the portfolio like Bajaj Auto and IT companies, which are cash flow generating machines, while kind of Grasim, JSW Steel kind of companies where they are growth hungry companies. Right, so where they see growth, they'll put money. For example, this will just give them 5,000 megawatts of solar power, renewable power at one stroke. So I would say that, but yeah, I would agree to it that stock might react a little bit negatively, and which can be used as a buying opportunity if it falls, say, below 2000, below say 3050 or so.
Okay, just a view on Grasim.
Yeah. मजा नहीं आ रहा है वाला सीन है 2.5 years of consolidation. Yeah, 2900, 2950, that's the resistance zone, which will now act as support zone. So maybe closer to those levels, it might make sense, be a little more favorable from a risk reward perspective. Momentum missing. So from a long term perspective, if you want to buy, I'd be more comfortable around 2950, 2900 levels.
I just want to request the team to pull up those lines on Grasim and what the deal is all about, if possible, because we've been talking about this, but we've not been telling people in clear terms what it is. So here's what's happening. Aditya Birla Renewables is acquiring Solenergy Power, which was formerly Spring Energy. So that's the story. It's a wholly owned subsidiary of Grasim Industries, and the deal value is at 17,200 crores. It's one of the largest renewable energy deals in India and gets their portfolio for renewable to almost double from 4.4 gigawatts to 9.3 gigawatts. The valuations of acquisition seem attractive at the face of it and implies a valuation of 34.4 million per MW. Its listed renewable companies now trade at 50 to 90 million per MW, and renewable power can be used by Ultratech, Hindalco and Grasim. They have partnered with BlackRock-backed GIP for this, and it's not being funded entirely through debt. I think at the end of the day, that becomes the last question. If because of the lack of clarity on the impact of Grasim, there is a downtick in the stock, what would be your
my view
focus?
is that below 3050 I'll buy.
Below
So
3050?
3050. So 3% below the last close.
Okay. Biocon is the other big story that we're tracking this morning. A large trade has taken place. The block has been done now in that window of 9.19 crores. Mylan is the one who's exiting. Shares have traded around 400 rupees. And, we should pull up the details of what Mylan has been doing as well, because that really is the big story over here. We have an exclusive interview coming up with Kiran Mazumdar show on the channel at 9:35 a.m. And, you should stay tuned on that. That is, of course, about the broader business outlook, not about this one block deal, but a view on Biocon. Parag Bhai?
So I'm not tracking this company as I track generics or, chronic acute therapies. So I'm not able to give you on this company, Biocon.
Okay, so that's Biocon. In fact, let's just quickly address the pre-open rates as well right now. Individual stocks, very interesting names. Grasim indicating an up move of around 6.5%. Nuvoco Vistas, what Tamanna was talking about as well in terms of earnings, 4% up move there. You have Kalyan Jewelers, which continues the uptrend. Biocon also up in trade 2.5-3% there, and I think it's the overhang with regards to Mylan's exit which goes away, and that's the reason why probably you will see some bit of positive moves coming in. Niva Bupa, ONGC on the back of crude is seeing some buzz. Shally Hotels is indicating a downtick. UTI Asset Management, Shriram Finance, PB Fintech, Deepak Fertilizers, eClerks, few of the names that one should be watching out for as we speak. In fact, let's also get in Ruchit Jain, Vice President, Equity Technical Research from Motilal Oswal Financial Services. Ruchit, good morning. The question is in terms of the way markets behaved yesterday. Gap down, we did see that buying on dips opportunity that did come in, and that's what investors have embarked on. In terms of today's setup, what are you looking at specifically when it comes to Nifty? And then if you could just give us your levels for Bank Nifty as well.
Yeah, hi, very good morning to everyone. In fact, if you look at last 1 month's market activity, we have not seen any kind of trended phase as far as Nifty is concerned or the benchmark indices are concerned. So we are more into a consolidation phase, what we even say time-wise correction. On the higher side, while resistance has consistently been seen around the 24,500 mark, 23,800 is the important support. So I think we are still range bound. Yes, last trading session, we did see that the gap down openings are getting bought into. But if you look at the entire leadership where it is coming from, so it's more from the broader markets rather than large cap stocks where the index would move much. So I think broader markets can still do well in spite of that gap down opening, even if we see today where the stocks from the mid cap space or small cap space can show relative outperformance, but not expecting any big trended moves on the index again today. On the lower side, immediate support is at 24,000, where yesterday's low is there, which is also the 20-day EMA. And on the higher side, immediate resistance is 24,250 to 300 range. Similarly, for the Bank Nifty index also, although broadly we have seen a bit volatility over there, but still 57 to 59,000, this remains a broad range for the Bank Nifty index as well. So looking at the recent price action, it seems that the buying interest on gap down openings is more into specific stocks or the broader markets rather than the heavyweights. And hence, we expect the indices to continue their consolidation.
And Ruchit, very good morning to you. So to that end, what are the individual stocks that you are focused on this morning?
So, no, if we see such negative opening even today, I think pharma is one space which relatively can continue to do well. We have seen a good relative outperformance if you look at Nifty Pharma's return in last 1 month compared to Nifty. So that outperformance could continue. So Divi's Lab is one stock that we really like at current levels. The stock has already gone through a good time-wise corrective phase of consolidation. On the weekly charts, there is a formation of a bullish flag pattern and it's on the verge of a breakout above that. So short-term traders can look to buy DVs where in spite of such volatility, in such market volatility, we think the downside should be limited over there. One can keep stop loss below 6,800 for potential targets around 7,160.
Got it.
Okay. Couple of just what's moving this morning. Biocon, we talked to you about that that block. 2.5% up on Biocon, and you're going to see that exclusive interview in a short while from now. Nuvoco Vistas, good set of numbers, 5.5% up this morning. ONGC riding the crude wave more than anything else, even as crude prices are spiking to 85, 86. I mean, that's a serious concern. And then, of course, you're seeing Interglobe Aviation on the other side of that deal. Let me go across to Sharad now, talking about Waaree Energies in focus as UBS turns cautious on the stock while downgrading its call from buy to hold. That's the brokerage call this morning, Sharad.
Well, yes, there's a big downgrade coming in for Waaree Energies from UBS. They have downgraded the stock to hold from buy rating. And if you look at the target price, almost a 20% cut coming in from 4,400 rupees to 3,100 rupees per share. And concerns are definitely there on the large investments which have come in. The ambitious capex amongst the sector challenges which are happening. Of course, this is global also as well as domestic. The risk reward actually appears right now balanced. It's not that favorable because there are some headwinds coming from the sector. And if you look at the front loading of the capex which is happening, that is where a little bit more consolidation we can expect going ahead. The incremental returns on capex execution remain the key focus for the investors. But yes, there is a cautious tone coming in from UBS for Waaree Energies.
Quite significant, right? If you just take a look, thanks so much, Sharad, for highlighting that. And in fact, this stands out as a very important stock to track. It's down about 1% or so, but take a look at the drop in the target price that has been announced. Parag bhai, what do you make of this? Because I think the contention is that this massive capacity increase that they're doing is coming at a time when there are headwinds in the sector.
So I have clear view that I am not going to invest in these stocks because there is too little history. Where you can see, and a lot of players get, enthusiastic about this and they put up a lot of capacities, and then if it becomes an overcapacity business, then it's a problem from realization and margin perspective. I think in one of the quarter's results which we discussed, Waaree's margins also fell significantly. So I would be also very, very cautious on these names. I'm not ready to buy these stocks.
Okay. And on the charts, Kush, does that bear out as well?
For Waaree, it does. There is definitely pressure, lower high, lower low formations, trading below some of the key averages. But surprise, the other one, the Premier Energies in this one is actually very different. So the setup for that is different. If you have, you should continue to hold. If not, I wouldn't recommend a buy here, maybe closer to 1,050 odd levels. Technically, that actually seems much better placed.
I want to look at an ICICI Pro AMC. The company reported after markets yesterday and largely has been seen as a bit of a miss, at least on operating profits. Let's pull up the stock this morning, actually doing okay. PAT was also missed due to lower other income. Maybe that's why it's a bit of a positive view. But have you had a chance to look at the numbers?
So that is the organization I've worked for 6 years. It's my favorite organization.
You have to look at the results, they are.
Results were okay. 900 crore PAT. So if you annualize it, it is 3,600 crore. Market cap is around 1,50,60,000. So trades at around around say 37, 38 times, which is in line with HDFC AMC and SBI AMC. The beauty about ICICI Pru AMC is that with Mr. S. Naren at the helm of it, they come out with so much innovative products all the time that they always gather good AUM and give good customer experience also. So I would be a long-term investor in this company. From PE perspective, from valuation perspective, it is perfectly priced. So there is not big upside, not big downside from that perspective. But if you have it, you can continue to hold it.
So all of this is without any favoritism for your previous organization?
No, that's okay. The business itself is fantastic. If you see the business, the balance sheet, 4,000 crore net worth, and they'll do a 4,000 crore PAT next year.
No, but
where else you can get such business?
Yeah, but Parag, the question over here is, yes, in terms of business, the alternative businesses is something what everyone is banking on for ICICI Pru, but you have a lot of brokerages which are citing valuation concerns. However, you've been of the opinion that valuations are reasonable.
I'm saying that such a business with 100% ROIC, okay, infinite ROIC, I would say, where the senior fund manager team is fantastic, where they come out with innovative products which actually give risk-adjusted good experience to customers. It's a business to hold on for a long time because the cycles will come and go, right? And valuations today looks expensive, after 1 year will look more reasonable. From a long-term perspective, it's okay. It's still okay to hold on. I'm not saying you can add fresh because I'm also saying that valuations cannot go significantly higher from these levels.
Okay, so no fresh positions,
Yes.
but whoever is holding continues to stay put. How about a Nuvoco Vistas? 8% upside is what you're seeing in terms of pre-open numbers, seeming to be good. Do you think good entry levels right now?
So 8% higher. So that if you would have been 4-5% higher, definitely it would have been a good buy. Because I'll tell you, stock is so cheap, it is $60 per ton or below. On EV/EBITDA basis, it is 6.5 times. And results were good. EBITDA per ton was 1,072 rupees, which is very good. And I think with regime change in West Bengal, and this company plus Dalmia caters to West Bengal, so eastern part of the India, where the regime change has happened, which is going to be a structurally very big positive in long run. So this is a company where, of course, July, August, September quarter results will be weak.
Yeah, building materials in any case.
Monsoon. Plus
what is the regime change angle, if you can elaborate?
West Bengal, BJP has come. Yeah, so I would say that a lot of development will happen and there's a huge room to do development.
So why Nuvoco Vistas?
So Nuvoco supplies in that.
But a lot of others do.
Nuvoco, so yeah, but I'm saying Nuvoco is an east-focused company.
So you think it's got an advantage over them?
It's got a long-term structural advantage also, apart from very cheap
buy
valuations.
at these valuations?
No, that's what I'm saying. I'll wait for it to cool down a bit.
What about you on charts, Nuvoco?
Yeah, you'd want to wait up. Again, technically also this confirms because there is a resistance zone from 340 to about 365. Immediately the 200-day moving average, also 345, does provide some resistance. So I wouldn't buy now, maybe closer to about 325 zones. In this pack, I will have Ramco Cements on my radar. Last week, there was massive accumulation on this one. Breakout level for Ramco Cements is actually 960. I'm rounding that off. Above this, I think it could gain momentum. So I will keep that one on my radar from a positional standpoint for sure.
I want to quickly pull up Seshasai Tech before we go into the opening session. There's an Investec buy call on it. They've initiated a buy with a 430 rupees target price that they've set. Talking about Seshasai Tech. So why do they like it? It's a quality annuity franchise and also an emerging growth engine. Let's talk about 2% up. India's payment cards, so what they do is they make the cards, the debit cards and the credit cards. That's the business they're in. They're saying it's oligopolistic with high entry barriers. Not everyone's in it. Payment cards should remain relevant. IoT is new growth engine. See steady margins and healthy cash conversion. Ruchit, I wonder if you're looking at this stock on the charts at all?
Yeah, some rounding bottom type of formation is there. We witnessed a significant gap down in the month of October around 400. So maybe the stock could come up to fill that gap area. So 400, 410, those levels can be expected on this.
Okay. So that's Seshasai Tech. Let's look at Asian Paints. Let's look at HPCL, BPCL. I think the pressure would continue on the way crude has been panning out. Along with this, you could see some bit of pressure in terms of tire companies as well. Ruchit, on the charts, would you say this could be an opportunity to actually exit any of these names from an Asian Paints, for that matter, HPCL, BPCL, IOC?
So when the crude prices were going down, the major disappointment was from the OMCs itself, because in spite of that crude falling from 100, where the consolidation was there, to towards $70-$74, we did not see any kind of positivity coming in from the OMCs. Minor pullback moves were there, but when things are in your favor and still the stock prices don't move up, there's definitely not a good sign. So I would be very cautious on the OMCs specifically, because when times were good for them, the stocks were not doing well, and now when the crude prices have gone up, definitely I think the reaction should be there on the negative side. So OMC is one space where definitely one needs to stay cautious.
That's where OMCs go. Parag bhai, your view in terms of paint companies, and that Asian Paints yesterday said that they've taken a 12% price hike. Good opportunity yet?
So in my view is very simple. In stocks like Asian Paints, Pidilite, Indigo, which are high quality companies in their respective sectors, you have to buy when you feel that oil is at peak.
Okay.
Oil is at peak.
Okay, we're getting into the opening session. We'll come back to that. Watch out for IDBI breaking on your ticker. Government set to accept sweetened Fairfax offer for IDBI. That's a Bloomberg report that we are showing you. But how are markets opening after all of the tremors in the Strait of Hormuz? I'm not saying it's great, but you're above 24,000 on opening. So we should take that as we see it, 0.56% down on the Nifty. Remember, yesterday we had a big cut and then a recovery coming in. Even the advanced decline ratio is not as adverse as you would expect after both the US and Iran have said they want to charge a levy, toll, reimbursement, whatever you want to call it, on anything going through the Strait of Hormuz. 1,082 declines to 701 advances this morning. The mid cap and the small cap also seem okay. Mid cap about 0.4% down. Let's pull up the small cap for you, about 0.5% down. So that's how it is all over. Let's pull up the Nifty heat map and take a look at what's happening there this Tuesday morning. I'll start from the bottom. HCL Tech, good set of numbers, but has run up a lot, and we talked to you about this, that if it had not run up, maybe you wouldn't see this downtick, but they are spending 3,500 crores to get into the data center business as well. Shriram Finance seeing a bit of softness, so is Indigo. Crude prices at 84.85. What do you expect? On the winning side, you have Hindalco this morning, some of the metals shining. ONGC again, high crude prices, good for ONGC. Nestle and Infosys doing well today, even after the run-up. TCS also still in the green. It's an HCL Tech which is dropping, but it is skewed towards the declines, I would say, because the highest gaining stock on the Nifty is still Hindalco, which is just about 1% up more than anything else. The India VIX also up and about, but not that negative. I would say, all things considered, Alex, this is not a bad start for the markets. Looking at all the news flow overnight.
Yeah, absolutely. For the equity markets, but pull up the currency while you're here. And this is certainly something to talk about before we get into the broader markets and everything else, right? We're at 96 or past 96. This was bound to happen.
Back above 96.
Right. So so we've crossed $80 on the per barrel on Brent crude, and this is certainly something that you're going to have to keep very close eye on. Yields have gone up globally. Keep an eye on the Indian 10-year yield as well over the course of the day, because that, more than anything else, is going to be a barometer for you. It's climbing. There you go. 6.78 at this juncture. Let's see where that ends up today. But 96 has been crossed on the downside for the Indian rupee. Pull up the sectoral heat map for the markets as we start today, and there is understandably a significant amount of red on the screen. Metals are doing okay. Healthcare is up and about. Pharma is up and about. Usually when the texture of the market is like this, you will see those two indices that trade in the green, and that is panning out today as well. Private banks are seeing a little bit of selling pressure. Financials are losing a little bit of ground as well. 0.75% lower for the Nifty Auto, and the Bank Nifty down about 0.7%. Realty, some money being taken off the table as well. This is really par for the course. No big losses with regard to the index view as well. But let's jump straight into individual stocks and see how they're doing at this moment. ONGC, Oil India, these are the oil exploration companies. You would anticipate that they would do well on account of the crude run-up, and really not too many stocks that would do well on account of the crude run-up, and that's pretty much where the list ends. PDS has signed a multi-year sourcing partnership with a French retailer. This is a stock that's gaining quite considerably in the context of where the markets are. It's up about 10% or so. BEL, further orders that they won 570 odd crore rupees. Remember, the defense pack has gained in the recent past, and so don't expect there to be big moves today either, particularly today. Wellspun Enterprises, there's an agreement for a 7,300 crore Pune project, or Pune to Shirur highway project. The stock is up about 0.4%. Carraro India has gotten a ratings upgrade by India Ratings, not too much movement. Z Entertainment, it could well be a positive. The Reserve Bank of India approval to redeem a $23 million outstanding foreign currency convertible debenture bond is something that you should watch out for. Nuvoco Vistas, reacting to numbers, in all probability is up and about. It is in fact up as much as 10%. This is a 20% uptick in the PAT number despite a one-off loss during the quarter. The numbers look particularly good. Pull up Biocon because that Mylan exit is proving to be a bit of a boon for the company. It is up as much as 5%. The trade, I believe, took place very close to that 400 mark, and the overhang perhaps of supply coming off the table is something that has the street excited as well. On the downside, you have paint companies that are likely losing ground, and all of the oil sensitives on the downside. You have Asian Paints, Interglobe Aviation, SEAT, and the other tire companies as well. MRF, Apollo Tires, the entire cohort of tire companies is likely seeing a little bit of a downtick. And remember, we spoke to the SEAT management not too long back, in the fact that they are going to have to pass on price increases, not so easy to do at this juncture. Zydus Life, Delhi High Court has temporarily restrained the supply of cancer drug. The stock is still up about 0.4%. And finally, Alembic Pharmaceuticals, there's been a US FDA warning letter. It's not doing too much, down about 1.8%. But Hiral, I would really watch the rupee very closely at this juncture.
Absolutely, I think the rupee is something that will be closely watched as well. A couple of other names that are actually continuing the moves that we saw yesterday. Bajaj Consumer Post, the numbers which came during market hours, is down 2.5% as we speak right now, 3.5%. Kalyan Jewellers is something which is maintaining that uptrend in today's session as well. You have Just Dial, which has continued with that momentum. Fino Payments Bank is another one which is seeing some spike in trade today. We've spoken about Container Corp. Look at that one, because your Q1 volumes have been better than what the street was estimating. That stock is up nearly 5.5%. So very interesting names that we are seeing which are moving as we speak. Kush, coming to you with the way markets have opened up, any stocks from the kind of moves that we are seeing could be good momentum plays right now?
I had Concor on my list, but again, it's opened up about 5% higher already in a market like this, more than that. So that trade just goes away. I think, let's just hold up on the trades, because the stocks are behaving a little erratic. Wherever there is news, you've got these big moves and, the trades lost. Otherwise, like I said, all over the place. Nifty, Bank Nifty, actually very interesting. Remember how we spoke 24,200 could start to see some sort of call option writing as well. That started to happen. Even 24,100, call option is starting to see writing, but so is the put option. I think there will be a struggle around this 24,100 mark, for the day. Watch out for that 3 p.m. move that we speak about on the expiry days. That could be interesting. But I think today is a day for consolidation on the Nifty.
Well, frankly, 3 p.m. is far away. But the reason I'm saying that, Delhi tak dur nahi, from BKC to Kurla maybe. But if I look at the recovery on the Nifty, it's actually a little heartening that I'm seeing in the last few minutes, and back above 24,100 on the Nifty. This despite after 9 weeks the rupee dipping at 96 plus levels, despite crude at 80 plus, 84 plus. Ruchit, just a quick view on your top call after market open, and I want to ask a specific view on IDBI as well.
Yeah, so we have seen that markets are more of a trading within a range only, but IT is one space which no one cannot ignore. in spite of markets being down, still the Nifty IT index up by 200 points. Even similar thing was seen yesterday as well. So that relative outperformance, at least for the near term, could continue. So within the IT space, we like Tata Technologies, where a good relative outperformance was seen recently around its 200 DMA. The stock has formed a good support base and a higher bottom. Tata Tech can do well from current levels. So 0.5% down from yesterday's close should be taken as an opportunity buy. Keep a stop loss below 738. We expect on the high side target somewhere around 775. And IDBI Bank, the stock has seen some base formation around 50-day EMA, which is around 80 rupees. So nothing to worry. I think till that 80 rupees mark is intact. So if any existing positions are there, then traders can continue to hold on this name with a stop loss below 80.
Okay, let's go across to Varsha quickly. A lot of stocks buzzing this morning. There's IDBI. And is Fairfax finally getting it is the question. There's Biocon, the Mylan exit seems to be doing well. There's Nuvoco Vistas. There is HCL Tech. Despite decent looking results, the stock is down and out. So let's go through them one by one. Going to Biocon first. Varsha, tell us all the details of the Mylan block deal.
Well, this is a clean out trade, I would say, which Mylan has done. We have seen a block deal update wherein almost 9.19 crore shares have been traded at around 400. Mylan has been set to fully exit Biocon, which is via block deal on July 14, that is today. The stake, if you see, as on June 2026, stands at around 5.64%, that is Mylan's stake in Biocon. The price is around 5.5% discount to the current market price. The total block deal size, if you see, stands at around 3,676 crore. Now, why Mylan is selling this? This is an important point. This is a clean out trade, and hence we are seeing the stock is up almost 5%. Mylan received this shares from Biocon as part of Biocon Biologics stake buyback deal. This was never a strategic long-term shareholder in Biocon. The stake only represented deal consideration rather than the fresh investment, and hence Mylan is now monetizing that holding and exiting completely, and hence we are seeing the stock is up almost 5% in trade.
Okay, so maybe that overhang is done. Ruchit, take your pick. I talked about HCL Tech, I talked about Nuvoco, I talked about Biocon. What are you liking today, and are you seeing an opportunity in HCL Tech after the downtrade?
Not actually. If I have to go anything within the IT space, I think a couple of names which have done well over the last 2 or 3 months, those should be preferred. Names like Coforge, where the bottom was made in March, even Tata Tech, which we spoke about. The low, if you see, the Nifty IT index has just happened last week. But these names have formed a bottom right in the month of March itself. So if I have to go with the IT, then I would ignore HCL Tech. Maybe trading pullback move would be there. But positionally, I think the relative outperformance within the space could come from these stocks like Coforge and Tata Tech.
Quick word on IDBI. So what we're learning, and sources to NDTV Profit are on your screen. We are learning that Fairfax's revised bid is closer to the government's reserve price, but we're learning that the final decision has not yet been made. To be clear, Bloomberg is reporting that India is set to accept Fairfax's deal, but we're sticking to the information that we have right now. That decision on winning bidders likely in a month. How would you look at the IDBI stock?
So so I will look at Kotak stock, because Kotak is not bidding it, right? If this news is true, Kotak is out of the race for IDBI, which I view it as positive for Kotak, definitely. Because to acquire such a big entity, then to integrate it, it takes 2 years, and then stock would not have done anything for next 1.5 years. But right now, if Kotak business update was muted, and the stock price reaction was negative, result is on 18th, and I'm expecting that ICICI, Axis, Kotak all will report good numbers. So I feel that there can be a positive surprise in Kotak's results. And so if IDBI thing is out of the way, then one can take a fresh view after the results in Kotak.
Okay. So that's an interesting way of looking at it. Show me Kotak Mahindra Bank, show me IDBI as well. Because IDBI in focus today with this news that a buyer, a suitor, seems to be finally close to being inked. 2% up right now off its stop lows. Perhaps after we've reported that it's not necessarily the deal sealed with Fairfax? It'll be announced next month. Okay, Ruchit Jain, Parag Thakkar, Kush Bora, thank you so much for joining us today on the show and giving your views on, all of the top stocks that we've talked today. I just want to quickly go to Shrimi Chaudhary on this big story before we get Gautam Shah in. He's waiting by, so don't miss that conversation. But Shrimi, very quickly, what are we learning? Is the final deal not sealed yet with Fairfax as is being reported?
Yeah, so Tamanna, official sources, telling us that government has received revised financial bid from 2 foreign bidders competing for the strategic disinvestment for IDBI Bank, and Fairfax Holding and Emirates NBD continue to remain in the race for acquiring the stake in the lender, and they have submitted their revised offer. Among the two, Fairfax Holding actually the revised bid of Fairfax is understood to be closer to the government reserve price, so potentially strengthening its position in the race for sure, but there is no final decision taken on the successful bidder. In fact, sources in the government says that it will take at least a month's time to come to the conclusion and to announce a winning bidder, but definitely Fairfax revised bid is closer to the government expectation, which they are eyeing around 50,000 crore from the IDBI Bank stake sale.
Got it, Shrimi. Certainly something to watch out for. Thanks so much for joining us and giving us that quick update on IDBI Bank. Gautam Shah, founder of Goldilocks Global Research, joining us this morning. Gautam, as always, thank you so much for taking the time and good morning to you. What do you make of the latest resuscitation in geopolitical tension and what that means for global markets?
Good morning. There seems to be a massive disconnect between the news flow that we are getting on a daily basis on the geopolitical front and the way the markets are reacting to that. In fact, for the first time in 18 months, in the recent past, we have the Indian markets outperforming the rest of the world. So we've had a scenario wherein Asian markets have corrected big and the Indian markets have been quite resilient. And if I simply go by price action, which I want to, given my years of experience, I want to believe that the market is still in fine form on the charts. We have been oscillating in a sort of a band, 23,800 on the downside, 24,600 on the upside. Last time when we were on your channel, we spoke about the Nifty possibly going towards 24,600 and cooling off. That's exactly what has happened. Now I think we are in that phase of base building where potentially we could be preparing for a breakout on the upside above 24,600. And if that were to happen, I think it will open up another 1,000 points on the upside. I know when you go by the news flow, this is a view that it's very difficult to believe in, but that's what the charts have done. And we have a situation where everything is in favor, actually, apart from geopolitics, because crude has corrected, India VIX is back at 13, technology started to participate, banking has done well, result season, very early days have gone off well, and domestic money is still winning over FII selling. So putting all of this together, I want to be optimistic, and you still have a parallel bull market running in the small caps and micro caps, something that we've talked about repeatedly in the past.
Okay. Gautam, I think you've been talking about India's underperformance bottoming out as well since quite some time now. And that probably your underperformance is bottoming out. However, if you have to look at individual sectors, where are you in terms of technology? Because that has also been your call where you did mention, I think in the month of May to us, that probably from here on, you could see that upcycle coming in terms of IT. With the way earnings has panned out, it seems there are some green shoots.
Well, I think technology has been in a downtrend for about 9 months. And in that period, it lost about 35-36%, which was large by all standards. I think the index tested our medium-term, long-term support of about 26,000. And I think about 10 days back, we put out a note to clients that probably now the worst could be over. And the charts were indicating at a possible turnaround. We didn't know the news flow in terms of results, but so far the results have been a positive surprise. And I'm not surprised because the charts were indicating the same. And too much negativity and pessimism was already in the price. So I strongly believe that the worst is over for technology. We are probably headed higher from here. We will go to a level of 32,500, but nothing substantial. I don't think it's the greatest opportunity in the Indian markets, but only because it has fallen so much, there will be some recovery of about 10-12%. That will obviously help the Nifty sustain above support levels.
Gautam, hi, good morning. We spoke some time ago about the Nifty year-end outlook, and you were not very positive on it. Has anything changed?
Honestly, Tamanna, nothing has changed. I think if we don't fall and if we don't collapse itself is a big win for us. And given the kind of world that we have lived in the recent past, I think that's a great outcome. Honestly, the Nifty doesn't matter. The top 100 do not matter because they have been underperforming the rest of the world. And the real opportunity has been in the micro caps, small caps, mid caps, all of which are near lifetime highs and beyond. So it's important to be in the right segment. It's important to commit where the action is. And the action is clearly in the broader markets. On the Nifty itself, because I believe that most of the negatives are priced in, I want to believe that there is a possibility of a test of 25,500, 26,000 by the end of the year. So that possibility has come up in the last 15 days. But again, in percentage terms, it's nothing substantial.
Yeah, it's a slight improvement from your last outlook on the Nifty. Just on the point that you previously made, that in the micro caps, many of them are at lifetime highs or beyond. Doesn't that weaken the case for fresh investments right now?
Well, it does not. I think we've seen multiple times in the past that segment rotation and sector rotation and theme rotation is a part and parcel of every bull trend. So if you are in the large caps, obviously you'll be feeling out of place. Nothing has really worked as such. But micro caps and small caps are still doing well. And I think fresh capital on the domestic side is moving in there. FI selling has been aggressively talked about in the recent past, but now with other Asian markets coming under the hammer as well, I do believe that India will start seeing reduction in flows on the way out. So that itself, I think, will be a big positive.
Okay, I do want to ask about the crude sensitive stocks as well, right? Because these are stocks where they move in a very volatile fashion one way or the other. Gautam, would you avoid this cohort of stocks in the near term? And specifically, do you have a view on Brent? Because it's once again crossed that $80 per barrel mark. It's headed towards 84, 85. I'm talking about Brent. And what is the potential for upside based on the charts that you're looking at?
See, markets don't discount things twice, thrice. I mean, we saw this in COVID as well. You can't scare the market again and again with the same issue. And that's probably the reason Indian markets and world markets have been quite resilient to all the comments that is coming out of the US. If you look at the NYMEX crude, something that we track closely, I think we were staring at levels of 110. The fact that from 110 we've come to 70 itself is one of the biggest win for the Indian markets in the recent past. And it looks like it's going to stabilize in that band of about 70 to 85. If that happens, that itself is a positive because we don't start worrying about that aspect of the market, which can definitely have a huge impact on the economy. So I think crude cooling off, India volatility index cooling off, I think are two big positives. And with the comeback of banking, I think it's very important that I think there are indications that economy consumption is coming back. I think with the way Eternal has done, with the way some of the hotel stocks have gone, some of the FMCG stocks have come back, banking making a comeback, NBFCs, housing finance companies. I think there is a play on economy that has started to play out for the first time in 18 months.
Okay. How about, Gautam, the energy, pharma and cap goods space? You had advised to focus on all of these three sectors as well. Where do you stand right now?
So I think these are all structural trends. I think our favorite has been pharma. I think given the kind of up move that sector has seen, phenomenal across the board strength. And I think this is going to continue. Our working target of the NSE Pharma Index is about 27,500. So there is another 2,500, 3,000 points to play for. But I think a dark horse sector that came up on our radar a couple of weeks back, and we put it in our notes, is real estate. I think there is a massive turnaround that has already taken place in real estate, and the index will go on to do much bigger things going forward. So I'm looking at a 25% appreciation in the real estate sector from here. It's become the poster buy for some reason. Fundamentally, you might not make a case, but technically, there is a feeling that it's coming back strongly. So that's one of our favorites at this point of time. Energy remains a structural story. I know it's gone a little off track in the last 1 month, but I think it was a little overdone on the way up. So it's just cooling off, and post the cool off, it will come back. So capital goods and energy, power overall, we remain positive. It's just that right now is not the perfect time.
An interesting point that you make about the real estate space, Gautam. My question then is it only real estate, or do you also see the ancillary space where you could see some bit of good moves, say for that matter, cement that could be coming in, as a sector that one should be watching out for? I know Alex wants to talk to you about the financials, but on that note, the home finance companies as well, how do you look at that entire ancillary basket?
Yeah, that's a good question. It's come to us a lot from clients that if you like real estate, will the ancillary start doing well? The answer to that is no. Because right now it's just the top 7-8 companies in the real estate space that have come back very strongly. Look at Bangalore real estate, look at Bombay real estate, and even Delhi real estate to a certain extent. That, according to me, is a big opportunity. Whether it trickles down to the ancillary stocks, we'll have to wait and watch. We don't have immediate indications as yet. But home finance is definitely a space that I'm looking at. A lot of companies have broken out in the last 10 days. It looks like a genuine one. And in these last 6 months, the fundamentals have been quite intact for these home finance companies. And given the interest rate scenario, the comeback in the entire financial services space, home finance is definitely that we like.
Gautam, I want to ask about the banks. And I know that you preferred, if I remember correctly, the PSU banks over the private banks. At the end of the week, you're going to have a host of them post their numbers. And from the PSU banks that have reported so far, one or two of them stand out already, right? Where they've had a pretty decent performance on the asset quality side, and they've protected their net interest margin. So the fundamentals are looking okay. Credit growth is looking okay. How do the charts look?
If you want to create alpha at the markets, banking is still not an opportunity.
Okay.
When they go up 5-6%, we all get excited. But then in the US and in many Asian markets, you have trillion-dollar companies going up 40% in a matter of many months. So in that sense, I think Indian banking is not exciting. It will do well. It will do its high single-digit returns probably, but nothing substantial, as I said. I still like the top PSU bank. I think that's still my favorite from a longer term perspective. And the private banking will make an attempt to come back. But because of this FI angle, I don't think it'll be easy for them to really scale up to new highs.
Okay. All right. On that note, Gautam, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you so much. Thanks for having me.
Right, Biocon in focus, of course, as it embarks a new journey of reaping returns on past years of investments. And founder and executive chairperson at Biocon, Kiran Mazumdar-Shaw, says that the global presence will help in bolstering all segments of the business, particularly GLP-1. Here's an exclusive conversation that she had with my colleague Nisha Poddar.
Kiran, there is a roadmap that the market also expects to know. The world, as well as the pharma industry, also is looking at. When we talk about Biocon, what is required to now make it a $20 billion company?
You mean market cap?
Yes.
So I think we have all that it takes to get there. First and foremost, we are now on a high growth trajectory.
Yes.
We expect to double our business over the next 5 fiscals.
Yes.
We believe that we have a very, very well differentiated portfolio of products because, as you just rightly said, we are the only biosimilars company out of India.
Yes.
But in that, we also have the very unique combination of insulins and GLP-1s.
Yes.
Of the cancer drugs, both generics and biosimilars. And of course, we have many new launches waiting to happen.
Yes.
And many new products under development in both generics and biosimilars. And then, of course, when you talk about Syngene, I think we are really doubling down on the CDMO business.
Yes.
So I think we have high growth opportunities in every one of our businesses. And now, of course, I don't even want to talk about generics and biosimilars as a separate business. This is a combined business. So if you look at it, it's a products and services company, which both have got very exciting growth opportunities. So the way I look at it is that our EBITDA is growing. our profitability is growing because, we've retired a lot of the structured debt.
Yes.
We raised almost $1 billion through our two QIPs.
Yes.
And that has actually taken away the overhang of the huge interest provisioning that used to go on.
Yes.
And the overhang of the debt that was payable at any given point in time.
So finance charges, yes, reduction of that. But what the expectation is also that you are in a phase of deleveraging momentum. What is your roadmap and vision towards that? What is the timeline that we are looking at in terms of debt reduction?
I think debt reduction has already started, Nisha. So it's not like we have to wait for anything to happen. The beauty of our business, inflection point right now is the fact that CapEx is behind us.
Yes.
Right?
Yes.
R&D spends are reduced because of the new regulatory pathways.
Yes.
And of course, the deleveraging that has already happened.
Yes.
Okay. And we continue to retire debt every quarter. But I think that actually now makes for a very profitable business, a growing EBITDA. And obviously, free cash flow is going to start showing up from this fiscal.
All right. When we talk about the GLP-1 opportunity, Kiran, everybody in the pharma space is now really looking at that particular pie and a share in that pie. What's your vision? Of course, your company has been at the top of the line when it comes to GLP-1 opportunity. What's in store and what is the outlook towards that? Even globally, that's a big opportunity for Biocon coming in for GLP-1.
So for us, GLP-1s have always been about a global opportunity.
Yes.
And I think we already have the foot in the door because we have our liraglutide, which is both in the US and in Europe. And a very interesting aspect of even liraglutide is the fact that the other competitors who were in the US have indicated certain manufacturing difficulties.
Yes.
Okay, so I think Biocon's capability in peptides and insulins have made them very, very strong when it comes to GLP-1s as well.
Yes.
Okay, and I think that we see ourselves as a fully end-to-end company manufacturing GLP-1s. Many of our competitors rely very much on key starting materials from China.
Yes.
We don't.
Yes.
So I think that kind of sets us apart. And ultimately, I think the true competitor advantage that we look at is the ability to make many of these through recombinant DNA technology.
All right, so that's one challenge in the GLP-1 journey of Indian pharma that you really pointed out, where you have created the end-to-end bouquet in-house. But when we talk about the peptide opportunity and the commercialization of that, you've always passionately spoken about that chemistry and that formulation. But how do you reap benefits when it comes to the commercial aspect, even at a greater pace?
Well, the fact is we now have a global presence. We have a global field force because of our biosimilars. And we can now leverage that capability to drive every part of our business. And that's what makes us very excited and, aspirational and very confident that we can actually drive that kind of growth because of the fact that we made a big success of our biosimilars, and the same workforce can be leveraged in many parts of the world for these other products.
Right. And when we talk about insulin, again, Kiran, you have been very, very focused and optimistic about the insulin business. And you have doubled down on this particular aspect. It is a low margin business. What is
Says who?
All right. So there is competitiveness in the market. There are new products which have come in, of course, but supply is much lower than the global demand is. So putting both these aspects together, how do you see the 300 million plus business now that you have created scaling up to $1 billion?
So first and foremost, you know that we've just recently doubled our manufacturing.
Yes.
Right? And if you were just to double the 300 million because of that, you can see where the business is heading in the near term.
Yes.
But I think we will get to that $1 billion mark in a fairly predictable way because of two reasons. One is that the insulin companies have decided to focus their resources and their capacities on GLP-1s.
Yes.
Okay. And there are very few insulin companies at scale
Yes.
to take on the responsibility of supplying insulins. And insulins will never go away.
No.
So I believe that we have a very exciting opportunity. I think that we will get to our $1 billion target as we aspire to do. And I think the fact that we put in place the kind of manufacturing capacities that can help us get there gives me that confidence. Apart from that, of course, we know what the demand is. We can't even meet all the demand. So I think we know what that whole opportunity is going to be all about.
Right.
The other aspect is that, insulin is a very fungible manufacturing base. You can use your drug product facility to make both insulins and GLP-1s.
Yes.
And you can use some of your recombinant DNA technologies to make both GLP-1s and insulins.
Yes.
So that's what is very exciting for us, saying this whole segment is going to be a very, very important segment for us over the foreseeable future.
All right. So this is another growth engine that you're looking at. But the pain point for the entire Biocon group, Kiran, is Syngene. The revival plan for that, and what are the key factors which will really revive this particular business, which has been struggling with many challenges?
So let me put it this way. I think Syngene lost its way by not doubling down on CDMO.
Yes.
And now we realize that CDMO is a very low-hanging fruit for Syngene.
Yes.
And given the new leadership change that we've made, we are now going to really focus on biomanufacturing and generally in CDMO.
Yes.
Which I think is our forte, is Biocon's forte. And the new CEO of Syngene, who is an old-timer, knows this business very well. So I think given the new focus, I think you will see a turnaround by the end of this.
Do you think the management needs to be bolstered? There have been some teething problems in the overall setup as well.
I don't think so. We made a lot of key management changes because I think we were, staffed with people who were trying to offer services which were not really required. And so we made many of those changes. I think I've always believed in offering differentiated services, and they had lost track of that. They started getting into commodity services, which according to me is not where we should be.
Right.
So you're going to see a lot of changes in the way Syngene is going to rebuild itself. And I'm very, very confident that by the end of this fiscal, you will not only start seeing green shoots, but you will see a strong turnaround next fiscal.
Okay, you can watch that entire interview with Kiran Mazumdar show at 4:30 p.m. on NDTV Profit, and of course bits and pieces of it through the day. A lot of positive commentary coming on a day when the stock is already firing. HCL Tech is under pressure post Q1 results. Puneet is here with details on what's not working for the company despite results which weren't half bad, Puneet.
Well, most certainly, and there are some key segments, as you mentioned as well, that like telecom, like ER India continues to be under pressure, and maybe that's one of the key reasons why the stock is under pressure. But you've also seen brokerages come out and downgrade the stock. CLSA has downgraded the stock today. Morgan Stanley has also mentioned that you could see some near-term pressure on the margins because of lack of any kind of growth initiatives as well. And most certainly, Kotak Securities have also actually reduced the target price to 1,200 rupees now in HCL Tech, where they have largely mentioned that the company had a stronger execution, but the expectations now for growth currently are reducing by the quarter as well. So the valuation differential versus TCS as well as Infosys is also currently trading at a premium. So all of those confluence of factors are having an impact on the stock, but you do have to realize the one big update that the company gave, a 3,500 data center business, So that is, margin dilutive when you even at the full ramp-up phase, because this is an infrastructure rather than a service that the company does at this point of time. So that could be another factor that could weigh in on capital allocation and margins. But all of those factors are having a hampering and essentially on the stock today.
Yeah. But on the other hand, there is a stock that is doing particularly well. Pull up Nuvoco Vistas, also reacting to earnings. It's cooled off from the high point, which was a double-digit gain of over 12%. It's still up 8.5%. But what's working, Puneet? Because it's managed to post a 20% growth in bottom line despite a one-off hit.
Well, most certainly, and it was a quarter, as you know, between quarter 4 and quarter 1, where cost had escalated massively for, all of the cement makers. Despite that, the company has taken a couple of price hikes, but managed to maintain those 18% margins. So, good quarter 1 numbers. They also showed a 5% volume growth in a quarter where the price were hiked as well across the board by across the players, across regions as well. So hence you have to mention that margins have also remained, you had packaging cost, oil also, crude also increasing in terms of, prices this quarter. Despite that, margins have been stable. The third key interesting aspect was the freight cost. Now this had increased in quarter 4, but has actually come down to 838 crores versus 871 crores in the previous quarter. So within a quarter also you've seen that change happen, and capacity addition, now that continues to benefit the company in terms of operating leverage. They're also adding a capacity. Just a couple of days ago they made the announcement of 2 million tons in Surat, and that is the higher margin, higher operating EBITDA per ton regions of Western India compared to South India, where they also have capacity. So all those factors helping Nuvoco Vistas today. It puts out a good point for the other cement makers also, with good numbers for the company and a good reaction for the stock as well.
Got it. All right, Puneet, thanks so much for getting us those details. Keep an eye on the stock. It's up about 8% at this point and off the high point of the day, as we pointed out. SBI Funds Management IPO set to open today, and Sharad joining in with the key details. Of course, Sharad, we have information about the anchor book and the amount that SBI is selling, what they're mopping up in this, and quite a few interesting names in that anchor book as well.
Exactly, Alex. We have Abu Dhabi Investment Authority, GIC, and a whole lot of FIs and DIs participating in this IPO. And remember, this is India's first $1 billion IPO of 2026. It's the largest fund house also in terms of AUM. But let's get into the details. The price band is set at 545 to 574 rupees per share. Remember, the face value is at 1 rupees per share. The IPO size has been reduced because of a pre-IPO round. It's roughly 9,813 crore. Entire IPO is going to be OFS. The market capitalization will be around 1.17 lakh crore, and the retail quota is unchanged at 35%. Strong response coming in for both the pre-IPO as well as the anchor investors. They have raised almost 2,663 crores from the anchor investors and 1880 crores from the pre-IPO round. The dates, important: IPO opening today, July 14. The closing is on July 16, and the allotment is likely to be there on July 18, with expectations of listing on 21st. But looking at the sellers, SBI Fund, SBI and M&D, both of them are promoters, by the way, by definition. They'll be selling their stake off, and their stake sale will come down to 88%. Of course, there was a 1.4% stake in the pre-IPO. But if you're a SBI shareholder, there's a very important announcement for you. Of course, if you're having the stake as a shareholder quota on RHP date, which was July 8, then almost 6.4% of the IPO issue size is reserved, and maximum bidding is allowed at 2 lakh rupees. And you can also bid as a shareholder quota in the retail and the HNI segment. And also, if you're an employee, you can still do that with almost a 54 rupees discount coming in. So these are the important details which you should be tracking for the SBI Funds Management's IPO.
If the employee quota is the exciting one, so that's good for SBI Mutual Fund employees. We'll take a very short break, but we'll come right back and tell you what's happening with markets looking nervous. There's expiry day. Crude has spiked nearly 10% overnight, and HCL Tech is really not being looked at very favorably right now after its run up despite decent results. All of that and more on the other side of the break, including a great conversation with Mark Matthews of Julius Baer. Stay tuned for that and more.
सुपरस्टार स्टॉक्स ऑफ द डे प्रेजेंटेड बाय टाटा अजूरा, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Welcome back. You're watching India Market Open, and we're heading straight into a conversation about JBM Auto. And it's in focus on account of the company's EV arm announcing a partnership with Driven for supplying 500 electric buses. We're going to speak to the management about what this means for their overall order flow. But before we do, let's head across to Puneet. Puneet, how important is this order in the larger scheme of things for JBM Auto?
Well, thank you for that, Alex. So it's definitely, a step in the right direction, because JBM Auto, as you mentioned, will be giving about 500 odd buses to Driven, and Driven essentially will help leasing the electric buses to fleet operators. So the initial capital, intensive business of EV bus purchase that fleet operators have to bear will have a limited, time frame, because they will be partnering with Driven, and hence helps in lowering the cost initially of purchasing the electric vehicle bus. So 500 is the number. The question being, how is this expandable to with other operators as well? That will be one of the key aspects from this conversation. Also, over the last few weeks, there have been big developments on increasing EV adoption. The Delhi EV policy is one. So a few pointers on that. And finally, the new 9,585 crore scheme, which the cabinet approved this month, in the month of June as well, where they will be, allowing 16,000 odd buses to be scrapped and giving incentives for the same. So all of these key factors as part of this conversation.
Absolutely. Nishant Arya, Vice Chairman and MD of JBM Auto, with us now on the channel speaking about this opportunity. Mr. Arya, thank you so much for your time to us here at NDTV Profit. Explain to us, if you can, this partnership with Drive-In. What do you mean by this partnership? So they're not just outright buying these buses from you, is it?
Yeah, so basically we'll be supplying these buses to Driven, and Driven will be deploying them with multiple operators across the country. So this will be then going across different cities for multiple applications. Primarily, I understand they are focused on intercity and luxury applications here, but we'll be happy to explore the applications in school transportation, in staff transportation, airport transit services, amongst other areas.
So from your end, it is an outright order for sale of 500 buses to Driven, is it?
Correct, yeah.
Okay. And what is the kind of timeline that you see for this to be fulfilled?
We'll be doing this within next 12 months to 15 months.
And
so around a year.
Okay, around a year. And the payments also are staggered?
No, like any sale happens, so the payments happen when the sale is done at that point itself. So there's no staggering per se.
Tell us the size of the deal if possible.
So since it will have the compute of multiple kind of buses, so if you take today the highest luxury product, that is sold at about 2 crores per bus. So if you take all buses to be in the luxury segment, then in that case, and at the highest specification level, then it can go up to 1,000 crores, yes.
Now, I assume this has already been determined. So is this still open to conversations, whether all of these 500 buses are in the high-end luxury segment or which segments
Majority of them are there already, but as I understand that Driven is also engaging with multiple stakeholders, so they will be concluding that soon. So they already have requirements from multiple operators, which we'll be helping them execute.
Mr. Arya, so therefore, just to confirm, one can maybe put a range to it and say between, what, 800 and 1,000 crore rupees. Is that going to be booked?
that would be the right number to put across.
Yeah. So therefore, am I right in assuming that that's going to be booked in the second quarter?
No, that will be booked across next 12 to 15 months, as I said, yeah.
Okay. So as and when Driven gets into certain agreements with its partners or whoever it's catering to, those sales then reflect on your books as well.
Correct. No, so they already have multiple contracts with their customers, and we will be deploying these buses as we go along, yeah.
Okay. Tell us about the implications of this cabinet approval, this 9,585 crore scheme for the replacement of or scrapping of old buses and replacement with new buses. What is the potential or revenue potential that you see for yourself?
No, I think we are waiting for the exact detailed fine print of the scheme, which will be coming out soon. So overall perspective has come out, but definitely it will be a great shot in the arm for the industry to grow further and give the right impetus which was required from the old vehicles going off-road.
Okay. Nishant, overall, I understand you've given your delivery timelines for the 500 buses, but what happens to your existing order backlog? Because to what I understand, your order book is already at a little over 10,000 odd buses. So that pipeline any which ways is strong, backlog extremely heavy. How are you looking at the execution side of it?
So execution is not a challenge for us because our capacity is 20,000 buses per year. So the execution timeline being 2.5 years is primarily based on the timeline required by the different customers, where they need to have power infrastructure in place and the depots available. So it's not dependent purely or primarily on the supply of buses. It is the whole infra being available, and then buses are supplied according to that.
Got it. So, Nishant, if you have to look at FY27 as a year, what's the target in terms of supplies that you have? From the 20,000 capacity, how much will you utilize?
So we are definitely looking at about 15% this year.
15% capacity utilization or 50%?
Yes, 15, at least 15% this year, yes.
So isn't that number very less as compared to the kind of order book that you have versus the capacity that you have? Because what 85% capacity is just getting wasted.
Yeah, no, actually what happens that we are able to get the flexibility of delivering much faster because certain customers have shorter turnaround times, and that gives us an edge. And because we have set up our plant in such a manner that it does not impact us, but definitely higher capacity utilization is always preferred. And as the market is growing, we've been enhancing our capacity utilization, which was earlier at 10%, and now we are enhancing it as we go year on year.
But Nishant, just a comment on that model, right? Because unlike certain other SKUs in the automotive space, a bus does not get sold as often as a passenger car does. So therefore, the velocity and volume of sales may not compare really with the largest car manufacturer. And so to that end, you will likely see fits and starts of these orders coming through. So do you anticipate that down the line it's going to be hard to push it up to 20, 25%, maybe 50% down the line?
No. It is increasing constantly year on year. And definitely I see that it will go substantially higher, beyond 50% in the next few years. Because the thing is that the market is picking up constantly. And here we have to see, as I said, it's not the supply constraint. It is the infrastructure and everything which has to be built in line by the customers themselves for us to deliver. And in parallel, a basic difference between the passenger vehicle industry and the CV industry is, and specifically for buses where we are, is that it's all made to order. So it's not a standard product which is sold to the customer. So it's not made to sales, which is there in that case. So everything is made to order because the customers define what is that they're looking for. It's a very high level of customization.
Okay. Very quick last question, Mr. Arya, which is at the end of FY27, where do you see the capacity utilization?
As I told you, we are looking at a minimum of 15%.
All right, Mr. Arya, thanks so much for taking the time. Wish you all the best for FY27.
Thank you.
Okay, all right, let's talk about a stock that has gained quite considerably in the recent past, and you're probably wondering why. If you are, then you'll get that answer in the next 3 minutes. Pay very close attention. CE Info Systems. This is a stock that you probably know as MapMy India. It's seen a sharp rally starting from last week. By the way, this was also part of Somit Sarkar's Heard on the Street, and it was a Khabar confirmed, and you'll find out more details when Sharad brings you all of the reasons why the stock is buzzing and what the path ahead is. Sharad?
Well, yes, the markets have seen that there is a de-rating at play for CPaaS players or SaaS players, but the story might be different. I'm talking about MaaS, which is nothing but maps as a service. Is that turning into verticalized AI? That's what everybody is talking about. The stock itself, if you look at it, last 1 month, it's up 36%. And a good momentum is coming in. The company is turning itself from a verticalized AI play from just a MaaS player. Now what happens? A strong volume-based buying was happening over the last 1 month. That's the first key reason. Also, we had pointed out that Street is expecting an acquisition, especially a very value-accretive acquisition in the AI. That's what the Street is expecting. A strong Q1 numbers also expected to come. And also a couple of more reasons, a good volume-based buying, and the product-based companies, they have already started seeing buying as well. And 75% of these analysts still have a buy rating. That's around total 8 analysts. But let's get into the details about it. The company has a cash balance of roughly 690 crore rupees. 2 acquisitions they have already done in the past on geo-tracking and special solutions. And interestingly, they're focusing much more on the AI front as well. Let's get to the next important point to discuss, and that is the acquisition in these segments. The modern mass players, they might go into this vertical specific models. Now, which segments can the acquisition happen? There can be insurance risk management, there can be, of course, geospatial segment, the automotive logistics, and of course, lastly, the entire mapping space in the precision agriculture segment. So, and a big acquisition is there, likely to be there. And look at the industry, how big this can become. From $37 billion, you can expect a $63 billion of geospatial AI industry going ahead. Another interesting data I have got is on the stock. The stock is still down 40% from its 2025 highs. And if you look at the valuations right now, there seems to be a little bit of correction coming in. The 5-year peak was 71 times, and right now it's just trading at 32 times its 12-month forward P ratio. Apart from the valuations, the brokerages, the higher side on the current market price, these are the top 4 numbers to track. And maybe the story of MapMyIndia is changing from a SaaS player to a verticalized AI player.
That's interesting. Thank you so much for that, Sharath, and for those details coming in. Mark Matthews joining us this morning on Talking Point. He's head of Asia Research. Julius Baer, Mark, very warm welcome to you, and thank you so much for speaking with us. Today, for a change, instead of starting our conversation with Indian markets, I want to ask you what's happening in Korea. Is that, I mean, it's sometimes the Kospi behaves very, very erratically. It has been more so in the last few sessions and in the last few days. Is there an unwinding of AI trade that we're seeing? Is that geopolitical concerns and crude prices reflecting there? What's going on there?
I don't think it has anything to do with the oil price, although Korea obviously relies on external energy the way India does. It's very much the fact that the 2 big Korean chip makers, SK Hynix and Samsung Electronics, went up too much. This year, the story has been what they call the picks and shovels. And in any new technological revolution, typically what performs best in the beginning is the hardware that you need to put in place to make that technology possible. Picks and shovels, by the way, is an old term that comes from the gold rush in the Yukon days, the 19th century gold rush in North America. But anyway, what I wanted to say is that sometimes stocks get ahead of themselves. The internet is a great case in point. It was exactly the same picks and shovels story that drove up stocks like Corning and Cisco in 1999 and early 2000, but then they rolled over and they went back down, and I think it's a similar thing with Korea today. Doesn't mean we won't have any AI, just like the decline in the internet stocks in 2000 didn't mean we wouldn't get the internet. Of course, we got the internet, but it meant the stocks had become excessively valued. And so that's what's happening in Korea now.
I love that explanation and example of picks and shovels being coined during the gold rush. I'm guessing there is another oblique reference there to the madness of the gold rush and what we're seeing right now. But my question is about whether the mood is souring a bit on this entire trade. Look at a TSMC, for example, 68% up in revenues. Stock doesn't react like that, and we've seen examples of that in the past. Is this, in a sense, advantage India?
Yes, I think it is helpful to India because foreigners sold India, you know, you can go back a long way now from when they started selling. First, it was over the trade war, and then it was because of the war in the Middle East, a real hot war, of course. And then it was to finance these semiconductor stocks in North Asia. By the way, India wasn't the only place that foreign investors took money to finance that investment. In Korea, Japan, and Taiwan, they took it out of China as well. But if this semiconductor trade is at least partially unwinding, I would think net it makes India look better.
Mark, just to that end, it's not necessarily something to celebrate but it's a data point nonetheless. And it lends itself to what you were just talking about, the selling by foreign institutional investors and the deployment of retail money through mutual funds. Domestic institutional investors in India now own more of Indian equities than foreign institutional investors do. What does that mean for the pricing of those assets? Because in, say, 2015, if this velocity of selling were to take place, or had taken place, the markets dropped significantly more than they have over the past 2 years.
Oh, yes, I agree with that. And I mean, I don't really know if it's a good thing to have a lot of foreign investors in one's own market or not. I mean, I suppose that if foreigners are in a country's stock market, that speaks well about that country's prospects relative to the rest of the world. But on the other hand, foreign money can be fickle. The Koreans are experiencing that somewhat now. But I would say in Korea's case, it's mostly foreign hedge funds and, believe it or not, foreign retail investors who were investing in highly leveraged single stock Korean ETFs listed in the United States. There's in Hong Kong, I think there's around 4 or 5 of them in Europe as well. But I'm getting off track. I think it's good that domestic institutions are becoming bigger players in the market because intuitively they should know the market better than the foreigners and be able to assign a more accurate price to all the stocks that are listed in the market. And I think it's very interesting that the mid-cap index is down a little today, but it was at a new high yesterday, despite these renewed problems in the Persian Gulf. And generally, the performance of mid-caps, I think, speaks well to India's future because foreigners don't hang out in that space very much. I think they're only about 12 or 14% of it.
Sure. Mark, what do you make? You mentioned the Persian Gulf, so let me ask you about that. What do you make of the latest statements by both sides saying that there is going to be a levy of a fee? Donald Trump talking about 20% of all cargo that passes through the strait, and Iran saying, well, it makes sense to have a guardian, that they would be the guardian of the Strait of Hormuz and they wouldn't charge as much as 20%.
Yeah, well, I mean, there is a charge to go through the Suez Canal and the Panama Canal, and ships still use those canals. So I don't think it would be the end of the Persian Gulf, the Strait of Hormuz. But I do think what you'd see is more energy-related infrastructure and ports built, on the UAE coast, which is facing the Gulf of Oman, and also the further south in the country of Oman itself. They can easily build new infrastructure. I think the UAE just announced yesterday they're going to build a new port there. So then you won't need to go through the Strait of Hormuz anymore. There are plenty of ships going through. It's just not being widely reported. Most of them are going through the northern part of it. There's still traffic in the southern part too, but it's very hard to monitor because they're all operating in the dark, as they say. They're turning off their transponders so you can't see them. But there's definitely traffic going through the Strait of Hormuz.
Okay, so that's in terms of what's happening globally as well. But Mark, if you have to look at India, how are you looking at the earnings growth trajectory from here on? And if you have to look at earnings growth within India versus the US markets as well, where would you place India from an FI perspective? Do you think the valuations are rich enough for the FIs to get into the Indian markets? Because that's one of the resets that probably the street is watching out for.
Yes, from a growth perspective, it's a little underwhelming simply because the growth in the US is so strong, driven by the technology sector, and the consensus among analysts is that earnings growth this year for the S&P 500 index will be, I think, 20%. And next year, they're looking for another 17%. And the year beyond that, they're looking for another 15% in 2028. So even though Indian earnings growth we expect over the next couple of years will accelerate back to, I would say, the low teens, let's call it around 12 to 15%. That's still lower than what the U.S. is going to get, assuming those forecasts are right.
So in that kind of a scenario, Mark, where do you stand a chance to actually find value, find growth from an investor perspective, sectors that you like?
I would say that if you're looking for value, the IT space is a total washout. Depending on which index you look at, it's down 20 or 30% this year. But their earnings are beating expectations, and those stocks are cheap. Growth, I'm not so sure. I don't have any strong opinions on sectors that are above average growth, except that they tend to be in the companies that are less big, simply because the base is smaller. So you'd naturally gravitate to sectors, for example, that I mentioned in the mid-cap index, something like, I'm just talking as I'm thinking, but if I said hospitality, I think that's probably got some very good growth in front of it.
Okay, so not too keen on tech, hospitality maybe. You know, the ongoing narrative when we speak to a whole host of investors and money managers, Mark, is often that for the Indian markets, the story is no longer in the Nifty or even the top 100 stocks. It's in what is right now called the micro caps or the small caps or even the mid caps. Is that a space that you're looking at closely?
No, I don't have the time to look at that. I'm sure there's a lot of interesting stuff going on, but I don't have the time to look at it.
What do you look at when it comes to India, or when you look at Asia overall? How big a portion of that time goes to what is happening in India?
Well, I can't put a percent on it. It depends if people are interested in it or not. I would say, I have to say that it has declined over the last few years because, first of all, China had a couple of banner years, and then came this big AI trade in North Asia. So I haven't been talking about India as much as I did a few years ago to our clients, and I'm just thinking aloud, but if you're a contrarian, that's sort of a good sign.
And has that changed in the recent few weeks after this AI trade question has begun?
No.
No, not yet. Okay, we'll, I suppose, keep watching this space. Mark, thank you so much for coming in and speaking with us. We always enjoy our conversations.
Thank you.
Okay, Mark Matthews there, being as candid and as honest as he can, and that's really what's happening with money managers who look at the Asian markets, right? China red hot, Kospi top of mind, even though the way those indices move on the downside has been really painful in the last few weeks for any investors there.
I mean, can you imagine a market getting into a bear market and still being positive 50% for the year, 40% for the year?
For the,
but it depends on when you came in. I mean, your circuit breakers coming in, and 8% downticks is painful.
And that opportunity to then sell and book profits becomes very difficult at that point in time. So, I mean, that is very painful.
And people have taken leverage in order to buy into the markets.
Well, our focus is razor sharp on what's happening with Indian markets, so don't worry about that. We'll take a very short break. On the other side, Ask Profit. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds, and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India?
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $62,500 mark on geopolitical concerns. BlackRock, Goldman Sachs join UK government's tokenization task force. Japan's SBI Group to launch stablecoin lending. And BlackRock's tokenized funds hit $2.93 billion on chain. Well, Bitcoin has fallen below the $62,500 mark on geopolitical concerns. There is also an uncertainty ahead of the key inflation data from US. Now, the hawkish central bank signals have pressured risk assets globally. BlackRock, Goldman Sachs, JP Morgan, Morgan Stanley join UK government's tokenization task force. The 54-firm strong group, which is backed by the City of London Corporation, will spend the next year working on live tokenization use cases across the UK financial markets. The Japanese financial conglomerate SBI Group is set to launch a lending service that offers a 3% annual yield on users' JPYSC stablecoins. The initiative comes less than a month after SBI launched JPYSC, the country's first trust bank yen stablecoin, and this shows a greater acceptance coming from institutions. And BlackRock's tokenized funds hit $2.93 billion on chain as Ethereum leads with $1.1 billion of contribution. The fund holds cash, US Treasury bills and the repurchase agreements and represents investor shares as blockchain tokens that can settle around the clock. Now this shows demand for the tokenized assets increasing amongst crypto investors. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. And be it Bitcoin, Ethereum, XRP, Solana or even Tron, all of them seeing downticks between 1 to 2%. And the support and resistance ranges come between $61,000 to $63,000 for Bitcoin. And now the time is there to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. Well, of course, we look at the immediate trend is contingent on the CPI outcome. And if you look at the market outlook, it is slightly cautiously bearish. That 61 to 62,000 levels, that is where it becomes an immediate support range. And that's what we'll be looking out for. But there are two events you should be focusing on. First is the geopolitical and the macro developments which are happening. That is where the next trigger is going to come. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulation, taxation or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
NDTV Profit. I'm Mahima Vajrajani and you are watching Ask Profit, and this is a show, of course, that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. But before we do that, let's take a quick look as to how the markets are doing at the moment. The Nifty 50 is down by about 0.4% but holding up resiliently is what we can say about the benchmarks, because we're above the 24,100 level despite of what the developments have been overnight. Globally, the markets seem to be resilient and off from the day's low point as well. The Bank Nifty is down by about 1% now, below the 57,500 level. So Bank Nifty continues to be under pressure. We tried to cross the 58,000 levels, but we've come back below the 5700 levels for the Bank Nifty. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are holding up and counters that continue to be under pressure. There's Hindalco, which is back in action now, up 2.6%. Bharti Airtel also seeing gains of about 1.4%. Cipla, TCS, JSW Steel, Apollo Hospitals are some of the names that are doing fairly well and keeping the Nifty in check. But on the flip side, you have Shriram Finance, which is taking a knock. Just around the 1,000 odd rupees is where the stock is trading at, down by about 3% odd. Interglobe Aviation, of course, continues to be under pressure with Brent touching that $85 per barrel. You have Tata Steel, Cipla, TCS, of course, all of these doing very well in trade today. But Bajaj Finance, HCL Tech, M&M and Tata Motors continue to be under pressure, down in that range of 4% each. So that's, of course, with regards to where the Nifty 50 goes. Let's also try to pull up the sectoral heat map and see as to what sectoral action is indicating today. You have your metals topping that chart. Of course, we saw that moves coming in Hindalco. Pharma, yet another day where it's seeing an uptick of around 0.7% odd, and media also doing fairly well. But you have defense, which is taking a knockdown by about 1.7% odd. Realty also seeing profit booking today, 1.7% of a downtick. PSU banks is what is dragging down the banking index, and you have auto, which also continues to be under pressure. Let's also quickly pull up the advanced decline ratio and see as to where that ratio stands at and as to what the broad end of spectrum is doing, because it is under pressure and underperforming the benchmarks. You have around 700 odd advances versus that of 1,856 odd declines, and that gap unfortunately is widening. So broader end of spectrum is under pressure. The mid cap 150 is down by about 0.6 odd percent, and the small cap 250 is down by about almost 1%. So that's of course where the markets go. But you know what? Before we start taking your questions, and a very important update coming in. Sources tell NDTV Profit that the RBI governor is set to meet bank CEOs later today. Governor Sanjay Malhotra may discuss deposits raised under FCNRB deposit scheme. Nimit is here with more details on this one. Nimit?
Yes, and sources indicate to my colleague Piyush that the RBI governor is meeting the bank CEOs and all the heads today. Now, this is part of a quarterly and bi-yearly thing that the governor does and meets with the banks to understand the health of the business, health of the banks as well as business growth. Specifically, we understand that, like you also rightly said, that the deposits under the FCNRB scheme with the recent relaxations are to be discussed and how that can be improved. Also going to be discussed are two pilots that were recently launched, the Unified Lending Interface pilot as well as the Central Bank Digital Currency pilot. So these two things, business growth, but key on the agenda is going to be the deposits raised under the FCNRB scheme.
All right, okay. Nimit, thank you so much for getting us those details. Of course, we'll keep you updated as and when the story progresses. But it's time to take a look at the questions that you have for us on the show. And to answer these questions today, we're joined by Swati Hotkar, AVP Technical Research at Nirmal Bang, and Astha Jain, Senior Research Analyst at Hem Securities, joining us now. Welcome to both of you, and a very good morning to the both of you. I'll start by taking the first question that we have, and this is coming in from Ravichandran, who's writing us from Bengaluru. He's got Vari Energies, 100 shares at the levels of around 3,000 rupees. Let's try to pull the chart up, and wants to know whether he can continue to hold this or sell, because he says the stock has been going down. Not mention the time frame, but Swati, I'll come to you on Vari Energies. Quick me on the charts.
Good morning, Mahima and Astha. The view for the short-term period is a little bit cautious because the counter has given the cluster support breakdowns of 2,900 levels, and we're witnessing a continuously profit bookings. I believe the stock has a potential to come down to reach up to at least 2,750 levels on the downside. If you're looking for a very short-term purpose, I would suggest to exit on every rise towards to 2,900. Let the stock find out a good support nearby 2,750, 2,700, then you can re-enter this particular counter. So sell-on rise strategy should be implemented in this particular stock.
Got that view, Swati, and welcome to the show. The next question coming in on Aegis. Our viewer wants to enter this counter right now, and this is Bindu from Hyderabad. For the long term, what would you recommend? Yeah, Astha, I mean, you know, at the time of the IPO, I think the company was loss-making, but the opportunities since and what the company has described has led to a good positive response since listing. How are you looking at the counter now?
Hi, good morning to everyone out there. So talking about Aegis, it is one of the company which is into the aerospace, and it is like, most promising, I should say, aerospace precision manufacturing companies in the India. Now, what is the positive about this companies? First of all, it's strong order book. So I think that has got a very, very strong, they have got very strong order book of around $800 million, if I'm not wrong with my figures. So that is one of the 880 million, I suppose. Second point, which I am very much liking about this company is that, the industry has got a very high entry barriers, and this company is operating in such an industry. So of course, after looking all these factors, and they have got a very strong expansion programs going ahead. So looking after all these things, my idea here is, yes, this is a very good long-term story to bet upon, but I believe that just wait for the numbers to come in and then make any call in this counter. I think that will be a safe decision. So right now, rather than entering at current point, it's better to wait for the decision. It's better to wait for the results to come in and then take any decision.
All right, okay. So that's the view coming in on Equus. But I think we've got our first caller for the day. Jitendra is calling us from Hyderabad. Jitendra, a very good morning to you. Go ahead, ask your question.
Happy morning to all. I just want to know about Office Space Solutions, bought at 305 levels, 1000 quantity. And the stock have been trading at continuously 298 to 320 levels. Can I know fundamentals and technicals both for short term?
Okay, what is the time horizon that you're looking at when you say short term, Jitendra?
Minimum 3 to 6 months.
3 to 6 months. All right. Then I'll take this up with Swati. Swati, what is it that you're seeing on the charts for office spaces?
Yeah, as of now, my view is little bit cautious in this particular counter because Mahima, from the month of the May itself, we are continuously witnessing a profit bookings and the counter is trading below the short-term moving averages as well. Downside, it has a very cluster support zone of 290 rupees. If it's breakdown, then more selling pressure can be intensified, which will take a stock towards to 260 to 270 levels on the downside. So I will suggest, as of now, you can hold on, but please place the strict stop loss of 290. Since from the last 5 weeks, we are witnessing that the stock got stuck within the range of a 320 to 290. If it's give the breakdown of the support line, then we can witness the more selling pressure. On the higher side, the positive move can be witnessed only once if the stocks gives the breakout of 320 levels, then we can see the upside targets to 360 to 370. So as of now, I will suggest to maintain the long position, but please place the stop loss of 290 rupees on the downside.
Got that view, and thanks so much for that, Swati. But let's go across, take another caller from Vijayawada. And Bindu, who's a regular viewer of the show, is dialing in for a stock query. Bindu, good morning. What's your query?
Good morning. Few days back, I have bought a Cochin Shipyard at 14.05, 50 shares.
Okay.
So I can hold it for like 6 months to like 1 year.
Huh?
So what target I can expect, and I can add more if it dips. So at what level I can purchase more?
Got it, Bindu. Swati, you heard the question. Cochin Shipyard, what's a good time to buy more, and what's the target that you're looking at in the next 6 to 12 months?
Only for a longer term horizon, definitely the view is positive because whatever the rally we have witnessed in 2023 from almost 500, say 250 to 3000 levels, the retracement has been done up to 61.8%. Now, the stock, I believe short term, we might witness more selling pressure into this particular counter. No need to average out at the current market value because your buying price is nearby the CMP itself. Wait for some more time. Any dips towards to 1300 or 1250 levels are the good levels to take a long positions or the average out positions because I believe the stock has manages to maintain the very strong support of 1250 rupees and we will witness a reversal from there onwards back towards to 1500 to 1700 on the higher levels. So wait for some more time. Any dips towards to 1250 or 1300 levels can be utilized to build up the long positions on the downside.
Okay, all right. Swati, the next query is also for you. It's a very, very generic query that we've gotten from Kanti Bhai, who's writing us from Mumbai. He says that he wants to make a swing trade and he wants to know if anything is looking attractive from that point of view. Any particular name that you're looking at right now or from that perspective?
Yeah, on a large cap stocks as of now, if we are looking for a swing trading, IT pack really good at the current levels because those sectors are into the momentum. So I believe one can take a long positions into the Tata Tech. This particular stock is really doing very well from the last few trading sessions, well placed above all the important moving averages, say 50, 100 and 200 TMA. So if you're looking for a swing trading, Tata Tech looks good. The immediate target will be a 790 to 800 rupees. So one can go for a long position into the Tata Tech.
Got that view. But the next question coming in on Anthem Biosciences. Our viewers bought these shares at 746. And this is Praveen from Hyderabad, holding 45 shares. He wants a 2 to 3 year view. So he's bought it very recently. Astha, what would you recommend here? Because had a very good opening, then some cool off, but now starting to find his feet again. Would you recommend a hold and is a good buy for the next 2 to 3 years?
It is one of the very strong CRDMO business which this company is operating right now. And the reason that what we have seen that it has shown a good performance over the time because of the strong financial performance which it has started showing on. We have seen a good growth in the revenue as well as profit after tax, etc. My idea here is on the basis of the strong profitability which they have posted, on the basis of China plus one opportunity which this company is having, and in fact one of the major factor which is really impacting this company in a positive way is its strong client base. So my idea here is yes, this counter is looking good to us. Stay invested in this counter for the price target of 850.
All right. Okay. The next one that we have is on Biocon. Sriram Raghuraman from Chennai is holding around 50 shares at an average price of 396, and he wants to know whether it's a good time to add more of this counter or what should he do. Swati, of course, today we've seen the block deal happening with Mylan fully exiting the counter, and we've seen that spike in the stock also coming in. But from a chart point of view, do you think it's the right time to enter or it's time to actually book your profits?
Now, Mimba, you have rightly pointed out that today we have seen a very positive move of almost 7 to 8% on intraday basis. The chart looks very promising at the current levels because the counter has given very cluster resistance breakout of at around 440 levels, and it's trading here by those levels. I will suggest wait for some more time since on intraday basis the stock is up. Any dips towards to 420, 425 will be the good levels to take a long position, and the immediate target I'm looking for a 460 to 470.
Got that view. But the next one is on Allied Blenders. Our viewer Rao from Vizag is holding shares at 378. He's holding almost 1,500 of them. So currently sitting in massive profits actually at this point of time. Let's look at the 5-year chart because it's been a good run for the company as well. And he stocks up almost 79% listed back in 2024. So this is the data that's looking very good at this point of time. Very strong numbers. But he wants to know if he can still continue to hold this Astha, or is it a good time to book profits? What would you recommend? Because the whole Alcobev space continues to be in focus. Valuation is also rich. How are you looking at it? Since he's got it at such a good price, should he just continue to hold?
We all know they have got a very strong portfolio, and it is like one of the third largest IMFL manufacturer in India. And their portfolio is very strong. Now, what has driven these stock prices till now is, I suppose, the kind of financial which it has posted, especially their revenue growth, operating profit, etc. Now, what can be the future driver? I think the future driver can be the backward integration which this company is doing, because they are now into the PET bottle manufacturing also. So I think now with this backward integration, definitely the company will going to have a strong benefit in their financial performance going ahead. So my idea here is there are the reasons why the stock has shown a very good jump, and in the future also there are certain reasons which can make this attractive counter to remain invested in. So just book partial profit or 1/4 of the quantity in case if anyone wants to book profit. Otherwise, my idea here is stay invested in this counter for the price target of 700 and above.
All right. Okay. 700 above is the target price for Allied Blenders that Astha is penciling in. But the next one that we have is on Raymond Realty. Our viewer Surya from Hyderabad has bought around 1,000 shares at the levels of 630 from a long-term perspective is what he's saying. And he wants to know at this juncture whether he can continue to hold, book profits, wait for Q1 earnings to come out. Astha, I'll stick with you for this one. He's sitting on profits of over 83,000 rupees. Should he continue to hold?
So yes, one should remain invested in this counter because we all know that it is a very strong real estate play, especially they have got presence in the Mumbai metropolitan region like Thane, Mumbai, West Subs, Wadala, etc. So now idea here is, yes, this is the counter because the company is having their own land for the development first of all, and in fact they are also doing some sort of a joint development also. And now the kind of demand we are getting in the residential sector is especially in the MMR region is going to benefit company in the long term, and in fact they have shown a very strong sales growth also apart from the project pipeline which this company is having. So idea here is stay invested in this counter for the price target of 800 and above.
Got that view, but let's go across back to Hyderabad. Shankar is now dialing in for stock query. Shankar, good morning to you. What's your query?
Good morning. Yeah, my query is I have 300 shares of New India Assurance Company Limited, NIACL. I bought it at 182 rupees. Now it is also quoting at the same price. Recently it had gone up by 20%, up to 210 rupees. I did not sell it with a short time investment perspective. So my question is, should I continue to hold, hoping to rise it again to 210 levels, or I should sell it now?
And did you buy this with a fundamental view or more of a technical view on the charts as well, Shankar?
Yeah, you're right. Technical view.
Technical view. Okay, got it. Swati, we did have, and as Shankar highlighted, those two bouts, right, on April 13th and June 22nd of big moves on the stock. What are you looking at in terms of the price performance? Should he continue to hold? What's the target?
The performance is really doing very well. Whatever the rally we have seen in the month of the June, 145 to 218 levels, the profit booking cannot be denied after such kind of a rally. Now the stock has retraced its almost those rally and taking a good support of 50 DMA as well. I believe down on downside 174 is acting as a crucial cluster support zone. So as long as it's maintained those levels on the closing basis, the view still remains a positive, and the immediate target or a bounce back rally can be witnessed up to the 190 to 200 levels. So I will suggest to hold on this particular counter, but place a stop loss of 174 rupees on a downside.
All right. Okay. The next one that we have is coming in on Paytm. Shrikant from Hyderabad has got 100 shares, and he says that he's been holding this since the IPO price of around on an average of around 1376. He says that the stock has finally touched his buying price today and wants to know if he should exit or continue to hold. Swati, if you take a look at the charts, there has been a good up move since the breakout for this one. Do you think it's poised for a better up move from here on, and he should continue to hold to see some profits from these levels?
See, in the Paytm from the last 2 years, we are witnessing a very strong positive momentum. Though the clients bought at a very higher levels and the levels has been touched today, I believe that the stock has on the verge of giving the breakout of those levels. 1380 to 1400 are the crucial levels we need to keep eye on. If it's maintained those levels on the closing basis, then the new trend will start from here onwards, which will stock take back towards 1600 to 1800. Those are the targets I'm looking forward. But if you're looking for a longer term horizon, definitely you can keep the long positions, or else maintain the strict stop loss of 1320. If it's break those levels, then again we might witness some sort of a profit booking, which will take a stock back towards to 1200 as well. So if you want to hold for a longer term horizon, you can definitely hold, or else maintain the stop loss.
Got that view, Swati. But viewers, as well as Swati and Astha, it's now time for the rapid fire round in this edition of the show. You both know the drill. First question coming in from Mr. Sugunakar. He's been holding on to, he actually was holding on to Bank of Maharashtra, Asta. He bought it at 53, sold it at 90 though. Asking if it's a good time to re-enter. Would you recommend that?
Re-enter at the lower prices of around 75 to 73.
Okay, the next one that we have is coming in, and this is from Siddharth, who's writing us from Noida, asking about Kim's Hospital. He's bought at the levels of 823. Good technical structure for the next 2 months is his question. Swati?
As of now, my view is a little bit cautious on this particular counter, because given a breakdown of 20 DMA, I will suggest to sell on rise at towards to 810 to 820 levels.
Okay.
The next one coming in is on JSW Steel. Our viewer Murli Ram has bought shares at 1274, asking what he should do with this counter now. Astha, it's trading near his buying price, but should he continue to hold or sell out?
Continue to hold this counter for the price target of 1300 and above.
Okay, the next one that we have is on Markson's Pharma. Our viewer wants to know if this is the right time to make a fresh entry into this one. Swati, what would you recommend?
No, I will not suggest at the CMP. Any dips towards to 250 levels can be accumulated at those levels.
Biswajit from Kolkata is holding on to LIC Housing Finance at 578. Astha has been holding on for a year. Stock's been underperforming. Should he exit?
Exit, but not at the current level, maybe at the level of around 600 or so. So we can see some higher prices from here.
Okay, the next one is on Zentech. Murli from Hyderabad is holding 10 shares at the levels of 724. 1 year target is what he wants to know on this one. Astha, what would you recommend?
Zentech is looking very strong to us. From 1 year perspective, definitely a hold with the price target of 2000.
Got it. Pawan Kumar from Andhra Pradesh is holding on to 50 shares of Tata Motors at 350. Asking a longer term 4 to 5 year view. Astha, what would you recommend? Should he continue to hold or switch out to some other auto player?
It is a good auto investment to go ahead with, so there is no worries in that. Remain hold this in this counter with a price target of around 360 to 380.
Okay, NMDC is the next one. Saurabh Shah from Mumbai is holding 1000 shares at the levels of 89. He wants to know whether he can continue to hold, book losses. Swati, what would you recommend on the charts?
No need to book the losses. Definitely reversal can be seen towards to 90 rupees. So hold your long positions. If possible, maintain the stop loss of 80 rupees on a downside.
Raja is holding on to Bajaj Electricals at 1017, Swati. He's owning 15 shares and asking if he can still continue to hold because he's in massive losses right now. What would you recommend?
No need to book the losses. Wait for some more time. Bounce back rally can be witnessed up to 360 levels, so you can hold on the long positions.
NSTL is the next one. Raviraj Joshi says he's got this since IPO. Should he continue to hold this one from a long-term perspective? Astha, your view?
Definitely, right now it is into the duopoly market and it has got a very strong hold as well. No worries. We'll continue to hold this counter with the price target of 950 at the initial levels.
The next one, and I think we have about 4 queries on MTAR Tech. Swati, Mohan, Pam, Mahesh, all of those people want to know about MTAR Tech and what's the short-term view on the stock.
Short term, we will be a little bit cautious. We are likely to witness a selling pressure which will take a stock towards 6200 or 6100. So try to avoid the long position. If you have, book the profits in this particular counter.
Okay, the next one is on IRFC. Our viewer Jitendra has bought it at the levels of 91 and he wants to know whether he can continue to hold this one or not. Swati, on the charts?
I will suggest to hold on because the counter is sitting at a lower level. A bounce back rally can be expected towards 92 to 95 levels.
Okay.
Okay, got it. Hopefully, Vamshi, that answers your question as well, who had asked us about this counter. But the next one coming in, and this one's on NMDC at 85. Gaurav wants to know a technical view, Swati.
My view in the NMDC is particularly positive because the counter is giving a bounce back rally. Up to 90 to 92 levels can be positive move witness. Downside 83 is a stop loss.
Got it. Well, that was the last question of the rapid fire on this edition of the show. But stay tuned. A lot more stock related queries on the other side after this very short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and as you look at the markets as well, because the broader market pain is continuing at this point of time. But when you pull up the Nifty 50 as well, we are starting to see just some moves, but not too apparent. So yesterday, as we saw the whole kind of correction being bought into, we haven't seen all those signs visible as of now. Still continuing to trade that just almost 80 points downtick on the Nifty 50 as well. Let's also look at the advanced decline ratio, and if that has improved in the last half an hour, about I think 700 odd advances, slight inch up to 800 now. But the broader market pressure continuing at this point of time. Mid cap, small cap also showing you that pressure right now. The mid cap, the small cap is down much more than the mid cap index right now. But in terms of the individual movers, there have been plenty today in terms of the BSE 500 too. Jindal is continuing with its up move, yet another 12% move. Nuvoco Vistas on the back of good quarterly earnings is also up 8%, while Biocon, despite that block deal, is continuing to be up 7.4% right now as well. Concor up 4.8% is another good counter right now as well. But let's go back and take your stock related queries. Astha, the next one that's coming in, it's on Bluestone. Wondering how you are viewing that counter right now, if you can buy it at the current price as well. What's your opinion? Astha, I think you're on mute.
Am I audible now?
Yes, you are. Yes.
So it is one of the, omni-channel jewelry brand. And the key strength about this company is their online jewelry catalog, which seems to be very, very distinct from the other. And what we have seen over the period of a time, that they have shown very strong growth in their financial performance. And in fact, there is one unique point about this company is that they are differentiating their brands in the form of the design. So their design is really, really differentiated, and it is targeted to youth. So my idea here is this is one of the different stories which we see as compared to the traditional jewelry manufacturers. And hence, we believe that it can be a good long-term story to bet upon on the back of the expansion plans of their stores also, which is going on right now. So maybe it can see some sort of a dip due to the high valuation, but in the long term, it can move upwards. So those who have this counter in their portfolio should remain invested in with a price target of 650 to 700.
Okay, all right. The next one that we have is coming in from Sai Reddy, who is writing us from Andhra Pradesh, asking about Fino Payments Bank. He says that, is this a good hold for the next 3 to 5 years? He bought it at the levels of 129. Or should he exit right now is his question. Astha, what would you recommend?
So I think they have got a very, strong merchant network, and we know that this bank is have a very strong technology-led business. Now, what is major attraction about this bank is first of all, this is a small finance bank transition is what can be the one of the major for this company or this bank. And in fact, they have got a very, very strong opportunity in the kind of industry they are working on, because the kind of capital position this company is riding on right now, it is very much adequate. And I believe that this is one of the counter we should see from the long-term perspective. The only point is about the valuation, because we are seeing that this counter is continuously rising, especially since last few days. So just enter into this counter the lower point of the time if anyone wants to make a fresh entry on. And if anyone has this counter in their portfolio, remain invested in for the price target of 200 and above.
Got that view. But the next question coming in on DCB Bank, our shares and Santosh is holding these shares from Kochi at 185 odd, asking what he should do with this counter for the next 3 months. Swati, would you recommend that?
To hold on this particular counter, because well placed about 20 DMA player trading in the high tops, high bottom formations. Even in this kind of a market also, it's showing a strength. The price is moving ahead along with the volume. So hold on this particular counter downside. It has a very good support at 184 rupees. So keeping that as your stop loss, I believe the stock has a potential to reach up to 205 to 210 levels on the higher side.
Right, okay, the next one that we have is on Tata Steel. Murthy from Vizag is holding 250 odd shares at the levels of 198, and he wants to know from a 6 months perspective what could be the target that he can expect on this one. Swati, your recommendation on the charts?
Yeah, as of now, we are witnessing a very consolidation phase into this particular counter, trading in the range of a 184 to 190 levels. 190, 192 levels are the crucial levels we need to keep eye on it, placed by the 20 DMA. Once it manages to give the breakout, a positive move can be witnessed, which will take a stock towards to 205. So I will suggest wait for some more time. We are definitely witnessing a very positive move from here onwards towards 205. Hold your long positions. If you want to place any kind of a stop loss, 184 is the immediate support levels. You can keep that as a stop loss and hold the long position.
Got it. Well, let's go and take another caller now from Chikmagalur, and Suresh is dialing in for a stock-related query. Suresh, very good morning. What's your query?
So very good morning. I would like to have a view on EMS companies which I can enter now for a long-term perspective.
Okay, for the long term.
Which are having good valuation and aptly priced.
Okay, I mean, it's an EMS space, so I don't know if it's aptly priced at this point of time. But Suresh, so you don't have any stock in the EMS portfolio in your portfolio right now, correct? And you want to take exposure?
Yeah, definitely.
Okay, got it. Well, Astha, we've seen some move on Dixon already from the lows. Sirma continues to be one of the most outlier stocks right now. But anything that you like from the long term in the EMS space, even at these valuations, what would be your top pick?
So there are different companies. If we talk about Dixon, it is into the mobile and the consumer electronics. If we talk about Keynes, it is into the industrial and automotive, defense space. If we talk about Sirma SGA, then they are into the RFID and automotive. So, this whole space is having different type of product categories and different kind of businesses which they are targeting on. Right now, my idea here is I'm still liking Dixon Technologies. And I believe that if anyone want to go into this space, then Dixon Technology. In fact, I'm also considering data patterns also in this space because of the defense electronics, which this company is manufacturing, that is data pattern. But I would like to go with the sector leader, which is Dixon Technologies. And I think it is one of the largest EMS player in the industry. And they have got a very, very, strong relationships, and their mobile manufacturing capacity is huge. So would like to go with Dixon.
All right, okay. The next one that we have is on a very interesting name because it's been an up move since its listing. Gaudium IVF is what I'm talking about. Our viewer Ahmed from Delhi has got 200 odd shares that he bought it at the levels of 100 rupees 3 months ago, and he wants to know as to what should he do going forward. Should he continue to hold, maybe buy more at the current levels? Astha, I'll come to you on this one again. What is your recommendation on this particular name? Because today also it's touched its 52-week high.
So there is only one factor which this company is enjoying right now, that there is no other listed pair in the acceptable by the people, and in fact this industry itself is be acceptable by the people, and in fact this industry itself is growing on a very, very strong note. The major positive about this industry is the kind of margin this industry is enjoying. If you just go through their operating margins, strong operating margin. But this company is enjoying just due to the fact that there is no other listed space. Otherwise, I think there are various local IVF players which are posting very, very strong side of a number. For example, Indra IVF, although the IPO is about to come, it has not still. But if you go to if you just read that RHP, Indra IPO has got a very, very strong specialty. This IVF industry is mainly depending on the number of cycles which a patient undergoes. So there, Indra has got an edge only in the 1 or 2 cycle maximum. They just, get their patients conceived. So here, this Gaudium IVF is enjoying just only one thing, that is scarcity of another players. So just, I think, stay invested in this counter for a few more upside unless there are other players which start coming in. So till that time, it is looking good to us. So stay invested in this counter.
Got that view, Astha. But अगला सवाल और अगला कॉलर जो है वो अहमदाबाद से है. नितिन जी ज्वाइन कर रहे हैं एक सवाल के लिए. नितिन, बहुत बहुत धन्यवाद कॉल करने के लिए. कैसे मदद कर सकता हूँ आपकी?
सर, मेरे पास 1500 क्वांटिटी है डॉक्टर मोफन लैब्स की. एंड 62 पे, और मेरा क्वेश्चन आस्था मैम से है, तो प्लीज मुझे मैं लॉन्ग टर्म के लिए होल्ड करना चाहता हूँ.
ओके गॉट इट। आस्था, नितिन जी ने मोरपेन लैब्स लिया है, वैसे ईयर टू डेट काफ़ी अच्छा मूव रहा है, स्टॉक का 50% की गेन रही है, बट उन्होंने अभी रिसेंटली लिया हुआ है, 60 to 63 का भाव चल रहा है। क्या आप रेकमेंड करेंगे उनको होल्ड करना चाहिए लॉन्ग टर्म के लिए?
होल्ड करना चाहिए, और इसमें एक ही चीज गेम चेंजर हो सकती है इस कंपनी के लिए, क्योंकि ये अब मेडिकल डिवाइसेस बिजनेस में भी उतर रहे हैं, जिसमें ग्लूकोमीटर्स वगैरह और डायग्नोस्टिक प्रोडक्ट्स ये लोग स्टार्ट कर रहे हैं। क्योंकि देखा जाए तो ट्रेडिशनली एपीआई बिजनेसेस को इतनी ज्यादा वैल्यूएशन कभी मिलती नहीं है, और हमारे पास बहुत सारे प्लेयर्स सेम इंडस्ट्री में है। तो अगर इनका मेडिकल डिवाइसेस बिजनेस में कोई भी इंप्रूवमेंट हमें देखने को मिला, तो मुझे लगता है कि वो एक गेम चेंजर हो सकता है। दूसरा, इनका एक्सपोर्ट प्रेजेंस भी काफी काफी अच्छा है, और कैपेसिटी जो मैन्युफैक्चरिंग है वो भी काफी स्ट्रांग है। तो बने रहिए इसमें, नतीजे हमें जरूर इसमें एक बार ट्रैक करने होंगे, और मैं अभी तो इन्हें बने रहने की ही सलाह दूंगी। 63 के आसपास चल रहा है, 68 से 70, 68 से 70 तक के लेवल्स हमें देखने को मिल सकते हैं।
Okay, all right. So that's the view coming on Mopen Labs. The next one that we have is for you, Swati, specifically. Our viewer Anil Singh is looking to buy Aurobindo Pharma, and this is from a short-term perspective that he wants to make an entry into this one. What are the charts suggesting? Is this the right time to enter? Is what he wants to know. What would you recommend, Swati?
If you're looking for a very short-term period or the swing trading, definitely this particular counter looks interesting. Pharmas are and the healthcares are into this particular counter. We are witnessing a positive move. And even though the market is correcting, this particular stock has witnessed that it is showing a very strong support nearby 1540 levels. So by keeping that as a stop loss at this 25 points stop loss, I will suggest to go for a long at the CMP, looking for a target of 1620 to 1630 levels on the higher side.
Got that view, but let's go to another caller now from Pune this time. Varun has a stock query for us. Varun, very good afternoon. Very good morning, actually. What's your query?
So good morning.
Yeah, Varun, we can hear you. Go ahead. I think we can't hear him right now, but let's take that stock related query still. He's been holding on to RBL Bank, bought at 280 odd, and sitting on good handsome gains. Would you recommend Asta for him to continue holding at this point of time?
Yes, I would recommend this counter because first of all, their asset quality has started showing improvement with around 1.48 GNPA, 0.39 NNPA, and this entry of NBD, Emirates NBD will definitely help this company, because it is a major trigger for this company in the long term. So I believe that this is a counter which one should remain invested in. Advances has shown very strong growth along with the deposits as well. So remain invested in this counter, and the price target can be set at the initial level 410 to 415.
All right, so that's the view coming on RBL Bank. The next one that we have is on Syngene International. Nivendu Sharma from Patna is holding around 100 shares that he's bought it at the levels of 636, and he wants to know from a long-term perspective that is anywhere between 1 to 3 years, can he continue to hold this one? Now, because Asta, his buying price is quite high, what would you recommend him?
Buying price is really very high, so just hold this counter. Let's see how the numbers come in, because it is one of the very strong CRDMO player, and the CRDMO sector or industry as such has got a huge opportunity. Apart from that, what is major focus of this company is that their client base is very strong. They have got a very strong client base, and in fact, their manufacturing facilities they have got an integrated manufacturing facility, which is a real advantage for the company. So right now, just stay invested in this counter. Let's track the numbers and then make any sort of decision into this counter. Till then, remain invested.
Got that view, Astha. But the next question, between LG Equipment and KEC International, what's a better pick is what Jayashree is asking on the charts. Swati, do you like either of those? What's your view?
I will, as of now, I'm not very much positive into this particular counter, so we'll suggest to stay away from those because the technical setups are not really good. Apart from this, you can bet on the another mid-cap counter such as Redington looks good, Imagica really looks good at the CMP. So try to encash on those counters.
All right, okay. We've got our next caller. Kiran Kumar is calling us from Hyderabad. Very good morning to you, Kiran. Go ahead, ask your question.
Yeah, hi, good morning. I'm a regular viewer of NDTV Profit, and it's very good that I'm a part of NDTV Profit. Just recently, 4 or 5 days back, I bought Title
Okay.
with the price of 4568.
Okay.
4569. The day I bought, it's in the loss only. I could not get the 1 rupee profit in that.
Okay.
So the thing is, should I hold or shall I? What should I do, and what will be the long purpose if I keep it like that? It will be growing, or what is the status of that?
Okay, Kiran, got your question. I'll take this up with Astha. Astha, I think he would have bought it around those announcement of business updates coming in. Of course, it was a strong one, but we're also waiting for the results to come in the fine print. What would you recommend him, though, from a long-term perspective? Titan is a good hold.
So it is one of the few Indian companies which has set a very strong, segment business, whether we talk about eyewear, jewelry, watches, etc. And in fact, now lifestyle products is also becoming one of the part. Now, what is the major focus of this company? They've got very strong ROE, ROCs ratio. Now, what can be the future driver for this company? I believe this Damas acquisition, which is, they have done. And this Damas acquisition will help to have access to the GCC markets. So I think that could be one of the growth driver for this company right now, and we should look after that, how this acquisition will beneficial to them. So right now, just stay invested in this counter. This is what I can recommend. And if everything goes well, then definitely we can see this counter moving till the level of 4,900 to 5,000.
Got that view, Astha. The next one on CESC, Sayan from Kolkata is holding shares at 179. He's holding 900 of them, Swati. Wants to know short-term view on the counter. Has been in that kind of like a depressed range, right? Between that 150 to 200 odd range for a very long time. What's your view?
See, as of now, we are witnessing a retracement from almost 205 levels. Now the count is trading at 160 levels. I believe that it is now about to enter into the oversold zone. We might witness some sort of a support zone formation nearby 155 to 158 levels. So wait for some more time. Hold your long positions, if possible, average out positions whenever the counter comes nearby 155 levels. A positive or a bounce back rally can be expected towards to 175 to 180 levels. You can hold on the long positions.
All right. Okay. The next one that we have is from Kaushik, who's writing us from Vadodara, asking about the SBI IPO, and he wants your view on this one. Astha, if at all, and I'm sure that you have studied this one. Any view?
View is positive, of course, and we are recommending subscribe to this IPO. So yes, SBI Fund Management, because what we know that their CAGR growth is one of the highest one. In fact, the kind of operating margin this company is posting, I mean, it is among one of the highest. Although ICICI Prudential is one of the company which is ahead of that, but still, I believe that SBI Fund Management is one of the counter where one should deploy their funds in the IPO. So yes, asset management business is very strong, and we believe that the price to earning multiple at which they are coming at 38, I suppose, is looking okay in comparison to other players. So maybe some gains can be witnessed on the listing day as well.
Correct. Let's go across and take another call from Hyderabad. Bhaskar has a stock query for us. Bhaskar, very good morning. What's your query?
Good morning. I'm holding GE Vernova T&D.
Okay.
25 shares at a price of 4,550. I want to know the technical from Swati.
Got it. Swati, good, very good move, of course, from the lows, but very expensive now on valuations. How are the charts suggesting?
See, Puneet, definitely you pointed out from the last 2 to 3 trading sessions, we are continuously witnessing a profit bookings. I believe the stock is probably will take a good support nearby the 100-day moving average. Some more selling pressure can be seen, which will take the stock towards to 43.50 levels. Wait for some more time for a longer term horizon, at least short term, medium 3 to 6 months. My view is positive. We might witness a strong bounce back rally towards to 4,700 to 4,800 levels. So hold on to your long positions, wait for some more time and keep the patience in this particular stock.
All right. Okay. The next one that we have is from Sudhakar, who's writing us from Hyderabad. He's holding around 250 odd shares of Apollo Microsystems that he's bought it at the levels of 421. He says the stock has not been moving much since he bought, and he wants to know whether to continue to hold or exit. Swati, I'll stick with you. Your view on the charts?
I will be a little bit cautious at the current level, Mahima, because on the daily charts we are witnessing a negative divergence, which shows that we might witness more profit bookings from the current level. And the counter is just from the last few trading session is forming a low top, slow bottom formation, which is the concern point. It has given the breakdown of the 20 DMA as well. The volumes are increasing along with the price momentum on the lower level. So I will suggest to exit your long if you are getting any high towards to 400 to 405 levels, or exit at the CMP as well. I believe the stock will find out a downfall towards to 380 to 370 levels. So exit your long position at the CMP or any rise towards to 405 levels.
Got it. Well, it's now time for the rapid fire round in the second half of the show. Swati as well as Astha, you know the drill. First question is coming on an urban company. Raju is holding shares at 126, but he's holding 10,000 shares. So it's a massive quantity he's holding. What would you recommend here? Astha, he wants a 2-year view. And should he resize his position a little bit?
So I think urban company from the 2-year view perspective is positive, and I don't recommend any sort of resize at this point of a time. Just stay invested in the quantity whatever he has bought.
Okay, the next one is on Inox Wind. Arun from Tamil Nadu has got 136 odd shares at the levels of 85. He wants to know from a long-term perspective, continue to hold. Astha?
Yes, Inox Wind from the long-term perspective is hold with the price target of 88 to 90.
Chennai Petro bought at a 932 by a viewer and wants to know if she should hold on or sell out. Swati, what would you recommend?
Partial profit booking as recommended at the current market price. Second partial you can hold on by maintaining a stop loss of 1,070 rupees on the downside. A pullback rally can be expected up to towards to 1,170 to 1,200 rupees.
Okay, E2E Networks is the other one. Sunita from Hyderabad wants to know the short-term targets and stop loss on this one. Swati?
In this particular counter, view is definitely positive. On the higher side, it has a potential to reach up to 440 levels, and downside it has a very good support at around 380.
Sohail from Jaipur wants to know if it's a good time to enter Aether Energy. Astha has been a very stupendous rally, very strong sales growth, but is it a good buy even at this price?
No, at the lower level of around 1150 to 1140, one can enter into the.
Okay, Azad Engineering is the other one. Can I enter right now is what our viewer wants to know from a medium-term perspective. Astha?
I would recommend Azad Engineering as a entry level is a lower level from here. So right now, don't enter into Azad Engineering. Maybe at the lower level of 2300 to 2250.
Prashant is asking us a question on MTAR Tech, and Prashant, we answered that question, but he's also asking on Zen Tech. Swati, on the charts, what would you recommend on Zen Technologies?
Zen Tech, as of now, we will likely to witness some sort of more profit booking, which will take stock towards to 1720. So try to exit your long positions at the CMP. Any dips towards to 1700, 720, you can again take the long positions.
Okay, the next one that we have is from Seema, who's asking about Balrampur Chini Mill. She wants to know the short-term targets and stop loss on this one. Swati?
My view is positive in this particular counter. Definitely you can hold on the long position. Immediate target will be 620 to 630 levels, and the stop loss you can keep down at 580 levels on the downside.
Also, Swati, on Senco Gold, what's a good target for the next 6 months is what Asma is asking from Bengaluru.
In this particular counter, we are witnessing a very positive move as of now from the last few trading sessions. The immediate upside target is 410 to 420 levels, and downside it has a crucial support at around 370. So you can hold on the long positions by maintaining a profit stop loss of 370 rupees on the downside.
Okay, Shilpa Medicare is the other one. Sumana from Dubai is holding 100 shares at the levels of 613. Astha, what's the view on this one?
Shilpa Medicare, I think one should remain invested in this counter for the price target of 720 to 740.
Got the next one's from Rohit Jain from Bengaluru. He's holding on to 100 shares of Reliance at 1300 Astha, asking if it's a good time to buy 500 more. What's your strategy?
At the lower level is what I recommend at this point of time.
Shakti Pumps, is this the right time to enter from a 1-year perspective? Jay from Coimbatore is asking this. Astha?
From 1-year perspective, a hold is recommended. Buying at a lower level is recommended for this company.
Tata Tech bought at 944 by Arun, so he's bought at elevated levels here. Astha, asking if he should average down. We've seen good Q4 and I think a good agreement recently with Tenneco. I think that's what's propelling the stock, but should he average? What should he do right now?
Averaging, but not at the current level. Maybe at the level of 740 to 735, one can do.
Got it. Well, that was the last query of the rapid fire, as well as this edition of Ask Profit Asked, as well as Swati, thanks so much for joining in and helping us solve 57 stock related queries in just the last 1 hour. Appreciate your inputs, but viewers, out of time on this edition of the show. Thanks so much for joining in. Stay tuned. KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
यही है वंदे भारत.
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, great stories, and also is there any alpha to be made for your portfolio? I get you all those details. But let's start with the company for today. I'm going to give you some hints, try to understand. And the first and the biggest hint is it's India's one of the largest value fashion retailers. Only 2 or 3 names are there which will come in your mind. I'm sure you're about to guess that. The stock is up 17 times in the last 5 years. It has been a multi-bagger. Third hint, valuations are cheapest amongst the peers. If you have done a little bit of analysis by now, I'm sure you'll be able to guess that. And if they target to open 2,500 stores and then they move into a new format. But the company in focus, it starts from V, but all its peers also name starts from V. The company in focus is V2 Retail. This is what I'm talking about. We'll try to understand why are we calling this company. Company came out with its annual report. It was pretty interesting on its pillars of growth. Q1 numbers had come in, especially the SSG guidance. Is there any moderation at play? Are the value retail stocks out of flavor, or is there some more juice left? The growth and expansion plans for FY27, especially in the south and western regions. How are the consumption trends looking like in tier 3 and tier 4 segments? We'll try to decode that, or is there more competition at play? That's the big question to be asked. And the margin and the revenue outlook for the next 22 to 3 odd years. That 28 to 30% margin is the sweet spot the company is targeting. And of course, the working capital inventory situation, they have taken some adverse decisions in March quarter. Why have they taken that? And is that an overhang in the stock? And of course, the growth triggers ahead for the company and the industry as a whole. That will be our conversation for V2 Retail. At the second generation, Akash Agarwal, whole-time director at V2 Retail, will be answering our queries. Pretty interesting, right? Let's understand the business of V2 Retail, what this company is all about. And of course, it's India's one of the largest value fashion retailer. It was founded in the year 2001 by Ramchandra Agarwal. There was, of course, a little bit of operational losses, restructuring, and then we had the V2 Retail brand. Right now, the footprint is almost 40.7 lakh square feet spread across 381 stores. Strong presence they have in the north and the eastern India. Of course, the first shop which they opened was in Jamshedpur. That's interesting. The target customers are the new middle class population in tier 2 and tier 3. That's where everybody is rushing in, to be honest. Private level business contributes roughly 90% of the revenue, and that is where they have the control over the supply chain system, if you try to understand that, and that is where these companies get their bargaining power. They are targeting 28 to 30% of the margins right now. They haven't changed that. I saw that in the annual report. They're targeting 2,500 stores before any new format comes. So that's a significantly long way, to be honest, from the current numbers. But revenue mix kya hai? Men's generally have on the higher side. 41% of that revenue comes in this segment. And if you look at the ladies segment, that's around 28%. On the lower side is, of course, kids, and very minimal is the lifestyle segment. But of course, these two segments have higher margins also and a better pricing power. What's the dhanda? Store economics. That's one of the most important things to understand. ये धंधा आता कैसे है, कितना खर्चा होता है, कितना payback period होता है. तो सबसे पहले the break even that comes in at almost 500 rupees per monthly sales square feet. It's a very interesting point. Also, the new stores open at an average of 700 to 750 rupees per square feet, if you try to understand. And the new stores are EBITDA positive at store level from the first month itself. तो इसका धंधा आप समझिए धीरे से कि होता क्या है. Of course, there are some cyclicals at play as well. If you invest 2.5 to 2.6 crore per store, the payback period comes in at roughly 3.5 years. And if you talk about the long-term maturity, that takes 3 to 4 years. This is the store economics for V2 Retail, or the dhanda as we put it. And when you understand this, then you realize why the company is taking bigger decisions. Q1 number was largely in line, but you see, look at that 58% revenue growth coming in, and the SSG growth. That is where the street is looking, and they want more. Dil mange more. 7.5%, not so much. That's what the street has estimated. The peers have done slightly better as well. If you look at the other numbers, they opened almost 57 new stores and closed one store during the quarter. Apart from this, an interesting data is the monthly sales per square feet. That stands at 886 rupees. A little bit of moderation coming in, but consumption में impact आता है अगर महंगाई रहती है तो. Company में क्या हो सकता है? What are the positive reactions we can expect? Why things may work out. Strong expansion is at play. There's a significant headroom, to be honest. The ROC, ROE numbers, they seem to improve as well, and each year they have shown a good improvement. I'll get you those numbers in a while. Interestingly, DIFI, the smart money, is increasing their participation. एक साल में तो हमने देखा ये change आया है. Also the private level focus, and that is where I feel that they have a pricing power, and also in their supply chain management there is a bargaining power at play. The valuations are quite attractive versus the peers, which I like. I'm going to give you the detailed analysis with their peers, but in a short time. So these are the key reasons what may work, but there are concerns also. What may not work for the company? The moderation in SSG growth. The street wants higher growth rates, and if that doesn't happen, the valuations crash. Inventory days and the net working capital, that's on the higher side. Have they done it purposefully in the March quarter? We'll try to understand that from the management. The sales per square feet, there is a moderation coming in. So that will be a little bit of concern if you track the operational parameters, and lack of analyst coverage. Agar story itna strong hai, to analyst coverage kyun nahi hai? That's a little bit of concern. And more competition, local e-commerce segments, tier 2, tier 3 में भी options बहुत आ गए. सबके पास phone है और बहुत सारे options हैं, and so that is why the concern might be there for V2 retail. But let's understand the KYC setup of the important ratings which will judge the company in income statement, balance sheet, cash flows. We'll get you all that. But today, return ratio की जगह मैंने operational parameters लाया है. Very interesting. I'm going to give you all the 360-degree analysis on that. Shareholding, street trade, and valuations. We are going to compare that with V-Mart as well as we retail and the outlook for the company. Let's start with the income statement, and if you look at it, the long-term picture is pretty strong. 3-year CAGR numbers pretty much 50% up when it comes to the top line, almost 80% up from the EBITDA. Even from the PAT, we see a good momentum coming in. Q4 numbers have been largely strong. The YOY numbers, if you see, there has been a significant up move. But yes, remember, inventory concerns thoda sa zarur hai. But the way the margin story is going up, it is significantly holding and doing well. For a value retailer, this is a really good sign. So numbers is pretty strong, but will the growth sustain? That's what we'll try to understand. But right now, it's a strong thumbs up when it comes to the income statement. Let's talk about balance sheet. Balance sheet, a little bit of stress is coming in, especially on the borrowings front. If you look at it, that's on the higher side. Thoda working capital ratio में भी थोड़ा सवाल उठता है, but ये धंधा ही ऐसा है. This is how the cycle happens. So you need to understand and think a bit long term when you analyze these numbers. And as of now, it's a neutral rating as well. So we spoke about income statement. We spoke about your balance sheet. Let's try to understand the cash flow segment. In this cash flow segment also, if inventory ratios are having some issues, then of course this will be impacted here also, and that is why we are seeing a downtick cash flow from the operations as well. So largely there is a mixed views coming in when it comes to the cash flow segment. कभी lumpiness आता है, कभी नहीं आता है, कभी inventory model रहती है, तो कभी उसमें change आती है. So these things you need to understand if you're analyzing a company. So I'm going to give this a neutral rating for the cash flow segment. So operational parameters is pretty much interesting. Last 3 years data I've taken, and I've taken four important ways to look at the thing. Inventory days, that is going up from 131, it has gone up to almost 136. This is not good. This is negative. ROE on the other hand, if you talk about it, and that has improved 11% से ये बढ़ गया है 30% के ऊपर, almost 30% आ गया, and store count has been really strong. Look at it, almost doubled up from FY25 to FY26. Sales per square feet, if you talk about it, that has actually moderated from 1000 to almost 925. So it's a neutral rating. कुछ positive है, कुछ negative है, कुछ खट्टा, कुछ मीठा. So it's a neutral rating when it comes to the operational parameter. But shareholding, let's see what's the story there. FIs and DIs are just looking at the numbers, how things are panning out. Slight fall coming in the stake of the FIs. Remember, the promoter stake has fallen because of a QIP raise, but DIs, look at that lapping up happening. It's almost 9%. And from March 25, just looking at the last 1 year, both FIs and DIs have started accumulating the stock, and we can see that in the shareholding, and this is positive. So this is a strong thumbs up. But let's talk about the street cred, how much returns have happened. And if you're a long-term investor, congratulations, you have made tons of money. 17x is the returns for the last 5 years for this counter. Even from the correction which we saw this year from Jan lows, the stock is up 23%, and from June highs till now, there is a way to go up from now current levels also, and that's where I'll come on the valuations. It's still down 14% in last 1 year, decent 18% odd returns. So for the street cred, most of the parameters I feel is strong, so I'm going to give this a thumbs up as well. Let's talk about valuations. Is there any valuation left? We have taken 3 value retailers here and try to understand. This is of course Vishal Mega Mart, and these are the 3 companies, and it is still the cheapest if you talk about the 12-month forward P ratio coming in at 27 times. Now compare that with the other peers which are on the higher side, almost 30 to 50% of a valuation premium coming in. That means the risk reward ratio abhi bhi acha hai is counter mein. Let's talk about the last rating. That's the outlook segment. What is the overall momentum looking like? And they have stated the FY27, the momentum will be strong. They have taken inventory adjustments also, and that might be a strategic move from the management. Data-driven merchandising and differentiated product offering. This is largely the strategy-based moves. Of course, we have mentioned you about the financial outlook going ahead. They're targeting 170 to 200 new stores towards that 500 store network. And then eventually in the future, they'll go for that 2,500 mark. 30 to 40% of store openings are in the newer regions. We have already explained to you that in the north and east, they have a good coverage, and 50 to 60% stores will happen in the core strongholds as well. That's what I had mentioned to you, and the private label control is there, from which almost 90% of revenue is contribution. But short-term issues to zarur hone wale. Isliye, outlook I have given this a neutral rating. So let's revise the entire ratings for KYC, for V2 Retail. Where does the company stand and what's the story looking like? Of course, income statement is pretty strong, but largely neutral perspective coming in for the counter. But one thing I really liked is the returns which have been given to the shareholders. And right now also the risk reward is quite favorable, and the DIs and the FIs are lapping up. Smart money is still there, and maybe there is more scope for a growth in this counter. And overall, the final KYC rating for V2 Retail comes on the higher side of the averages, 6 out of it. This is the number which I'm talking about, but we need to talk something more, and that is with the management. Akash Agarwal will be joining us. He's the whole-time director at V2 Retail. An interesting perspective about him. He has more than a decade of experience in this segment, procurement, finance. That's where his specialization lies, and the education is also pretty strong, especially from Italy as well as UK. But our conversation will continue from here onwards with Akash, but shortly after a break.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. Amba Shakti SDTMT.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business?
Welcome back to KYC. We are joined in by Akash Agarwal, whole-time director at V2 Retail. Good afternoon, Akash. It's always a pleasure to have you with us at NDTV Profit. And before we start our conversation, company came out with its Q1 numbers. The top line were very strong. SSG growth a little bit mixed, views coming in from the street. I just wanted to understand how the Q1 numbers panned out, and is there a little bit of moderation in the SSG?
Hi, good morning. Thanks for having me. So I think in Q1 there were less wedding dates, and there's a thing called Adhik Maas. So about 1 month of Adhik Maas was there, and it came after 4 years. So there was a slight impact. But I think when you look at the outlook of the whole year, I think we'll be able to cover up, and our SSG target is still 8 to 10%.
Okay, so Adhik Maas and less wedding dates was there. Fair enough. That's a seasonal thing, and thank you very much to actually clarify that as well. But working capital and the inventory situation, there seems to be on the higher side, these numbers stretching your working capital ratios also in the March quarter. Is this a deliberate strategy? And if yes, could you just explain us why this business move has been taken, and will this improve in H2 or H1, your inventory situation?
So there are two things happening here. One, because of the war, we knew there will be supply chain disruptions. And second, we do a lot of early payments to our vendors. So we have a bill discounting facility for our vendors, and we've almost paid about 500 crores as early payments to our vendors. That's why you see the working capital days going up. And talking about the war situation, in March, we knew that we had to open 60 new stores in the first quarter. And we wanted to get the inventory in-house early so that sales are not impacted because of the supply chain disruptions. So this led to the working capital being a little high. But again, in the long term, it'll hover between 45 to 50 days.
Right. So 45 to 50 days would be the inventory time, if I'm not wrong. Right, Akash?
That will be the working capital. The inventory would be about 90 to 100 days.
Okay, and the inventory would be 90 to 100 days. That's the long-term target giving. Fair enough. But what kind of impact on the costing, which we have seen, fourth quarter, utna impact nahi tha, but first quarter, that impact will actually come on the higher costing, be it logistics, be it raw material. Is there a pass-through at play? You have hiked any prices, or is there going to be a little bit of margin compression in the first quarter?
So the impact we're going to see in the third quarter onwards, because most of the deliveries and the orders for the first and second quarter were already in place, and the fabric and the yarns were in-house. So I think from the third quarter onwards, we've seen about 2 to 3% increase in the input costs, and we have increased our MRPs accordingly, because we are already the lowest margin player in this segment and in this sector. So we cannot absorb the rise in raw material prices.
Okay, so that means you are actually matching the rise in input cost, which is there to your MRP. Fair enough, we understand that, and by definition, you are a value fashion retailer as well. But I want to understand the growth and expansion plans. There is a good expansion happening of your stores. So is it the new areas or the stronghold regions? You have given certain numbers for FY27. If you could just explain us that.
So our initial target was 170 new stores for this year. But looking at the strong momentum and the good results that we've been posting, we increased that target to 200 stores this year. And I think we've already opened 61. So we are well on track to open 200 new stores this year. And in terms of geographical spread, we are present in 26 states in the country already. We entered almost 11 new states in the last 2 years, and we've got a tremendous response from all geographies throughout. So what we do is we open 4-5 stores in a state, and we collect as much data as we can. And then whatever state gives us the best performance, we try to accelerate the expansion in that particular region.
Fair enough. That's a good strategy to start with, and of course you have a full pan-India coverage coming in. But let's try to understand a little bit about not the numbers, not what the stakeholders want, but a lot of first-time viewers who are watching V2 Retail about your company, they want to know what are the consumption trends looking like in Tier 3, Tier 4, because now it literally looks like Tier 1. Purchasing capacity is there in Tier 3, Tier 4. They have the digital interface. The logistics have improved in the country. So what are the trends? What are the tastes which you are gathering from your data in Tier 3 and Tier 4 towns?
So this trend has been seen throughout the world. In fact, it's a global trend. You look at brands like Shein, Fashion Nova. So value proposition, if you go give a good value proposition to consumers, they will flock to come and buy from you. So, and I think that trend is, seen in India also now, because instead of paying 5 times the cost of making a garment to brands, people are increasing the frequency of purchases. And I think one of the biggest reasons behind this is also the penetration of social media, because once somebody wears an outfit and posts their picture on social media, they don't want to wear it again. So customer behavior is changing a lot, and internet influencers are wearing. So whoever is able to fill that gap, I think sky's the limit and potential is immense.
Fair enough. Across all the categories, lifestyle, kids, men's, ladies, that's where you're catering all across. But the margin and revenue outlook for next 2-3 years, I do not want an immediate, but a range in next 2 to 3 years of 3 to 5 years. Where do you see the margins you have guided at 28-30? You'll stick by it, and the revenue outlook?
So for revenue, we are guiding for a 50% revenue growth for the next 2-3 years. Conditional to that, we're not compromising on any profitability metrics, and the momentum continues. We want to open aggressively, and we want to enter all the regions. We want to be a national level value fashion retailer. And I think we are already been able to do it in the last 2 years, and hopefully we are able to continue in the future as well. And in terms of margin, I think gross margin target of 28 to 30% remains the same. And for EBITDA margins, I think we are guiding for sustained margin, because when you open so much new area, they start at about 70% of old store SPSF. And it takes about 2 to 4 years for a new store to mature and reach old store levels. So margin expansion won't be possible in the near future because we are growing this aggressively. But in the long term, the EBITDA pre-Ind AS should move from about 8-9% to about 10-11%.
All right. So that's the number coming in between 10 to 11%. But in the long term, right now, remember the company is going for a good expansion. Because of that, you will have, kind of a margin pressure coming in. But try to understand, Akash, almost 90% of your revenue comes from the private label. Is there any kind of a tie-up or an international value fashion retailer announcing here, or you'll stick by what your core principles are?
No, I think in fact it's the opposite. We want to be an Indian brand that in the future sells globally, because these global value fashion brands come to India, get it manufactured in India and sell to us. So why not an Indian brand that can have the level of product and branding that you can sell in other countries as well?
Fair enough, and that's a very honest take coming in, Akash, on this view. But this is my last question to you. If you had to pitch V2 Retail to the new stakeholder who is here, seeing your company for the first time in KYC, 3 important triggers which are positive growth levers for your company, what would that be in short?
So I would say the number one lever is the focus on product, because till today, if you see someone wearing something nice, the first thing that comes to your mind is that it must be expensive. So we are here to cater to that gap, and we've been able to grow this rapidly and improve all the profitability metrics because of our focus on product. So that will always be the leading driver. And second, of course, supported by an amazing, robust backend and investment in technology. So we are using a lot of AI workflows already in a lot of business use cases, and it's already started helping us. And third, I would say, will be people and team. So that has always been our focus, because you might have the right tools, but if you don't have the right people using it, then there is no result.
Akash, very nicely put, and thank you very much for answering all the queries written by our viewers, and I have actually presented it to you as well, and some from mine as well. It's always a pleasure to have you with us, and best of luck for the future.
Thank you for having me. Have a nice day.
Thank you. So that's the management of V2 Retail, and they have stated that they want to become an Indian player in the global market. But remember, the margins will be under pressure because they are focusing much more on the store expansion. So the SSG growth might be on the lower side on the margins, but top line growth is 50% target in the next 2 to 3 years. For these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
Superstar Stocks of the Day, presented by Tata Elxsi, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right.
Nifty off the day's lows to trade above the 24,100 mark. Broader markets move in tandem. Metals as well as pharma lead the gains, but most of the sectors trade under pressure today on the back of geopolitical developments and weekly expiry. And India VIX level above 13 today. HCL Tech trades under pressure on the back of underwhelming Q1 results. The constant currency revenue stays negative QOQ despite the sequential improvement, while West Asia conflict continues to impact the business. Biocon surges in trade as shares worth more than 3,600 crore rupees change hands in the block deal window. With the deal, Mylan fully exits Biocon. The price is around 5.5% discount to the current market price. In an exclusive interview to NDTV Profit, founder and executive chairperson of Biocon, Kiran Mazumdar-Shaw, highlights the growth trajectory, GLP-1 opportunity and global plans while focusing on deleveraging the returns on investments. SBI Funds Management's nearly 10,000 crore rupees IPO opens for subscription today. The price band is set at 545 to 574 rupees per equity share for the offering. The public issue is entirely an offer for sale by the selling shareholders. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take it straight to the markets. And yes, from the lows of the morning, market has attempted to recover, but still 0.4% down on Nifty 50, but comfortably above 24,100 levels. Sensex 2 has seen that pressure really building in. Let's see which are the pockets which are doing well and where is the pressure really coming in from. When we take a look at all the sectors, well, except for metal as well as pharma, most of the sectors are really showing some bit of pressure on account of two important aspects. One, the geopolitical tension, which has elevated the crude oil prices, and that has a direct correlation to almost all the sectors and therefore the impact on our markets. And the second important aspect is the weekly expiry. So both putting pressure on the markets, but metals being high beta are the gainer. Pharma, some of the companies and the stocks like Biocon doing very well, and that particular sector is in the green. In terms of the contribution coming in from the heavyweights on Nifty 50, it's Bharti Airtel as well as Reliance Industries which are the top gainers. In fact, Bharti Airtel is the only one which is the top contributor with 20 odd points to Nifty 50, while everything else is very minor. On the downside, remember, HDFC Bank is dragging and eroding what Bharti Airtel really adds to the Nifty 50. So therefore, more on the downward slide, State Bank of India, largest bank, HDFC Bank, these are the sector plays, and also the play on the economy is through the banking space, and that's what is really showing nervousness. So therefore, the momentum is nervous, especially with crude oil prices really elevating. The broader markets also in tandem with Nifty 50. So that's the snapshot of the market. Let's take a look at Biocon stock, and a huge overhang of Mylan's stake of over 5% was really an overhang, with that particular block deal really taking place at a huge discount to the current market price. So that stock is elevated at almost 7.5% gains, with some important commentary also coming in exclusively on NDTV Profit. So let's shift focus and stay with Biocon in particular. So as Biocon really embarks on a new journey of reaping returns on past years of investments and all the R&D and the hard work that has been done behind the scenes, now is the time to really reap benefits and also focus on the shareholder returns. So founder and executive chairperson at Biocon, Kiran Mazumdar-Shaw, says that the global presence will help in bolstering all the segments of the businesses. Remember, in biosimilars, they have taken that plunge, but in all segments, they can really push through the channels that have already been opened globally, especially GLP-1. Here's an exclusive conversation I had with her earlier at Biocon campus. Listen in. When we talk about the GLP-1 opportunity, Kiran, everybody in the pharma space is now really looking at that particular pie and a share in that pie. What's your vision? Of course, your company has been at the top of the line when it comes to GLP-1 opportunity. What's in store and what is the outlook towards that? Even globally, that's a big opportunity for Biocon coming in for GLP-1.
So for us, GLP-1s have always been about a global opportunity.
Yes.
And I think we already have the foot in the door because we have our liraglutide, which is both in the US and in Europe. And a very interesting aspect of even liraglutide is the fact that the other competitors who were in the US have indicated certain manufacturing difficulties.
Yes.
Okay, so I think Biocon's capability in peptides and insulins have made them very, very strong when it comes to GLP-1s as well.
Yes.
Okay, and I think that we see ourselves as a fully end-to-end company manufacturing GLP-1s. Many of our competitors rely very much on key starting materials from China.
Yes.
We don't.
Yes.
So I think that kind of sets us apart. And ultimately, I think the true competitor advantage that we look at is the ability to make many of these through recombinant DNA technology.
All right, so that's one challenge in the GLP-1 journey of Indian pharma that you really pointed out, where you have created the end-to-end bouquet in-house. But when we talk about the peptide opportunity and the commercialization of that, you've always passionately spoken about that chemistry and that formulation. But how do you read benefits when it comes to the commercial aspect, even at a greater pace?
Well, you know, the fact is we now have a global presence. We have a global field force because of our biosimilars. And we can now leverage that capability to drive every part of our business. And that's what makes us very excited and, aspirational and very confident that we can actually drive that kind of growth because of the fact that we made a big success of our biosimilars, and the same workforce can be leveraged in many parts of the world for these other products.
Right. And when we talk about insulin, again, Kiran, you have been very, very focused and optimistic about the insulin business. And you have doubled down on this particular aspect. It is a low margin business. What is
Says who?
All right. So there is competitiveness in the market. There are new products which have come in, of course, but supply is much lower than the global demand is. So putting both these aspects together, how do you see the 300 million plus business now that you have created scaling up to $1 billion?
So first and foremost, you know that we've just recently doubled our manufacturing.
Yes.
Right? And if you were just to double the 300 million because of that, you can see where the business is heading in the near term.
Yes.
But I think we will get to that $1 billion mark in a fairly predictable way because of two reasons. One is that the insulin companies have decided to focus their resources and their capacities on GLP-1s.
Yes.
Okay. And there are very few insulin companies at scale to take on the responsibility of supplying insulins. And insulins will never go away.
No.
So I believe that we have a very exciting opportunity. I think that we will get to our $1 billion target as we aspire to do. And I think the fact that we put in place the kind of manufacturing capacities that can help us get there gives me that confidence. Apart from that, of course, we know what the demand is. We can't even meet all the demand. So I think we know what that whole opportunity is going to be all about.
Right.
The other aspect is that, insulin is a very fungible manufacturing base. You can use your drug product facility to make both insulins and GLP-1s.
Yes.
And you can use some of your recombinant DNA technologies to make both GLP-1s and insulins.
Yes.
So that's what is very exciting for us, saying this this whole segment is going to be a very, very important segment for us over the foreseeable future.
All right, and that entire interaction with Kiran Mazumdar Shaw, you can catch it later today and throughout the day only on NDTV Profit. And of course, this particular counter has been on fire also because of the impact that the GLP-1 opportunity will have, and how the roadmap is very clear for the company in terms of free cash flow position, for deleveraging and also giving shareholder benefit. But take a look at the WPI numbers for the month of June. They are flashing on our screen at 9.87% in the month of June. The WPI figures have come in. It is higher than on a month-on-month basis, and that was on expected lines. One particular pocket of the economy has really impacted the overall inflation trajectory, and that is because of the West Asia conflict, and that was really built in terms of the estimates of both CPI as well as WPI. And in the month of June, you will remember that for larger part of this particular month, there has been a full impact that has been seen because of the war situation and the crude oil prices remaining at elevated levels. And that's what is really impacting the WPI figures as well. So it needs to be seen how it really recedes. But today, again, with crude prices at elevated levels, the average level for July also goes up when it comes to crude oil prices. All right, let's also focus on one particular counter which is on our radar, and the sector, IT sector, has also been on top of our charts also because of the kind of divergent, commentary that we are getting from the different companies who are really putting the trust behind the artificial intelligence channel. So we are talking about HCL Tech. It has been beaten down in trade under pressure post the Q1 results, and Jasmeet is here with the details on what's really not working for the company. Jasmeet, we just had HCL Tech announce this deal with Sarvam AI to really bolster its efforts towards the artificial intelligence capabilities. And what is it that the market is not liking about their performance, even though they have put in a lot of effort when it comes to the overall growth and the AI challenge as well?
Well, Nisha, thank you for that. As rightly said, we have seen the overall Q1 be in line with the estimates, and the deal win largest when you look at the Q1, the highest the company has ever won in the Q1 for the quarter. Now, if you look at the things that are not working for this particular counter is the CC growth. Despite the CC growth is better than the previous quarter, it's still negative. That's minus 0.5 odd %. We see a slowdown there. The second one is the overall commentary in terms of the ramp-ups of manufacturing, telecom, and the other segment deals. We are seeing a slowdown. Q4 did see a slowdown of the client delays and the client slowdowns. That continues in the Q1 as well, and that also is creating an overhang. Even the ER&D space saw a downtake in this quarter. Now we look at the third key aspect and why the overall slowdown and why the stock is in red is the data center investment. Companies plan to foray into data center where they're investing 3,500 odd crores. Now while data center business becomes an asset heavy model where the margins are lower compared to services, so there might be a risk of margin dilution which Street's not liking. While the fourth key reason is the West Asian conflict is still continuing, though they have a small share there, but that still continues to impact the company. And lastly, the brokerages. While the Street remains divided, but some brokerages like CLSA and Citi have downgraded this particular counter on the back of that expensive valuations. When you compare it with the large caps like TCS and Infosys, currently HCL Tech trades at a premium valuation. That's why the downgrade coming in for this particular counter, though the quarter was in line as per the estimates.
Right. Thank you so much, Jasmeet, for penning down those important points that HCL Tech has to really work upon. But an important news development late night yesterday was Aditya Birla Group's big plunge towards the renewable energy space. And some big news coming in. It's a big acquisition in this particular space to stay ahead in the game when it comes to renewable energy. Also pertinent to remember that all large conglomerates with deep pockets have been shifting towards this particular sector as an important and critical sector of the future. So we are talking about Aditya Birla Group's acquisition of Spring Energy, which is a 100% subsidiary of the India Renewable Energy business of Shell, a global company. $1.8 billion is what Aditya Birla Group has to pay for this particular asset, with which comes, remember, solar, wind, as well as hybrid assets of renewable power energy across India. And this will give 5 gigawatts of total renewable energy capacity. Out of that, remember, 1.7 gigawatts is still under construction. Now, putting this particular bit as already having the Aditya Birla Renew, which is a subsidiary of Grasim, remember, and we should also see the impact on Grasim going forward with such a large transaction. But the combined renewable portfolio of Aditya Birla Group in renewable energy space comes to about 9.3 gigawatts. And also remember, it makes Aditya Birla Group a much larger company when it comes to the renewable energy space, as they look to achieve the 20 gigawatts of total capacity in the next few years. In terms of this large transaction, the equity infusion from Grasim as well as Global Infrastructure Partners, which is an entity of BlackRock, that will be the funding mechanism of $1.8 billion, and that needs to be seen in terms of the funding of Grasim as a listed entity. So all in all, Aditya Birla Group makes a huge plunge towards the sector of the future, the renewable energy space, and really bolsters it with a very large acquisition. So keep that on our radar. But let's also shift again to the stock of the day. Biocon is in focus on the back of the big block deal, which is removing the overhang on this particular company of this supply of paper. Varsha is here with all the details. Tell us, Varsha.
Well, you know, the stock is up, of course, and it's a clean out trade. And as you rightly said, the major overhang has been removed, wherein we are seeing 9.19 crore shares traded around 400 rupees. That is, Mylan is now exiting Biocon versus via block deal. Now, the stake as of June 2026 of Mylan into Biocon was at around 5.64%, which is now completely gone. The price at which this is being done is at around 5.5% discount to the current market price, and the total deal size stands at around 3,676 crore. Now, why Mylan is selling? Of course, this is a clean out trade. One is, and Mylan had received their shares from Biocon as part of Biocon Biologics stake buyback deal. Mylan was never a long-term strategic, shareholder in Biocon, and the stake represented deal consideration rather than the fresh investment, and hence, Mylan is now monetizing that holding and exiting completely. And in a clean out trade, we are seeing the stock is up almost 7 to 7.5% in trade.
Thank you so much, Varsha. Now let's also welcome on the show Vikas Khemani, the founder and CIO of Carnelian Asset Management and Advisor. Vikas, always a pleasure to welcome you on NDTV Profit. And what a great day when so much is happening when it comes to the pharma space. Let's begin with this particular space, one of the few which is really gaining in trade, while the overall market is really impacted by the West Asia crisis, really resurfacing once again. But when we talk about the GLP-1 opportunity, that's become now the starting point of competition for almost all the pharma companies. And of course, Biocon, I spoke to earlier, is the one which is really taking a lead when it comes to the global sphere. How do you see this particular space and the new areas of competition within the Indian pharma companies?
Hi, Nisha. I think, as you rightly said, that this is a large opportunity, and all pharma companies are going to kind of tap into this. Of course, everybody may not be successful, but the ones with right capability would be successful. So it's a large market, and I think many companies will grow in that space. Along with that, I think there's also shortage in the insulin capacity globally, because a lot of innovators have migrated towards their capacities towards the GLP drugs. So in that sense, even that opportunity is quite big, especially for some of the Indian companies, and Biocon ends up being the largest in that. So I think, net in general, we've been quite positive on pharma as a space in general. Biologics, of course, specifically, but CDM was an opportunity across, the value chain. So in general, I think we are in a good space from next 5 to 10 year perspective. And whenever you have this kind of tailwind, you just try to kind of capture on that by sitting into the good companies which can deliver over a long period of time.
That's right. Vikas, you mentioned one thing, that all companies are really aiming for this, but not everyone will be successful. What could be the key differentiator here? And I'm coming with the enrichment of some of the chats that have been shared by Kiran Mazumdar-Shaw also, where she mentioned that their in-house, end-to-end capability in-house makes them much better in competing, while many other companies may be dependent for entry-level elements from imports. So is that going to be a differentiator, and what will really segmentalize the winners or losers in this particular GLP-1 opportunity?
I think companies which have end-to-end capability and also DNA of being in this space would stand to benefit, especially when it comes to the regulated markets and overseas markets. Of course, domestic markets are quite different, and many players are launching their products, but still in that space as well, people who have control on their own destiny from KSM perspective to end product would tend to benefit and tend to sort of have advantage.
Right. So Vikas, when we look at the overall gamut and the market right now, how are you really strategizing while the market has been fairly volatile, depending on the various cues that really impact our market, including crude, expiry, as well as the global sentiment?
Last 1.5 years has been very, very kind of volatile from a news flow perspective, right? From operations into to tariffs for a long period of time. Then we had West Asia war, and today also continues to remain so. So I think this kind of macro uncertainty has remained there. But good news is that India is handling this period well. We've not had deep impact on our economic growth, on our corporate earnings. Of course, once we come out on the other side of the sort of this situation, I'm sure India will stand to benefit a lot. Just like very similar situation happened around Ukraine war in 2022. A 3-4 months period was a significantly uncertain period in terms of macro news, oil price, supply chain disruption, all those things. And as that settled down, war was still around, but as those issues settled down, market started kind of climbing up, and 23 ended up being a very good year. So I see pretty similar kind of setup that we have had a long period of uncertain period, and now in some time it should sort of settle down. And good news is that corporate earning are reasonably all right. There's no major disruption on that, and assuming that the escalation doesn't happen again for a very long period of time, but that one can't say. But generally speaking, in India is in a reasonably decent space.
Right. So bullish in the long term, Vikas, as you've always been. But every, adversity also gives a lot of opportunities. Looking at the earnings momentum for this particular quarter and going forward, looking at the stress points that really continue from the war situation and the way the monsoon is going to have an impact on our overall economy. Given these important data points, what are the themes in the short to medium term that you are really keenly looking at, and any new trends that you're really picking up for that particular investment at the current levels?
Short-term uncertainty happens. Actually, we try to buy long-term themes because those are the times when those good opportunities are available at a good price, right? So, themes don't change in investing. According to us, manufacturing continues to remain a very, very large theme across, various chains, whether it is pharma, CDMO, auto, ag, capital goods, defense, aerospace, across specialty chemical, across the value chain. There's a lot of opportunities. Interestingly, if you see in last 1.5 years of crisis, two very big silver lining has come about. One is that India, because of tariff situation, ended up signing up new FTAs with EU and many other countries, which is collectively put together $1.5 trillion of market. So that market has suddenly come accessible to you with on advantageous terms. Secondly, I think India's currency depreciation vis-a-vis a lot of other countries, trading partners, is between 12 to 15%. So that's also has given a very good advantage. So combination of these two things, we believe that will lead to a significant advantage on the manufacturing sector, where we're trying to push our manufacturing GDP from 15-16% to 20-25%. And this is a very big decadal trend. And this inflection point in last 1.5 years, this setup which is there, which can lead to an inflection point, is very interesting. So within that space, there are lots of opportunities. Of course, you can't say anything in short term. You have to think slightly medium to long term. But if you understand that space, then these are the times to kind of get your investment right in those interesting spaces in the company, which gives you multi-baggers of the future.
All right, Vikas, those were some very important and very interesting thoughts that you really suggested. And manufacturing has been one of the mainstays for India, where we really are proud of the acumen, and the FTAs that you mentioned also add to that might. It's always a pleasure to welcome you and speak to you, Vikas Khemani. Thank you so much for taking out time. Thank you. Thanks so much. All right, with that, completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit.
Hello and welcome to NDTV Profit. You're watching Trending Stocks at NDTV Profit Suzlon Studio. With me, Hiral Dadia, and I have Sharad Dubey, who's standing at the Profit Market Pit as well. But before we head across to Sharad, let's quickly take a look at what's happening in terms of the markets as we speak right now. Overall, if you see Nifty 50, we're trying to get towards the day's lowest levels as well. Still not there, but we're trying to maintain that 24,000 mark. 150 points cut is what you're seeing. Let's pull up Bank Nifty on the screens as well and see what's happening with Bank Nifty because there is pressure building up there. We are at the day's lows there. 1.3% is the kind of cuts coming in terms of Bank Nifty. Let's look at the heat map of Nifty 50 and then we look at the sectoral heat map as well. If you see in terms of the Nifty 50 heat map in terms of individual stocks, what you're staring at right now is a Cipla, Hindalco, Bharti Airtel, Sun Pharma, Apollo DRL. So it's the pharma pack which is up and about in trade. There is a bounce coming in terms of metal names as well because yesterday there was some bit of trading pressure coming in there. IT is seeing that little bit of a downtake. Talk about a HCL Tech reacting to numbers, 3.5% there. HDFC Life is under pressure. Indigo again down in trade, and this is on the way crude prices have panned out as well. But the key over here is in terms of individual sectors, and then we'll go to Sharad. In terms of individual sectors, pharma, healthcare, there you go, and metals. Apart from that, real estate also seeing profit booking. Your banking space, auto pack, all of them under pressure. In fact, Sharad, what are the cues that you're picking up at this hour?
Well, good afternoon, Hiral, and yes, you're right. The market's trying to make an attempt of a recovery, but then again, Nifty coming down in our analysis. Yesterday, we saw a gap down opening and a recovery, but this is not sustaining today. And remember, there is Nifty expiry at play as well. Nifty Bank, let's pull up the chart and see what's happening here. And the technical setup actually looks weaker. We are at the day's end over here. It's down with cuts of almost more than 1.2% in the trade. But what are the key factors to watch out for? Of course, the overall war risk premium has gone up, and today, remember, is a Nifty expiry. This recovery attempt or consolidation, that's what people are talking about, at least in the medium term. That's the big question to be asked. Nifty Bank's technical setup is quite weaker than Nifty. Can expect more shorts here. Nifty Bank support range is between 57,000 to 57,500. This is the range you should be looking at. But overall, even the small caps have started seeing a big sell-off. Brent crude is elevated on the Trump reimposing blockade. This has spooked out the Asian markets and also the other global assets as well. Metals are going up on the global developments. Alumina price is going up and copper shortage. Pharma is a defensive. That's why the buying is happening. And the smaller caps are seeing a larger sell-off as compared to Nifty. Mid caps is neutral right now. And the rupee weakening past that 96 mark and yields riding. That's where the macro concerns are coming in. And of course, today Q1 earnings is there. These three earnings we'll be tracking, especially Tata Elxsi and LTTS on their commentary. And macro specific news flow is very much important. Globally, US June CPI data, Fed chairs, Kevin Walsh commentary comes in. And importantly, we talk about India WPI inflation as well. It is at its highest level since 2022. And of course, we're looking at the macro data. It is showing that the overall, expensiveness in the market has gone up and the trade deficit has also happened. Over to you, Hiral.
Not much for that. In fact, that you're pointing out about the wholesale price inflation, that's the WPI. It's risen to 9.87% in June from a 9.68% in May. What is interesting is that it's not only fuel prices, it's also higher food prices that is contributing right now. If you talk about inflation, that is above expectations. Your food inflation is accelerating as well. So your core pipeline pressure is something which is remaining high as your manufactured products inflation remains unchanged right now. This is the highest number that we've seen in the new series as well, and it's mainly food and primary article prices that are probably offsetting the moderation that has happened in terms of fuel inflation this time around. To talk to us in detail of what this would actually mean for the markets in terms of what the RBI action could be, Gaura Sen Gupta joins in to discuss more. Gaura, good afternoon and welcome to the show. This is Hiral on this side. What do you make of this number? 9.87, highest in the new series, highest since 2022 as well.
There is some pickup. If you see sequentially, the month-on-month inflation momentum has actually come off a bit. The pickup is actually reflecting the past increase in energy prices. So there you are seeing a pickup in, let's say, consolidated fuel inflation, which is still closer to 30%. It's come off a little bit in terms of the year-on-year growth. If you compare it to May, it was more than 30%. In June, it's come off to around 2.7. Sequentially, the pickup in fuel prices has eased. There is a pickup in sequential momentum for food, which reflects the impact of the uneven monsoon. Non-food manufacturing inflation, that is around 7.7%. That is just reflecting the past surge that we saw in the month of May when the West Asia crisis was at its peak. I think the positive is if you look at within manufacturing, the sequential momentum in certain items that we were seeing, which are non-fuel, for example, chemicals, textiles, base metals. The sequential momentum in June has eased off. It'll take some time to reflect on the year-on-year numbers. If hopefully, this current escalation between US and Iran is resolved quickly, and hopefully the freight movement via the Strait of Hormuz is not adversely impacted, then we could see some easing in crude oil price pressures and other commodity pressures also. For the year as a whole, we expect in WPI inflation to average around 8%.
Right. Good afternoon, Gaura. Sharad here. Wanted to understand, because of this reading, does that change, the views for, on the RBI rate hike, or do you think there's a chance of a rate hike on these data, or is going to be a status quo? What does the initial reading suggest?
So for RBI, WPI definitely is important. It is a risk to CPI. But what we are seeing, if you look at the June CPI numbers, broadly in line at 4.4. If you look at core inflation, which is you remove food, fuel, gold, silver prices, the real demand side part of inflation, that is still low at around 2%. That's near historical lows even in June. And if you look at pass-through, we are seeing very limited pass-through of higher input costs by producers to consumers. We've seen it in a few items such as household goods, metal items, some electronic goods, restaurants, etc. But it's very minimal. Core inflation remains near historical lows. If you even look at the current account deficit, which is despite the pickup in crude oil prices, we expect the current account deficit in this year to be moderate around 1.7. It's higher than last year. Last year it was just 0.6, but we've had a very low current account deficit of less than 1% of GDP for the last 4 years, which is a good sign. It shows that there is excess capacity in the economy. It also says that the pickup in inflation remains a supply side phenomena, which RBI will have to look through by staying on pause. Supply side disruptions are better handled by the fiscal side, which the government is already doing by minimizing the impact on consumers of the fuel price surge. Whenever there is a pickup in food inflation in certain items, managing with supply side. So it's a more fiscal response rather than monetary policy. Monetary policy, we maintain status quo.
So, Gaura, running slightly short of time, but a short answer to a question in terms of impact on markets, because the rise is now no longer led by fuel alone. There is food, there is primary articles, which is contributing more significantly as well, which is making inflation more entrenched right now, right? So, what is the kind of margin pressure that we should look at in terms of companies? Because that in turn will determine what the earnings growth will look like. So, do you think there could be a downgrade coming in on that side from expectations?
Some moderation is expected because of the input cost surge that has happened in Q1 for companies. So Q1, you could see some impact on listed company performance. It will have some impact on GDP growth, but we'll have to see because, for example, the pickup in metal prices, many companies would have had, hedged that exposure. There was a massive pickup in freight charges for shipping because of the escalation of the geopolitical risk. For example, there is reports of 20% rise in just freight transportation costs. That will affect margins, and you can see a temporary slowdown in terms of listed company performance in Q1. But our expectation is if, let's say, this recent escalation de-escalates and they are able to, enter a ceasefire agreement, then you will again see crude oil prices sharply adjusting. So the margin squeeze that can happen in Q1, in Q2, Q3, Q4, you can see some widening of margins, which will help performance. From a growth perspective, we are not so negative. We have a full year GDP growth of around 6.8.
Right.
And
right, Gaura.
Yeah.
Yes, thanks a lot for that. And you have given us an entire 360-degree view on the markets and the economy. It's always a pleasure to have you, Gaura, with us. But moving on, we are joined in by Saumil Mehta. And we'll start our rapid fire round. Good afternoon, Saumil. The first stock is PDS, a huge order win, almost $250 million worth of size coming in. And of course, the stock is also up 7% in the trade already. How do you see the technical setup for the charts right now?
It's a good afternoon to everyone. It's definitely a breakout. The breakout happened, I think, last month itself, around 330 levels, 330, 340 levels. Now that we've seen a breakout and there is a high top, high bottom formation, my view would be positive. My targets would be around 450 in the medium term outlook, but no fresh buying at this point of time. Let it cool off a little bit and then probably you can nibble in.
Right, no fresh buying. Gujarat Pipavav Port, this is the next stock which you are talking about. Brokerage is turning a little bit bullish, volumes also there, but stock not doing much. Do you think there is a consolidation at play here, or is there a trade to be made?
I think at this point of time it will be an avoid for me. I'll be expecting the stock to consolidate a little bit, so it's an avoid for me.
Okay, avoid for this counter. Next stock, SSI Tech. And interestingly, there has been a broking report on it, initiating, coming in. Stock is up 5%. Saumil, your views on the stock?
The view is positive, but no fresh buying at this point of time. I'll be expecting the stock to continue the uptrend till 410, 420, but no fresh buying.
Right. Indigo, tire stocks, aviation stocks, as we call it, all the crude sensitives which are in focus, all of them are down in trade because of the spike in crude coming in. Do you think more sell-off will be there? And if yes, any kind of positioning can be made in these counters?
Yeah, I think it is better to avoid this at this point of time. Crude is looking a little bullish at this point of time, and I'll be expecting crude to go up a little more. I'll be expecting $87, $88 per barrel on the Brent crude. So avoid at this point of time. We may see a little bit of correction here.
Saumil, Just Dial, follow buying after yesterday's numbers coming in. Brokerage is also turning a little bit positive. Do you think good time to book some profits in this counter? This has already run up in the last 2 sessions.
If somebody has a position, yes, definitely book some profit. My targets on the upside would be 850, 840 levels on Just Dial in the medium term outlook. But yes, if somebody is a trader, you can book profits.
Right, and quick view on Biocon. It seems like an overhang is removed after a clean out trade from Milan coming in. Your view on that?
The Biocon definitely positive. Biocon, Davis Lab, Cipla, pharma sector is looking definitely good. Hold on to it. Looks good to me. You can fresh buy as well in Biocon, Cipla and Davis Lab.
All right. Thanks a lot, Saumil, for your views on the technical perspectives of the stock. It's always a pleasure to have you. But over to you, Hiral.
Okay, thank you so much for that, Sharad.
and Sawmill as well. In fact, Standard Engineering, that's a stock that is in focus. And this is after the company has actually approved a twin move to strengthen its AI data center ambitions. Now, the board has actually cleared a 71 crore preferential issue at 293 rupees per share and also approved a 65 crore share swap transaction for the acquisition of G-Scale. Nageshwar Rao Kandula, MD at Standard Engineering Technology, joins us. Mr. Kandula, welcome to the show. Always a pleasure to speak to you. If you could help us understand more in terms of the data center side of business that you're looking to actually expand into, and how are you looking at the preferential issue and the share swap transaction? How is this entire transaction going to pan out?
The existing business also already we guided 40-50% growth this year. And G-Scale also we are expecting big orders. We done two ways preferential shares. One is AJ and second is share swapping. Share swapping where we are acquired the G-Scale 51% that time as per agreement we done. And AJ we allotted this 70 crore shares because of this is not financial investment. They are a strategic partner. Already they have 10.5% share in SCTL. They are very strong believing in SCTL future growth. Based on that, their request, we accepted this investment. They're almost nearly become a 12% shareholder. After Indian promoters, AJ became a 12% shareholder.
Okay. So in terms of this acquisition, what is the contribution of revenues that you will see out of this business and by when?
This year, this G-Scale, we are expecting this year, we are at least to 250 crores revenue.
You're saying from the data center business?
Yes, data center business. I'm talking about the acquisition, G-Scale business.
Okay. And currently, where does that stand?
Currently, this year, we are establishing factories and everything, facilities. We are investing in CapEx. This third quarter and fourth quarter, we are expecting some billing, 250 crores.
Okay. The other thing I want to ask you is, in terms of this massive AI data center opportunity that you're talking about globally and India, what is the kind of market share that you're targeting over the next, say, 3 to 5 years? And what is the strategic rationale to enter the AI data center infrastructure business at this stage of your business?
G-Scale means we are creating giga scale capacity, power pods and cooling pods. Whatever market TAM is there, we are eligible. We are planning to manufacturing almost all 60% products related with data centers. And after product manufacturing also, we are creating general contract capabilities and commissioning capabilities up to hand over the data center capabilities. Whatever data center TAM, our engineering parts, we can participate up to 60% portfolio we are creating.
Mr. Kandula, my question is, why are you looking at the data center business at this stage? Because your legacy business has been focused on pharmaceuticals as well as industrial engineering, right? And yes. So how does this acquisition actually fit in terms of your long-term vision?
My data center infrastructure and pharmaceutical engineering similarities here. There electrical products and cooling products and whatever CDU cooling distributions. Already whatever we are doing in pharma, same servers required cooling, power pods are required, same things. We are not similar synergies. Lot of synergies are there. Data center engineering business. That's the reason we entered, and also very big opportunity for this is for the SCTL.
Okay. And in terms of the initial transaction, if I'm not mistaken, is getting valued at around 190 odd crores. Broader investment plan is around 500 odd crores. So what return are you expecting on this investment that you've made? And what is the current revenue, EBITDA, order book figures of G-Scale that will get integrated?
G-Scale, first phase, we are going to pump. Already we started pumping 125 crores, first phase. And after 6 months, it is going to another 75 crores. Once G-Scale is reached 800 crores revenue, another 150 crores we will pump. And G-Scale go another second tranche, third tranche, G-Scale become a create revenue, 1500 crores, another 75 crores we are going to transfer. That is our milestone-based investment.
Okay, and how will this actually impact your return ratios and cash flows over the next 2 to 3 years?
Yeah, this G-Scale this year cash flows is all very good payment terms in data center business, and this year next year we are expecting at least 750 crores to 1,000 crores data center business.
So return ratios impact, and when do you expect this acquisition to become EPS accretive?
This is we are expecting at least to 15% to 18% PAT we are expecting. This is data.
Okay. Got it. All right, Mr. Kandula. Thank you so much for joining in. Always a pleasure to speak to you. The stock's slightly trading under pressure, 3.5%. Let's just pull up the intraday chart of the stock, and if we can quickly have even say 1 month or a 1 year chart to understand what's happened with the company. The stock is down 3.5%. Seems that the investors are not really happy with this kind of an acquisition. But in the last 1 month, 68% is the kind of surge that has come in. So there is some bit of profit booking that has happened as well. Avinash Gorakshakar, founder and head research at Avinash Mentor Research Services, joins in. Avinash, welcome to the show. Always a pleasure to speak to you. I'm sure you heard the management of Standard Engineering, who is into pharmaceuticals, who's into the capital side of the business, industrial goods side of the business, now entering the data center business. What do you make of this acquisition?
No, I think, Hiral, it definitely sounds a very promising business opportunity. But I think, as you rightly mentioned, in the last 1 month, the stock has outperformed the market. It's gone up by almost 65 to 68%. So I would not be surprised that the stock will consolidate for some time before we see the actual revenue stream from data centers in the numbers. So possibly, what they achieve in the first half, from this business and the kind of execution they do is going to be very critical. So I would say that some amount of consolidation in the stock would happen, and investors who have already holding the stock can definitely hold on. We like the story. Structurally, it seems to be on a very strong wicket, but only when, numbers come in from the new data center business, which hopefully should come in post-September, that is the time when the stock would get re-rated. So it's a hold from our side with reasonably good medium-term prospects.
Coming in for Standard Engineering from Avinash, but talking about another stock that is, of course, doing really well on the volume outlook is Concor. What are the key numbers over here?
Well, sure, thank you for that. If you look at this particular counter, the overall volume growth has come in as a surprise for the Q1. Despite the overall West Asian crisis, the company has reported a good set of volume numbers. If you look at the growth, it has been a broad-based growth. Now, in terms of the export figures, they're up nearly 10% while even the domestic figures is an uptick of 6% in this particular quarter, the throughput volume figures. Now, if you look at the brokerages, even they have remained bullish and surprise for them as well. Now, Axis Cap has maintained its buy call and discount with a target price of rupees 585, while they say the results were contrary on what they were expecting. So they were expecting a negative result, negative degrowth in terms of the volume, but it has come in positive. Further, they also make a note that they upgrade the quarterly earnings and expect the expectation of the Concor going ahead. While I also have Nuvama note which maintains buy on this particular counter with a target price of rupees 600, while they say the overall Q1 volume implies a strong market share has been gained, and also they are estimating a 200 to 250 bips of increase in market share on QOQ and YY basis for this particular counter.
Thanks a lot, Jasmeet, for that. And of course, Concor is doing well in trade also. Avinash, wanted to get your views in for the medium term and the long term. Seems like the story remains intact.
Yeah, Sharad, I think the story remains intact, and the stock has been a massive underperformer in the past. But if these numbers can be considered, then I think the stock looks pretty attractive at the current odd levels. I think definitely at these levels, one could definitely look at putting in a small kind of investment here for a time frame of next say 12 to 15 months, because clearly in the container traffic and the freight opportunity, Concor is a very well established player. So obviously if the numbers traction continues to improve quarter on quarter, then I think you could expect a decent risk reward in the next say 12 to 15 months.
Right, and speaking of earnings, we also have another counter, Nuvoco Vistas, and our stock is doing really well in trade. And to decode that, we are joined in by Puneet. Puneet, what's actually the main trigger for it?
Well, I think it's a good set of numbers at a time where you had the cement companies getting impacted essentially
by the higher, raw material prices amongst others. And there were some price hikes taken by the company, but despite that, we haven't seen margin getting impacted in this quarter. So 18% margins being maintained by the company in this quarter has been a key positive. There's also been a volume growth of about 5%, and the company has taken some price hikes to help, raw material price impact, as well as, look at the other key factors like increased freight costs. So all of those three confluence of those factors have worked well for the company in this quarter. The other interesting aspect is that the freight cost, which had increased materially in quarter 4, has actually come down in this quarter. So that has been the other positive, aspect about Nuvoco Vistas. Now, there's going to be a lot more, aspect to watch out for in terms of the demand in both East India as well as in South India as well, because Nuvoco has, come out with good set of numbers. I think that will have a positive impact on the sector as a whole, and a new plant coming in West India will also bode well for prices going forward.
Thanks a lot, Puneet, for that. And of course, the sector was in a consolidation, but seems like some green shoots are coming in on the earnings. Avinash, a quick view on Nuvoco Vistas.
I think numbers are definitely encouraging, Sharad, and I think typically the second half for the company is normally better than the first half. So you could see a much better traction in terms of volume and in terms of the pricing. So we continue to be positive here. Our sense is that hopefully the period from October to March would be a much stronger period, and that would definitely create a little more interest in the stock. So we continue to be positive over the longer term here.
Right, that's the view coming in. Thanks a lot, Avinash, for taking out your time, giving your views to NDTV Profit. But now we are running out of time. That's all, folks, from me, Hiral, and the entire team who put together the show of trending stocks. Keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों. अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July, only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such.
Nifty off days low to trade close to around 24,100 levels. Broader markets move in tandem. Metals and pharma lead with gains, but most of the sectors trade under pressure on the back of geopolitical developments and weekly expiry as well. India VIX level above 13. HCL Tech trades under pressure on the back of underwhelming Q1 results. The overall constant currency revenue stays negative QoQ despite sequential improvement, while West Asia conflict continues to impact the business. Back on surges in trade as shares worth more than 3,600 crore rupees change hands in the block deal window with the deal. Mylan fully exits back on. The price is around 5.5% discount to the current market price. In an exclusive interview to NDTV Profit, founder and executive chairperson of Backon, Kiran Majmudar Shaw, highlights the growth trajectory of GLP-1 opportunity and global plans while focusing on leveraging the returns on investment. SBI Funds Management's nearly 10,000 crore rupee IPO opens for subscription. The price band is set at 545 to 574 rupees per equity share for this offering. The public issue is entirely an offer for sale by selling shareholders. Hello and welcome. You're watching Lunchtime Trades with me, Mahima Vachajani, and this is a show that gets you a roundup of everything that's happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab your lunch. Now let's take a quick look as to how the markets are faring at the moment. Like we said at the start of the show, the Nifty 50 is hovering around the 24,100 levels. Now, in fact, has slightly slid below the 24,100 levels, down by about 0.6 odd %. The VIX continues to put that kind of pressure on the Nifty, and this is because of the geopolitical development that we've been seeing so far. The VIX is up by about 2.7 odd %, which has crossed 13. Analysts believe that VIX above 14 is where the concern then really lies. But you also have the Nifty Bank, which has taken a knock today, is under pressure, largely on account of PSU banks taking a knock, down by about 1.2 odd %. You also have the broader markets that continue to be under pressure. The mid-cap 150 though has recovered a tad bit, but still is down by about 0.6 odd %. The small cap 250 is continues to be under pressure and down by about 1%. Of course, do remember for the Nifty 50 you also have the expiry at play. Let's also quickly pull up the sectoral heat map and see as to what sectors are doing at this hour. And you have your pharma plus counters like metal doing fairly well, the only two in the green, but you have realty, which is taking a knock in trade today, and profit booking is what we are seeing on the Nifty Realty, down by about 2 odd %, followed by PSU Banks, which is down by about 1.7 odd %, Auto, which is also down by about 1.5 odd %, and banks, of course, continue to be under pressure as well. So that's with regards to where the markets go. Quickly, before we go on to our commodity guest for the day, the advanced decline ratio as well, to give us a picture as to how the broader end of spectrum is looking like, whether the gap has widened since we last spoke. And yes, it has. You have around 725 odd advances versus that of almost 900 declines now, so that ratio is widening by the hour. The BSE 500 also, if you can take a look at as to what are the counters that are buzzing in trade right now, both in terms of positives and negatives. You have Aegis Logistics on the right hand side, which is taking a knock. You have Thermax, Spark, which is also seeing a downtick. MRPL are some of the other names that are seeing pressure, but on the other hand, you have Just Dial, second day of gains coming in for this one, 13% of an uptick on the back of strong operational growth in terms of where earnings go. Nuvoco Vistas also on the back of strong earnings coming in. Biocon, Concor are some other names. Adani Power also doing fairly well. So that's with regards to where the markets go. But let me get in the guest of the day, Vandana Bharti, Head of Commodity Research at SMC Group, joining us now. Vandana, very good afternoon to you and thank you so much for taking out the time. My first question, of course, has to be about crude, right? We've seen crude spiking on the back of the developments that happened yesterday and overnight as well. The idea is that, of course, it went to 110 per barrel, came back to 75, now is more than that 85 odd dollar per barrel. Just want to get a sense as to how do you expect crude to behave from here on? Do you think the levels between $75 per barrel to $85 per barrel is where it will settle, or it could go beyond that as well?
Yeah, so that is the matter of concern, Mahima, here. And if we refer the option chain and concentration on the strikes, $85 to $90, it should be the upside level for crude oil prices this time. But we are not expecting a 100 or 120 kind of level this time because many rerouting has been done in last few months, and they have arranged something from other countries as well. So $85 to $90 on higher side. On lower side, I'm expecting $72, $70 kind of support. But yes, at a time, Iran is striking 5 countries, Gulf countries, and that is a concern for the market. And Hormuz is all again, it is on a standstill. So yes, we are approaching $85, and if we consider the M6 level, it should be 7,800 to 8,000 kind of level we are going to witness in coming days if the escalation continues.
Okay, so that's one thing, Vandana, but the other fact is that because we saw crude prices rise yesterday, we also saw gold and silver, also fall, and both of these, of course, have fallen off quite significantly from their high points. But what do you expect and what do you make of gold and silver right now?
We have got some good news from China, and that is from the trade data and import, exports, and trade balance. All of them were stronger than the expectation. And because of that, we have seen base metal counter, it saw some good buying, including silver. So silver is taking cues from fresh lower level buying, apart from the positive impact coming from China. So silver is going to outperform for the time being, and some fresh lower level buying should happen. Yes, $61, $62, we can see a limited buying this time near the level of $61, $62. So fresh buying and some positive data, it is giving some hope to the silver prices, and the support side still it is on near $55. If we consider the rupee terms, in rupee terms, rupee has depreciated, and it should move towards the level of 2,26,000 to 2,32,000 this time, and the support is near 2,10,000. So some better data and fresh buying, it is giving some hope to the silver prices. But yes, if we consider the gold prices, $4,000 is a very crucial support. Below that, we can see 3,900 kind of level in gold prices. So yes, for intraday, it is taking support, and 1,43,000 should be the resistance for M6 market. But yes, in longer term, we may see the level of 1,38,000, 37,000 in M6. If we consider the COMEX, it should be 3,850, 3,900 kind of level. So yes, dollar is there. Until the time dollar is stronger, gold is likely to trade in weaker territory, and the war escalation in war, every time it will give a weaker hand to the gold prices.
Vandana, any view on copper as well? Because there was a news that came out saying that the largest exporter of copper, that is Chile, is seeing around 15 to 20% copper production drop, and also seeing water shortage, and this is on account of water shortage and mine issues and labor unrest as well. So on the back of that, any view on how copper will do in the next coming odd days?
It is happening in 2 commodities. Apart from copper, zinc is a commodity where many mine production halt is there. And Mahima, one thing is that monsoon season is always a dull season production wise for any base metal kind because of rain and all. So yes, we are going to see a tight supply situation in copper as well. And because of that, we have seen such kind of strong bounce back from the lower level. So in near times, we are expecting 1320, 1335 kind of level in MCX, around 5 to 6% rise in LME as well. So yes, because amid all crisis and all, base metals, they are going to perform stronger.
And the same view stands for aluminium as well, because I read somewhere today that a Chinese company did raise, profit guidance for Q2, where the profit could be as high as 20% on a QOQ basis and a 90% on YOY basis. This is Chalco that I'm talking about, and there was a note also that came out on this one. But because of that, the probability is that overall aluminium stocks in India could do well, and this could see some trigger in terms of prices as well. So what do you make of aluminium right now?
Yeah, a very interesting observation, Mahima. And Hindalco, they can show this thing on their chart. And yes, apart from this news, in LME, the stock of aluminium is now below the level of 3 lakh tons. And the thing is that the most of the LME stocks, they are bound to Russia, and they are banned from the outside uses. So that is the concern for the market. Second thing is that we always prefer the Japanese premium on aluminium. It is on the higher side. It is showing supply disruptions or some kind of supply tightness in the coming months. So because of that, also we are witnessing a upside move in aluminium prices. And the third thing is that it is highly strongly correlated to the crude oil prices, because 40% of the inputs in aluminium production, it is contributed by the crude, and the input cost is very higher this time. So it is also giving a positive momentum to the aluminium prices. And very soon we can witness the level of 346. It is nowhere very high, but yes, on longer term we can expect 360, 375 kind of level in aluminium. So again, the entire base metal counter, they are moving up.
All right. Okay, Vandana, thank you so much for taking out the time and, helping me with all those insights for the commodities that we discussed. Always a pleasure speaking to you. With that, let's shift our focus to the IT space, because HCL Tech is under pressure post its Q1 earnings, and the stock is down. Let's try to pull this stock up. It's down probably more than 3% in trade. And Jasmeet joins us here with more details on what's not worked for the company this quarter. Jasmeet, the first three earnings, two earnings, I would say, turned out to be well, but this one did not seem to do very well. What's not worked?
Well, Mahima, thank you for that. Honestly, even the HCL Tech earnings were in line with the estimates, as we have seen for TCS and LTM. But the main reason why the stock is tanking is on the back of that valuations. Let's quickly understand the top 5 key reasons why the stock is tanking in today's trade. Well, the CC growth has come in at a negative 0.5%. It's still negative compared to what was in the Q4 at 3.3, negative 3.3%, better but still under negative range, shows the stability. The second reason is the overall trajectory of the telecom manufacturing ER&D space. They continue to be under pressure for the management, as we saw the pressure coming in the Q4 where the clients were delaying the decisions and there was slowdown in the demand spending. That continues in the Q1 as well. While the third main reason is the data center investment. Same like TCS, even HCL Tech is foraying into AI data center, where they would want to build end-to-end AI infrastructure for the services they offer. But the data center would additionally add and make company a asset-heavy model, which would impact their margins eventually, and that's another fear across the street. While the fourth reason is the overall West Asian crisis, which are still continuing and impacting, though the company gets a very small amount of revenue from those sources, but still impacts the company's overall revenue and top line growth. Well, last one is the brokerages. The streets remained divided in terms of the HCL Tech. Some of them have hiked the target price like JP Morgan, Morgan Stanley, but on the other hand, notes like CLSA and Citi have downgraded this particular counter, and the reason for downgrade is on the back of that valuations. HCL Tech trades premium compared to TCS and Infosys, given the growth outlook is in line with what the large companies are. So that's why they have cut the valuation of this particular counter, and that's why we're seeing the pressure on the street for this particular stock.
Jasmeet, thank you so much for getting us those details. Despite of that downtick of 3.7% that we see right now, I think the interesting takeaway was them foraying into data centers now. So we'll have to see as to how this pans out, because at the end of the day, it's a capex heavy business is what the brokerages are also penciling in. But, let's move on and talk about, what are the stocks that are buzzing in trade at this hour. And we have Parth joining by to give us more details on what stocks are buzzing and why. Parth, over to you.
Yeah, so three stocks that are buzzing on the back of some really good news inflow. The first one is PDS Limited, which is up almost 10% today. The reason behind this is because the company has announced a strategic sourcing partnership with the leading global supermarket. PDS will both manage and operate the retailer's textile sourcing operations across various countries like Bangladesh, Pakistan, India, Sri Lanka and Turkey. The company is expecting to manage apparel sourcing valued at over $250 million. The second one is NDTV Technologies. The stock has gained over 50% in the last 30 days. And the reason behind today's move is that Investec has initiated coverage on the company with a buy rating and a target price of 430 rupees per share. Investec has given two triggers behind this. The number one is that the company is a quality franchise, and the second one is an emerging growth engine that they are seeing behind the company. They believe that India's payment card manufacturing market has very high entry barriers, and payment cards will remain relevant, with IoT becoming the new growth engine going forward. Investec is expecting stable margins and healthy cash flow going forward as well. Lastly, Zydus Life Science, where Delhi High Court has restrained the supply of Zydus Life Sciences cancer drug ICRA. The reason is that AbbVie has moved to Delhi High Court alleging that Zydus has infringed the patent, and the court has allowed the manufacturing of ICRA till the hearing is pending, but no supply will be given to Zydus or any other third parties until the next hearing on July 24th. So these are the three stocks that you should keep in focus for today.
All right, Par, thank you so much for getting us that list of stocks that have been buzzing in trade today. Of course, Zydus Life not doing much, just up by about 0.7%. But you know what? Earlier today, we spoke with Gautam Shah, founder of Goldilocks Global Research, who shared his outlook on the banking sector, saying it is no longer an alpha generating space. Listen to what exactly he had to say.
If you want to create alpha at the markets, banking is still not an opportunity. You know, when they go up 5-6%, we all get excited. But then in the US and in many Asian markets, you have trillion-dollar companies going up 40% in a matter of many months. So in that sense, I think Indian banking is not exciting. It will do well. It will do its high single-digit returns probably, but nothing substantial, as I said. I still like the top PSU bank. I think that's still my favorite from a longer term perspective. And the private banking will make an attempt to come back. But because of this FI angle, I don't think it'll be easy for them to really scale up to new highs.
All right. Okay. So that's one part that, if you were to generate alpha, according to him, banking is not the right space, but he's calling realty the dark horse. So that's the biggest takeaway from that particular chat. But you know what? Let's also talk about previous SpecChem, because Incred did initiate an ad rating on this particular counter today with a target price of 4796. The stock is currently trading at 3682. An uptick of 1.7% is what we're seeing on the stock. What they say is that steady growth is going to be the key driver ahead. Sticky customer base and resilient SpecChem franchise is something that augurs well for the business. Capacity expansion should sustain. Double-digit growth in fine chemistry integration is the key advantage that the company has, and backward integration, stable margins should lift FY29 EPS. Plus, healthy earnings growth supports the ad rating on the stock, and that makes them bullish on previous SpecChem, and the stock is up about 1.3%. But we talked about this counter, Nuvoco Vistas, at the start of the show. It's been gaining in trade today on the back of strong Q1 numbers, and Puneet is here with more details on what's worked for this counter and how have things fared for Q1 FY27.
Well, thank you for that. It's a good, strong set of numbers by Nuvoco Vistas in this particular quarter, which was driven by the West Asia conflict, which had an impact on the raw material prices for all cement makers. So it's been a good start for the company. Of course, they report good quarterly numbers, 5% growth also seen in volumes. The other aspect that the margins have largely remained constant around 18%. despite the cost escalations that we've seen in this particular quarter. We've seen on the fuel price hikes amongst others also having an impact on the cement makers. The third key one has been the freight and forwarding charges. Now, this is a major cost component for cement makers that has actually come down from 871 crores to 838 crores in this particular quarter, and that's basis on a quarter-on-quarter basis. So that's another big positive on margins. Capacity, additions have continued in this particular quarter. This will help them benefit from operating leverage, and the new cement plant which they inaugurated, of 2 million tons per annum in Western India will also give them additional price competitiveness as well, because the prices have been depressed in South India as well as in East India. West and North have had better margins, better EBITDA per ton, and newer capacity coming there will definitely be a big boost to the company as well. So overall, they have mentioned that the pan-India cement prices have improved quarter on quarter, so that's a big positive. And they feel that the price hikes currently taken are essential to offset the cost which have increased, so bodes well for the commentary that will follow through.
Thank you so much for getting us those details on Nuvoco Vistas. The stock trading around 8.3% higher. And, of course, it's been off from the day's high point, but has been steadily moving at that 8% mark throughout the day. Let's also talk about, earlier today, in fact, we spoke with Mark Matthews, the head of Asia Research at Julius Baer, about the escalating tensions in West Asia and their impact on countries like India, which rely heavily on external energy supplies. Here's what he had to say.
So I'm going to ask you what's happening in Korea. Is that, it's sometimes the Kospi behaves very, very erratically. It has been more so in the last few sessions and in the last few days. Is there an unwinding of AI trade that we're seeing? Is that geopolitical concerns and crude prices reflecting there? What's going on there?
I don't think it has anything to do with the oil price, although Korea obviously relies on external energy the way India does. It's very much the fact that the two big Korean chip makers, SK Hynix and Samsung Electronics, went up too much. This year, the story has been what they call the picks and shovels. And in any new technological revolution, typically what performs best in the beginning is the hardware that you need to put in place to make that technology possible. Picks and shovels, by the way, is an old term that comes from the gold rush in the Yukon days, the 19th century gold rush in North America. But anyway, what I wanted to say is that sometimes stocks get ahead of themselves. The internet is a great case in point. It was exactly the same picks and shovels story that drove up stocks like Corning and Cisco in 1999 and early 2000, but then they rolled over and they went back down, and I think it's a similar thing with Korea today. Doesn't mean we won't have any AI, just like the decline in the internet stocks in 2000 didn't mean we wouldn't get the internet. Of course, we got the internet, but it meant the stocks had become excessively valued. And so that's what's happening in Korea now.
I love that explanation and example of picks and shovels being coined during the gold rush. I'm guessing there is another oblique reference there to the madness of the gold rush and what we're seeing right now. But my question is about whether the mood is souring a bit on this entire trade. Look at a TSMC, for example, 68% up in revenues. Stock doesn't react like that, and we've seen examples of that in the past. Is this, in a sense, advantage India?
Yes, I think it is helpful to India because foreigners sold India, you can go back a long way now from when they started selling. First, it was over the trade war, and then it was because of the war in the Middle East, a real hot war, of course. And then it was to finance these semiconductor stocks in North Asia. By the way, India wasn't the only place that foreign investors took money to finance that investment. In Korea, Japan, and Taiwan, they took it out of China as well. But if this semiconductor trade is at least partially unwinding, I would think net it makes India look better.
Mark, just to that end, it's not necessarily something to celebrate, but it's a data point nonetheless. And it lends itself to what you were just talking about, the selling by foreign institutional investors and the deployment of retail money through mutual funds. Domestic institutional investors in India now own more of Indian equities than foreign institutional investors do. What does that mean for the pricing of those assets? Because in, say, 2015, if this velocity of selling were to take place or had taken place, the markets dropped significantly more than they have over the past 2 years.
Oh, yes, I agree with that. And I mean, I don't really know if it's a good thing to have a lot of foreign investors in one's own market or not. I mean, I suppose that if foreigners are in a country's stock market, that speaks well about that country's prospects relative to the rest of the world. But on the other hand, foreign money can be fickle. The Koreans are experiencing that somewhat now. But I would say in Korea's case, it's mostly foreign hedge funds and, believe it or not, foreign retail investors who were investing in highly leveraged single stock Korean ETFs listed in the United States. There's in Hong Kong, I think there's around 4 or 5 of them in Europe as well. But I'm getting off track. I think it's good that domestic institutions are becoming bigger players in the market because intuitively they should know the market better than the foreigners and be able to assign a more accurate price to all the stocks that are listed in the market. And I think it's very interesting that the mid-cap index is down a little today, but it was at a new high yesterday, despite these renewed problems in the Persian Gulf. And generally, the performance of mid-caps, I think, speaks well to India's future because foreigners don't hang out in that space very much. I think they're only about 12 or 14% of it.
All right, so that was a take from Mark Matthews as to where he finds value right now and, of course, how the West Asia conflict impacts India. But with that, completely out of time on this edition of Lunchtime Trades. But do stay tuned in. Small Cap Buzzers comes up next.
Co-powered by Suzlon, good energies that work. Superstar Stocks of the Day, presented by Tata Elxsi, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business?
Hello and welcome to NDTV Profit. My name is Varsha. Well, an upcoming IPO that we are going to discuss is Caliber Mining and Logistics. The IPO is expected to open on 17th July, will close on 21st July. Price band is set at between 402 to 424 per share. Now, just about this company, it's a contract mining and logistics company, provides comprehensive services including, coal extraction, overburden removal, coal loading and unloading, and making it a complete coal mining and logistics solution provider. But to speak more about the business model and what lies ahead, how the funds will be used, to speak more about that, we are here joined by Mr. Mohit Chadda, who is Chairman and Managing Director at company, and Nikhil Karwa, who is Chief Financial Officer at Caliber Mining and Logistics. Welcome, gentlemen. Pleasure to have you at NDTV Profit. Let me start with Mr. Chadda. Most investors, see Caliber as a mining contractor. How would you describe the company today? Is it a mining company, logistics company, or an integrated infrastructure service player? Just in a quick way, if you could describe what's your business model is like.
Yeah. So Varsha, my company Caliber Mining does overburden removal. It does coal extraction, coal logistic business. And we have also now secured a critical mineral block, which is in an exploration phase. So coming to what we do, we are the end-to-end coal participating company, wherein we give end-to-end solutions to all our customers. So right. Be it extraction of coal, be it extraction of overburden, be it transport or logistic of coal, to the railway siding, that is rake loading, and be it anything else. Caliber gives a single solution to all its customers.
Right, understood. And sir, I think out of 450 crores, 400 crores has been used for capacity expansion and the debt repayment also. Just wanted to understand your capacity expansion plans. How will the funds will be used? And also post, payment of debt, how will your debt look like?
So I'll answer that question. We have a object of debt repayment and new asset purchase, and balance will be for general corporate purpose. Out of 400, 208 will go to debt rundown. 167 is going for a new asset purchase for expansion of our fleet, and balance will be for general corporate purposes.
Okay, understood.
I will not be able to answer about the future expansion plans right now. Yeah.
Okay, and Mr. Chadha, the order book which has crossed almost 9,500 crore, what's the execution period for this order?
Approximately, it will be between 2.5 to 3.5 years. For different contracts, it will be different.
Okay, understood. You have also spoken about expanding into Odisha and Jharkhand. What opportunities are you targeting there? If you could highlight us.
Yeah, so see, in Odisha, Mahanadi Coalfield Limited is there. It is a very big subsidiary of Coal India, wherein multiple opportunities are coming in. Jharkhand is a state where Central Coalfield Limited operates. So in CCL and MCL, both the places, Caliber is eyeing a new share of addition in the coming future, which I have reported in my RHP also.
Understood. And so, of course, beyond coal, do you see iron ore or other minerals becoming meaningful growth drivers for you?
Yes, I do see. And see, everybody knows what happened in America and China tariff war. Now, India has understood the main importance of critical mineral and rare earth mineral. So, I believe any critical mineral, any rare earth mineral in India or outside, Indian government is very bullish to have them secured and start the mining as early as possible. So it's a great news for our company.
Good afternoon, you're watching Small Cap Buzzers. Now if you look at the market, it's down around 130 odd points, finding support around the 24,000 level in trade. If you look at the Nifty Bank, it's down nearly 700 points, trying to find some support close to around the 57,400 level in trade. Among the sectoral indices, other than Nifty Pharma and Nifty Metal, all the other sectoral indices are trading in red. Nifty Pharma is up around 1% while the Nifty Metal is up around 0.6. On the losing side, we have Nifty Real Estate down 2%, Nifty PSU Bank and Nifty Auto down anywhere between 1.5 to 1.7% in trade. When it comes to Nifty Small Cap Index, that's also down close to around 1%. But Varsha, quickly, which are the key stocks that are buzzing?
Well, let me start with Fino Payment. Yesterday also we saw the business update coming up, and today also the stock is up almost 13%. Strong volumes there, 24 times of its 30-day average. You have Landmark Cars also buzzing in trade, is up almost 12%. Volumes are trading at 10x of its 30-day average. Vanbury is also in focus, up almost 12%. You have Tribhuvandas, which is up almost 12%. Orient Technology is also one such company which is up almost 11%. In fact, highest level in last 2 months, biggest single day gain since December 2025. Talking about also Hinduja Global, then TRF, Hariom Pipes is also in focus, is up almost 7% in trade. Volumes are trading at 14 times of its 30-day average. But also, one stock which is in focus and which is Gandhar Oil Refinery India, to speak more about the business outlook and how the Middle East situation is going to impact this company. To speak more about that, we are joined by Ashlesh R. Parekh, who is Joint Managing Director at Gandhar Oil Refinery India. Sir, welcome at NDTV Profit. Pleasure to have you. The first question is obvious on the Middle East impact. Your Texol's Sharjah operations were impacted during the last quarter. Has the business fully normalized, or there are still bottlenecks? And also, if you could highlight us on the impact, Middle East impact on Q1 that you have been facing.
Yeah, first of all, thank you for having me, on the show. Obviously, Gandhar Oil Refinery is into manufacturing of, specialty oils and lubricants. PHPO is our main category focus product, which is personal care, healthcare, and performance oil. Texol is our subsidiary. Obviously, with the Hormuz situation in UAE, we had faced some headwinds, in the last quarter. But having said that, we have, worked on resilience in terms of alternate supply sourcing, expansion of our new products, and obviously diversification of suppliers from various other countries and sources. Having said that, Texol had grown, given a volume growth of around 6% last year, and on a console level, the company had grown over almost double digit in last year. Apart from that, the profitability of the company had increased by 65% from 24-25 to 25-26, and the volume growth was in the range of 9 to 10%. Having said that, we anticipate quarter one to be little better compared to the previous quarter. With Texol, we are anticipating the volume growth to be stable, and profitability also will be stable in this year.
Okay, so despite the Middle East issue, you're saying that the unit would report a stable profitability.
Yes.
So in Q2, when the situation is much better compared to Q1, by how much would, but then that clearly means that profitability would improve in the second quarter much more, right?
Mm-hmm.
And then for FY27, what are your targets? For the full company, not for that unit.
So the company, we are anticipating a double-digit volume growth in FY27. We are anticipating, even the quarter one, which is the results are just around the corner. We are anticipating, the numbers to be listed by end of this month, and obviously, we'll be expecting a better quarter compared to the previous quarters.
Understood. Sir, just for the clarification of viewers, so you are expecting no impact in Q1 and also expecting growth over last year. Am I right?
Yeah.
Okay, understood. Now, so going to PHPO, will this become a biggest or bigger contributor and structurally, lift group's profitability? If yes, what's the target that you are expecting the revenue growth, or rather the revenue contribution from this segment in FY27 and 28?
See, the company, since its listing in November 23, the company has been focusing on, the PHPO category. The company has been growing, in the PHPO segment. The company is focused, in getting, in inducting new customers and expanding within, its existing customer base. The company is also planning to, expand its operational efficiencies. We are also planning to have capacity expansion in our India facilities. Obviously, that will have an impact on increase on sales and revenue of the company going forward.
Understood. And so in FY26, if you see, the sales growth was around 9%, 9 odd percent, with EBITDA margin of around 6%. Going in 27, what's the revenue growth that you're targeting? I understand that you told us about the volume growth which you're targeting in double digit. But what about the revenue growth overall for 27, and will you maintain this 6% kind of margin?
See, the company is primarily focused on doing the volume growth because the revenues are, subject to the raw material pricing. So, if the volumes are increasing, then obviously the revenue is definitely going to follow the volume growth.
Okay. And also, you already export to more than 100 countries. Which geographies can become the next major growth drivers, and what are the expansion or where you are doing this expansion when it comes to the geography? Which areas are you targeting?
See, as you are aware, India is trying to do trade deals with various countries globally, including, Europe, including the US. The trade deals are around the corner. The company is still going to focus on the Asia, Americas, and the Africa as the growth target.
Okay. Sir, I was going through the BSE data, and what I can see here is that the promoters have been buying shares from the open market. Around 1,25,000 is something that at least has been reported on BSE, is what the promoters have bought. So will similar action continue in the in the open market? Is there any target that the promoter has in mind where he wants to take his shareholding from, I believe, current 66%?
See, obviously, the fundamentals, the core fundamentals of the companies are strong. So we are, very confident on the, the next level of growth which Gandhar will have for its shareholders and for the company itself. We feel, obviously the share prices are fairly valued. That's why, there has been, promoter buying activity which has been reported, on the stock exchange as and when it has been conducted.
Okay, so some more buying can come in.
Difficult to give a straightforward answer, but obviously company is fundamentally strong and will be continue support the pricing.
Okay. The South Africa expansion, I believe you have spoken about it earlier. Has the company or has the management board come to a capital commitment? What could be done here? What are you looking at? Any plans that have been developed by the board?
See, the company, obviously the group has been, putting the detailed plan to the board, in the quarter to come. Obviously, there will be much more clarity, on this specific expansion in the next few quarters.
Right. And you also indicated openness to the inorganic growth. What kind of acquisitions, would be most attractive today? Are you looking some kind of inorganic acquisition in FY 27?
See, the company is, open to inorganic acquisition if there is a right candidate. Obviously we have a good balance sheet size. There is enough reserves in the company to take care of any eventual inorganic growth. But having said that, as of now, it's nothing specific, available in type of the industry where we are in. So we are still open for that kind of inorganic growth.
Thank you, sir. Thank you for joining us and giving us the way forward for Gandhar Oil. Well, moving on to our fundamental guest, Raghavendra Kedia, founder of Prosperity Advisors. Raghavendra, you heard the management. They are expecting volume growth to continue. Not much of an impact coming in because of the Middle East issue in their foreign unit. How are you looking at this counter at current valuations?
Good afternoon, Somit. The management seems pretty upbeat, and what we like is their procurement or their production facilities are geographically spread out across India and Middle East. So there is a dilution of risk in terms of the production from the Gandhar oil. Also, the company has stated that they export to 100 plus nations. So there is also a very huge diversification in terms of their clientele and geographical presence of clients all across the world. What also comforts us regarding Gandhar oil is the company can clock in full year EPS of around 20 rupees and giving a conservative target of around 13 times on the P. We come to a target of around 260 rupees, which is around 30% upside in Gandhar oil. The company has been paying dividend regularly. The promoter has been buying stocks from the open market. The promoter holding currently stands at 66%. These are very fundamentally positive, comforting triggers for us to hold the stock for a 30% upside in the year ahead. We are upbeat on the management commentary and believe that the stock would outperform even from current levels of 200 for a 12-month horizon for a 30% upside, target 260.
Well, before we get on to the next small cap stock, let's slip into a short break.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility
Welcome back. You're watching Small Cap Buzzers. Now, let's pull up chart for Hariom Pipe. Let's see what that stock is doing. The stock is buzzing. In fact, it has seen highest volume since December 2025. But what are the key triggers for this buzz? We have Parth to give us more details on that.
Yeah, right, Varsha. So at the morning, the stock was high. The stock had gained almost 10% today, and this is the highest volume the stock has seen since December 2025, and it's also 12 times the stock's normal 20-day average. So this is a huge momentum that we are seeing in the stock right now. If we talk about the company a little bit first, then the company manufactures steel pipes and HR coils with their main focus on value-added products that contributed to almost 98% of their FY26 sales. Now, the key trigger behind today's move is that the company's Tamil Nadu plant, which was shut down on the 2nd of April by the Tamil Nadu Pollution Control Board, has now been restored and is ready to resume operations. The plant has a capacity of over 3 lakh MTPA, and the approval remains valid till the 31st of March 2027. Another interesting thing is that the company is focusing towards backward integration as well. Currently, 40% of backward integration is what they have achieved, and they are targeting to bring that up to 80%. For that, management has given a timeline of 3 to 4 months as they are waiting for an environmental clearance to proceed with this objective. This backward integration will not only improve margins for the company but also give them a good supply going forward as well. Lastly, on the FY27 outlook, the company is targeting a volume of 3.5 to 3.6 lakh tons. But they have said that they will be prioritizing profitability growth over volume growth. Also, while maintaining an EBITDA margin of 12.5%. So this is the entire outlook about Hariom Pipes, and let's see if they are able to achieve their guidance for FY27 as well.
Thank you so much, Parth, for all the details. Well, Raghavendra, any idea on Hariom Pipes and what should investors do?
So we believe the company is currently trading modestly, but with this Tamil Nadu plant, which was shut from April till yesterday onwards, so the entire Q1, April, May and June has gone. But with the restart of this plant, the company can clock very good numbers, and we expect a price target of around 460, so around 15% upside at current levels. The EPS of the company could, on a full year basis, still be 40 rupees, and a P multiple of 12. Modestly gives a price range of 460 to 480. So Hariom Pipes, with this positive start of Tamil Nadu plant and the new government in Tamil Nadu, we believe that the environmental clearance and approvals would also be easily or more with less difficulty be approved in the days ahead. So Hariom Pipes is a good trading buy for a 10 to 15% upside from current levels for a 6-month to 9-month investment horizon.
Okay. Well, thank you, Raghavendra. Thank you for joining us and giving us your perspectives on the stocks that we discussed on this show today. Well, moving on to our next counter, that is Orient Tech. Now, the stock is up nearly 10% in trade. What could be the potential reason behind this kind of an up move in the counter? Let's get in Jasmeet to understand more.
Well, Samit, thank you for that. If you look at Orient Tech as a company, it's quite interesting. It's not like the regular IT companies like TCS, Infosys, nor it's like an infra company. It's a combination of AI and IT infrastructure along with IT services. Now, what does the company do is the company provides IT infrastructure solutions alongside its cloud and other IT-led services, and company serves across the industries including BFSI, healthcare, telecom and mid-market segment as well. Now in terms of the overall stock performance, as rightly said, the stock is about 11% in today's trade, but if you look at the stock over last 1 month, it's up 9%, which shows the majority of the gains are coming in from today's trade, and it has been flattish over last 1 month. While over last 6 months, the stock is down 23% and over last 1 year, the stock is down about 8%. Now when you look at the Q4 numbers of this particular counter, the revenue shows a degrowth on QOQ basis. The overall quarter for the March saw degrowth of roughly 8% at rupees 184 crore revenue versus 200 crore revenue in the previous quarter. Now in terms of the overall net profit, though it's a loss for the company, but the losses have reduced from the Q4 to Q1, from the Q3 to Q4. The Q3 over the losses stood at roughly 14 odd crores, while in the Q4 we saw the losses were about 4.98 odd crores. So we see the break-even point for the company coming soon in the future, given they're reducing the losses over a few quarters. Now in terms of industry, company provides services to wide range of industry, and they have broad-based service portfolio. Now, first one is BFSI, countering 20-odd%. Telecom includes 13-odd%, while the mid-market segment like healthcare and life sciences, that would include roughly 28-odd%. Now, in terms of shareholding pattern, while what interesting aspect I found in the shareholding pattern is that overall promoters have been reducing the stake in the company, and over the last 1 year they have reduced the stakes from earlier 72% to 70-odd% in this particular quarter, while even the FIs have sold their stake from earlier 1.45% to the current 0.03%, while on the other hand public is buying the stake in the company from earlier 25%, have increased the stake to 29.3-odd%.
All right. Well, thank you so much, Jasmeet, for all the details. Well, moving on the sidelines of Bharat Tex 2026, India's largest global textile trade fair, my colleague Rishabh Bhatnagar caught up with Sameer Joshipura, who is Group CEO at Trident Group, in an exclusive conversation. Do listen in.
We're here at Bharat Tex, lots of action happening. Talk to us about how Trident Group is faring when it comes to exports versus the domestic growth that you're seeing. A lot of export, a lot of international interest also that buyers are receiving. Talk to us about what Trident Group is seeing now.
Yeah, so as far as Bharat Tex is concerned, we are seeing both, tremendous amalgamation of international buyers as well as domestic distributors who are interested in this. From Trident point of view, exports has been the pillar on which entire business has been set up. So that is going to be our very strong focus going forward. Having said that, the future growth is going to come out of domestic India business. India is growing very fast. Our growth numbers are, huge. Having said that, exports is also seeing a lot of tractions. So both are going to grow. Exports is going to consolidate, and the growth is going to come from our domestic business.
Mr. Joshipura, you talk about exports. Any specific geographies that you have in mind, given the mind that we have a lot of FTAs that are going to kick in over the next year or so? Talk to us about that.
Yeah, so obviously US has been the one which has been the strong export hub for all of us, including Trident. But having said that, now with our competitive advantage in Europe, which is just being signed, UK, which is done, Australia and UAE. So we are talking about diversification. We are setting up our offices there and trying to focus strongly. Having said that, US is still going to be, with all the uncertainties, is going to be our strong area where we are going to remain a very good, we are going to get very good.
Well, with that, it's time to wrap this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Now SEBI came out with BRSR.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. And of course, this is the afternoon edition of the show. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and tell you everything on your stock-related queries that you need to know about. But as you go across to the market today, right, it has been a day that started off under pressure led by global factors, and unfortunately, unlike yesterday, we haven't seen any kind of recovery today. So if you pull up the heat map for the Nifty 50 also, the individual stock related individual movers actually today continue to be on the lower end is IT, where it's getting impacted because of HCL Tech. You're also seeing Shriram Finance, HDFC Life also being the top losers for the Nifty 50. So currently the breadth also for the Nifty 50, only about 35 stocks that are declining in trade, 15 gaining, but largely a red screen on your screen right now. In terms of the sectoral heat map also, now you have seen that the Nifty IT continuing to be under pressure. When you pull up the sectoral heat map also, you're seeing that across the board. So pull up the Nifty IT, of course, down 0.89%. Sectoral heat map is what I'm talking about. Let's pull that up very quickly across the board. And you're seeing some Nifty Pharma, Healthcare, Metals, so the defensive and cyclical pack doing well. The Realty, PSU Bank, as well as Auto has actually sold off. And you're seeing, of course, HCL Tech being down, but that's not dragging the whole Nifty IT completely in the drenches today. So that continues to be down, but not as much as what we are seeing on some of the other sectors. The advanced decline ratio also points out to that breadth that we've been speaking about. It's been a crisscross pattern on the advanced decline, and that's visible as well on your screen right now. But overall, yesterday was a crisscross pattern. Today, a clear deficiency in terms of the advances today as well. Just about a sub 700 odd. And the BSC 500 also for individual movers, that continues to be on the radar as well. You're seeing an impact on Thermax, Aegis Logistics, as well as on Spark, but Jindal continues its positive momentum, and so does Nuvoco Vistas as well. Biocon, despite the big block deal, is still up about 6.8% right now. Concor as well as the Rani Power are some of the other ones. Also pull up Landmark Car. See actually the landmark move on that stock today, because it came out with its Q1 update just about 5-10 minutes ago, and see that sharp uptake on your screen right now. Highest ever quarterly sales is what the company has said. And the overall revenues as well as up almost 20% in this particular quarter. New sales up 24%. So it's been a very strong show for the company in this particular quarter. But we'll of course wait for the results for more details on the margins. But let me welcome in our guest for your stock related queries today. Rajesh Agarwal, Head of Research at Om Capital, as well as Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sher Khan. Gentlemen, both of you, thanks so much for joining in today. And let me start off with a question actually from Ram Iyer, who's asking us on the technical name. So Persistent, Coforge or TCS, he wants to enter for the next 1 to 3 years. Rajesh, very good afternoon. Of course, welcome back. I know last week you had your first show back on NDTV Profit, but wasn't part then. But welcome back. Good to have you back. What's your view on either of these names between TCS, Coforge, as well as Persistent? Anything that you like?
Thank you, Puneet. Good afternoon to you and Kunal too. Really exciting being back. And as far as IT is concerned, I think now the time has come when one